All right, my traders, what's up, guys? Good morning. Get your pens, get your papers, get your coffee, get your tea, get your water, whatever it is that you need. Let's get this morning started. Just want to say, today's going to be a volatile day, and keep your emotions at the door. Stay focused. Know your levels. Watch them hit them, hold them, reject them, and have the next move already in sight. What's up, guys? I'm Justin. Hit that like button for me, subscribe. Our goal today is going to be 20 subs and 40 likes. I'm tired of this bullshit. I know we can get there. Let's get right to it, guys. So, first things first. We can bring up the overall indexes, but see, I knew it. So I got short, as some of you guys may or may not know. So you guys may not have been here. I don't know, but I got short the Qs on Monday. All right, so came in Tuesday, took profits, and then yesterday I actually had a really nice trade here with AI. Nobody was really watching this, and I was just scanning around, and I knew with people not watching it that, you know, there wasn't going to be much liquidity there. But all in all, this consolidation, and I'm just going to give it to you guys right now, 42 is going to be the watch. 42 is going to be the watch. So I'm not really anticipating a rejection up there at 42.50 or 43, but 42 is going to be the watch. 42 is going to be that watch. So yesterday, I took this rejection up here at 43.50. And this was actually a really nice move. I think, what was it, 94 cents with a 108 and 115 exit. Let me see here. See, I have so many limit orders. Well, I did keep canceling them too. 92 cents, guys. That was actually a 92 cents. I got in that yesterday at 92 cents. And I took two pieces off there because, again, this is a consolidation, right? This is a breakout, and you're consolidating above prior day's highs. And what I noticed is that it could not hold 43. We just could not hold 43. So we get up there, and then it just doesn't want to hold, in my opinion. But again, it's a nice consolidation. It got back up there, kind of like GameStop. For anybody that's been watching GameStop, you guys will notice that it ended up reverting back to that area. And you can see here, 43. See, my stuff is frozen already. So keep AI on the watch. You can see every time it gets above Friday's or Monday's high, it just cannot hold it for whatever reason. And this is a nice little ascending wedge here. Boom, boom. So that is a reversal pattern in and of itself, kinda. But she's not reversing. So again, everything, like, we need to remember, no pattern setup is bulletproof. It's going to be 100%. So, but again, this is failing to hold up here. You can see at the end of the day yesterday, and I literally almost got long as well, and I didn't because it was not holding. And we broke VWAP and we broke trade line. So that was the trade yesterday, but you do have this 45 zone up here, which I would consider the resistance zone. So keep this one on watch, guys. This is a nice little trade idea for you. I've already traded it. I've already made some money. You need to learn. If you're a person who's going to market order, do not trade this. If you're a beginner trader and you cannot move, if you cannot set limit orders within the spread to get filled, and know the volatility of this stock, if you buy the wrong option, listen, you can get your ass destroyed. So yesterday I was in the 42 puts. I was in the 42 puts yesterday, and I could have swore I was even closer. But so I was 50 cents out of the money. All right, so I was pretty close to being, it didn't take much for me. If you're going to trade this, make sure you buy the correct option. If you don't know what that is, just ask in the chat. All right, let's get right into it. So what do we have going on today? I did not post a stream on Twitter, so we probably won't get any views. And I know a lot of other traders are, you know, doing pre-market prep and stuff. So, but it's all good. I hope everybody's doing well. I hope everything is going good for you. If you're frustrated, if you know, let the markets come to you. Remember that. If you're having a bad day or you just seem to can't put something together, I'm just checking out Bitcoin real quick here, seeing where she's at. So we are getting a little bit of a pullback up here at 108, trying to hold this previous high at 104. So let's keep Bitcoin and MSTR on watch. I'm just checking in on that. I'm checking in real quick. I can do it with you guys. Let's look and see where the 10s are. All right, 10s. Listen, what I posted this on Twitter on someone else's, but I was waiting for this pullback to put in another either lower high or higher high, because I thought the 10s were going to, where was it? I want to say up here at like 4.8. You can quote me on it right now for anybody that's here. 4.8 is where I expected like a higher high on the 10s. So I wonder if that's going to happen today. And that was going to be my entry for TLT. All right, that was going to be my entry. But at the time, we were already, you know, just overextended. Look at TLT here, possibly putting in a double bottom. Nice thrust move there. All right, but again, look at the sell side volume here. Still very heavy. You know, it's not as heavy as the buy side down in this zone, but look at this. We're gapping below. Look at this. TLT is gapping down. So this is gonna start to put some weight on the overall markets. All right, 30s 4.81. So this is what I'm expecting. And look, you can already see the 30-year getting ready to make a new high. Okay, I've talked about this for a while. We were long the dollar back in September. All right, so check mic. Let's get right into it. So let's see, Bitcoin. Let me put that up real quick. Let me move this out of the way. Let's make sure that we don't have any other data that I need to know about. I could actually just drag it from the bottom, but let's see here. So we have building permits, housing starts, all that fun stuff. I want to just get into what the hell's going on today. FOMC projections too. Okay, we know that. All right, let's go to all right. Sorry, I meant to turn my mic off after I did that. So General Mills, the maker of consumer food products such as Cheerios, Cocoa Puffs, sank 5%. So they're guiding down. Did you guys see yesterday, or even in the beginning of the week, people talking about or seeing it for yourself, these value stocks trending lower? Here's a value stock that has been doing really well. It's been doing really good. You know, if you own this name, man, I got to get that new chair set up. If you've owned this name, it's I forget what the ticker is for this. Let me look real quick. Guys, again, hit that like button for me. Giz. That's what I thought. I knew it was something weird. I didn't think it was that weird. Damn. All right. So GIS. That's our first one we can look at real quick. We're going to go into semiconductors and all that stuff. NVIDIA. I almost got short NVIDIA, but I was just a little too A little too slow on that entry. Okay, so this thing has already been down at the bottom, guys. Guess what? I'm actually more than likely going to be buying this. Okay, not right off the bat. Where are we at right now? So 63. So we're almost right back down here at these lows. So we could not get through. So look at this resistance up here. Okay, nice resistance. You can see it tried to hold it. Tried to hold it, couldn't hold it. So let's look for bounce backs into that zone. I doubt you're going to get it, though. The way this thing moves, this thing barely moves. So, I would say your next area, even, I would even say down at $60, you guys. I think $60 has got to be a buy zone. Down into that 58, 59. So we'll see what happens here. I'm sure there's other people that are going to be gobbling this up. I'm going to be honest, I don't really eat cereal that much. I hardly eat cereal. I mean, sometimes I do, but I just... So I can see why they're struggling. You having more and more people wanting to eat healthier. And look at that. So you got 62 holding these previous lows. You got these previous lows. This level is holding, so you could look for a bounce back. So 65 zone... you know what? Let's call it 64. I might be giving it too much here. I'm actually gonna just stop looking at this. The levels for this though: 63, 64, and 65. Right here. Okay. Right there, 60, 64, 63, which are getting back above. You hold 63, you could look for a move to 64, and then 65, which is that previous area. So that's a nice area down there to be buys. You see, and people are taking advantage of this for the long-term outlook. Okay. All right. I don't know. And how was their earnings? I'm not going to worry about their earnings because I want to get into trades here. I'm trying not to, I'm trying to do for myself as much as with getting my trades together here today. Because sometimes, again, like streaming can get difficult between separating yourself and like, because I notice when I don't stream, I'm like, I don't have anything else to sidetrack me from trading. And I have ADHD horribly. I should be taking medication for it. That's how bad it is. But anyway, so NVIDIA shares rose nearly 3% after four straight losing sessions. The chip maker entered correction territory after falling 10%. So yesterday, if you guys noticed that 28 zone, and I want to show you guys something that I saw that I was a little after I missed the short on this. After I missed the short, okay, I wanted to go long so bad. So here's a daily chart. This is a nice hold, kinda. To me, this daily chart, in my opinion, looks like it's, it broke it and it bounced back into this rejection zone at 130.50. But look at the 4 hour. Check this 4 hour chart out here. So, look at the 4 hour time frame there, and then the tail down here literally just held. It was like this zone right here. I know you guys probably can't really see what I'm talking about, but right here, this support zone, 127.65, it was like, and this resistance and that support zone, this 4 hour chart, you quickly broke it, but you regained it. And then it just, when it would test it, it was just like pulling into it, pulling into it, pulling into it. 128 was holding all day long yesterday. I'm like, man, this is it. This isn't necessarily the capitulation, but this is more than likely the time to get, to do something with NVIDIA. And at the end of the day yesterday with the overall markets, that last sell-off going into after hours, I almost got long. I almost got long the last 15, at like 405, 408, and I said, let me not give back anything making wild guesses. But down at that support zone, you saw people in the overall markets buy, turn into buyers. So NVIDIA. So this is the question here. This is going to be the question. Can we hold 134, 135? 135 is what we're going to put this at. 135, really 135 to 136. All right, 135, 136. 135, 136. I would say our resistance zone is way up there at 140. Okay, 140. If we start making headway to the upside, I will target 140 if we, and I would go, like, today could be the day. This thing could be the day. Go 2 weeks out with this. You got to regain 136, but 135 could be the starter. Okay, but I'd anticipate a pullback back down into like 132. We're going to get some price discovery in here, trade in this area for a little bit on NVIDIA, and then slowly, maybe the end of the day with Fed Day. But again, listen, if rates continue to climb, you could have just saw this being a day where buyers just stepped in and took advantage and just put a little bit of money to work, So clear head and shoulders on NVIDIA. Here, you guys can't really see this. So with that said, hold on 1 second here. Can you guys see this screen at the top left? Let me know in the chat, please, if you can. Sorry about that. Give me 1 second here. Guys, hit that like button for me. Subscribe if you haven't already done so. So a nice trade idea here would be, in my opinion, the 135 rejection if you get that test of 135. But if we end up just dropping off here on NVIDIA, I think you have to look for that low 130 zone to look for a buy and look to see if you can take that back into, like, this could be a really nice move down here. I want to say that we can get down to, see, this is a double top there. See, that's after hours. This is such a weird zone down here. Let me see something, guys. Give me 1 second. I just want to make sure what it is that I'm doing here. So this is, excuse me. So this is, okay, so that's why I did that, I think. Hold on here. Okay, so I shouldn't more so worry about that as I should. Okay, yeah, so this was your previous support. So that's why the top of the box is here up at 130, 132, is because this is your neckline. All right. Well, I wouldn't really consider it your neckline, but it kind of is. And if we look at this, look, you can draw this on an angle, right? Look at that. Here, let me go over to the charts. Let's pull up a 4-hour chart here. And look at the angle that you have here with this. It fits to a damn T. Like, you gotta, like, you can't, I can't not unsee that now. I can't not unsee that. Yeah, I'm gonna start it from here. Man, I see that's the after hours. This is where it gets. Just trying to figure out where I drew that from. Yeah, I did not draw it from there. I drew it from here. Bring it in a little bit. So right here. Look at that. See, it looked better on the other screen. I don't understand. Hold up. Where did we start it from? And why is that an active trader? I don't have logarithmic on or anything. Unless I didn't start from there. Oh, that's why. Because you have that down move. I see. So you have this sharp down move right here to go into the left shoulder. And this is your support resistance zone. I don't know. I don't know where I had it. But I definitely can't unsee that now. Yeah, whatever. All right. So support. Watch this zone up here. 135, 136. Be a nice area for pullbacks. I know I'm flipping back and forth with the screen. I know it's probably making some of you guys frustrated. Just give me 1 second here. So yeah, pullbacks are going to be off of this 135, 136 zone, that pre-market high, 135. I think we got to target 132. That's if we can get a pullback. If the markets are going to continue to remain relatively strong, or look like they want to give us some upside, then I wouldn't expect NVIDIA to pull back. See, that's too dark. I like that. Let me see what that looks like. And again, if you guys have any tickers, don't be shy. Throw them in the chat, and we'll get through them. All right, so there we go. So 135, 136, previous support areas. See if you reject. This is setting up pretty nicely here. Okay, target for me is going to be 132. All right, that's your level that has been level of support. You can see just right here to the left. I'm looking at the top left screen. 132 is going to be my target. Okay, anything past that, cool. But again, watch what the overall markets are doing. You saw what happens up here at 608 on the SPY. 607, 608. We get up into that zone. We reject. So if NVIDIA pulls back a little bit here, or we start to bounce, all right, and I'm still not ruling out 136 either. Again, this is the zone, 136 to 135. It's about $1 wide. All right. And that pullback is to see if we're going to put in a lower high. Okay. All right. So the SPY, you have some, more than likely have. See, it's having trouble up here. Once we started getting some time here, you can see the SPY is now starting to struggle at 606. not 608, then 607. Now struggling at 606. Perfect rejection yesterday on the Qs too. Up there at that pre-market support zone at 537.50. That was my mark, and we hit it yesterday, and I missed it because I was watching AI. But we went right up into that area, bang. Just rejected right off of it. All right. All right, so that's NVIDIA. I'm going to write that down real quick. That is NVIDIA. That is NVIDIA. All right. 135, 136 rejections. Get your pens, get your papers, get your tea, get your coffee, get your water, whatever it is that you need, and start writing this stuff down. Get your game plan going. Let's go, guys. SEDG yesterday was a nice, I'm glad I stayed away from that for a few different reasons. Let me actually move all these boxes over. I'm going to start over here on my pad on the top right. So FOMC. That's what we're going to label today's trade idea pad on NVDA. So see, why does this? Oh, that's because I see. I know why. All right. So NVIDIA 135, 136. Rejection. I'm not saying it's going to reject, but if it does, 132 target. All right, I can't use that side of the pad because there's not enough room. I got to write smaller. All right. Okay, so that's NVIDIA, you guys. I gave you guys AI already. 42. I'm watching $42 on this. All right, 42. If we pull back on the bell, if we pull right in off the bell, if we pull right in off... 1 second, guys. Sorry about that. And we hold 42. Give me 1 second here. All right. And again, I did not post this on Twitter, so there may not be any views. All right, so $42 here. You saw this breakout consolidation. We can go to the daily chart. Now, here's why I want you guys to see the daily chart in this resistance zone up here. Okay? So, you know, like again, I think this is going to, if you don't own this, I'm not telling you to, but I personally want to start buying more in a pullback. And there was another stock yesterday that I forgot to write down that looked ripe for a some buying. That had room for more upside. I think it might have been JetBlue actually. I think, or American Airlines. I think it was American Airlines. So you guys can see here. Let me move this over so we can. There we go. See, this thing is weird because it's stuck to the left. You have the support here at $49.50. Obviously, we're not there yet, but look at this resistance here, okay, on AI. You're coming into a massive zone of resistance up here at $44 to $45. It's this whole zone up here, okay, this whole zone. And again, if you're a novice trader or new or don't know how to limit order, I'm going to tell you right now, if you market order into this, and even if you make money, you're going and market order out, you're not going to hardly make any money, okay, if you do this wrong. All right. I mean, listen, if this breaks 42, we have a few dollars. You're going to at least get whatever the options. Let's say you buy the 42 and you end up at 40, you're $2 in the money. You can't take that away from you. Okay, but what you pay for it and when you pay for it and how you pay for it is really important. I'm just going to say that because a lot of people aren't watching this right now. And I saw this yesterday. So it's still a really nice setup. All right. So we know we have resistance up here at $45 to $44. Okay, we're going to call it 45. I'm watching both ways on this for a few reasons. All right, I'm not ruling out the long. I'm also not ruling out the short. So we pull back and hold $42 once again. Okay, we pull off the bell, whatever it is, and the markets are still, the Qs, aren't selling off, and we hold 42. I will get long this, and I'm going to target 44 and 45, and that's going to give us a nice home run trade. I took 20 cents off of this yesterday. I'm telling you. I took a 25, maybe 50-cent move. It's like 35 cents. And I got in at 92 cents with an exit of, what was it, like 108 and 115. All right, there's your 20% off a 25-cent move. Okay, again, I got in it by limit ordering. I thought I got in at 94 cents, but I just went back to the orders and looked, it was 92. All right. So make sure you have level 2 up for your options to kind of get an idea of what's going on. So I'm watching 42. If 42 holds again, then I'm going to look for a breakout because this is your consolidation. You break out and you're consolidating above this level here. And what I need to have is, I have the 15-minute chart up now, but it just doesn't look right to me. The problem is this zone up here at 43, it just cannot hold. You tried it numerous times yesterday. So if we pull back once again and 42 holds again, okay, which I assume it's going to, I'm going to look for a breakthrough 43, and I'm going to start taking profits in front of 44, 45. Okay, this whole area right here, I'm going to give it to you right now, right before 45. This is the move I'm looking for right here. Boom. Okay, and if we break and it looks like we cannot hold, or if 43, the other side to this trade is if 43, once again, we get back above it, try to hold it, and it fails, I'm locking in the short and I'm holding on to it because I already have some insurance in my pocket from yesterday. Okay, if we get back above here and you see this thing try to pull in, and it tries to bounce, and that bounce does not extend and continue, but fails, I'm in it. Bang, give it to me. I'm taking this thing back to $40. All right, again, so keep an eye on the overall markets. I'm watching both sides of this trade. I don't have a particular capitulation in one area. I am thinking that yesterday still was, in hindsight, a breakout consolidation holding above, these highs here. It's holding this area, so we got to take it for what it is. See, this thing is not. So yeah, so that's that. All right, that's AI. All right, now I already have this. Now I don't even have to write this down because I traded it yesterday. Outside NVDA and AI, I did not. We're the only two really that I tried to trade NVIDIA yesterday, short and long. I couldn't get the to get long NVIDIA off of 128 and then the short because I felt like I was fighting the trend, and the 128s, as soon as I tried to get into them, NVIDIA just fell out of bed. And I'm like, shit. And those options were up like 40, 35, 40%. And I'm like, okay, I guess I'm going to have to wait. Okay, so that's that, guys. All right. Once again, you can see we're rejecting 43 again. All right. Let's make sure that there's no news. So, wage theft allegations target 13.8 billion tech company scale AI. Huh? Maintains a hold, raises the price target to 40. So, they're raising price targets to 40, and that's where we're looking to get short to. So, keep an eye on all these. So, that was the 13th, so there's no real news with this thing. All right. And if you guys have tickers, please post them in the chat. Middle finger, anything. Give me something. Help the stream out, guys. All right. Let me see here. So what do we have next? Taiwan Semiconductor. That's a nice setup. We can look at that. Just give me 1 second here. I need to get
Well, that's what I was going to ask. Do you take at their word, for example, Sam Altman has publicly said he doesn't believe that, the relationship, the closeness, for example, that Elon Musk has with the president-elect is going to impact his business, or Jeff Bezos has made similar comments, or do you think that there is a concern and worry? The Wall Street Journal had a big story.
Hawk Networks. I thought it was Hawk 2.
Came out.
Let's see here.
That they were not concerned, but there's obviously lots of speculation in the valley, and I'm curious what you know.
Just looking at my scanner real quick. I'm going to bring it over to you guys. And I'm getting... What time is it? It's 8:51. I got to hurry up. Let me refresh this. NUKK TIVA, VSTE. So we have AI, NVIDIA, AI. I'm going to look at MSTR and Coinbase. If you guys have tickers, again, throw them in the chat if you guys have any questions. I'm just trying to get something going here real quick. What else do we have? So we talked about NVIDIA, General Mills. We talked about General Mills. That thing gets back down to 60. That has such a weird ticker. So Merck shares out at 1% on the news that the pharmaceutical company has signed a $2 billion deal to develop manufacture commercialization China-based Hansoh pharmaceutical obesity drug. Merck will pay $112 million for the rights. Okay, so let's go take a look at Merck real quick. This Ozempic stuff is, what is it, MRK, I think it is. Okay, so that's a small bounce there. Let's look at this daily chart real quick. Give us a nice view of this. Where are we trading? So this thing isn't even really doing anything. 197. Talking about 101, 105, 100. So this is your zone here on Merck. Pharmaceuticals. Alright. 100, 102. So that's what I would target is 105. Oh, what the hell? I would target 105. I would target this area right. See, I shouldn't pay attention too much to the opening price. Yeah, 105, guys. So that's the zone I'd be watching. This might, I mean, this doesn't look good. But I'll say this, another stock. If we start getting down into this zone down here at $89, $90, guys, I'm going to be buying them. I'm going to be buying them because rates are going to start to pull back. This thing has gotten hit. Look at this. This has been a really nice short. And if we fail and this thing starts to sell off, target 95. There's your three levels for Merck. You also have the 50-day moving average. All right, where you at? 101, 09. So you're still below the 20-day here. This thing doesn't look like it's trading very much, even with news. It is a really nice double bottom, man. Like seriously, that is a nice little double bottom. Maybe it's got to finish itself out at 94, 95. But all right, enough with that. Let's go look at TSM. TSM yesterday had a really nice pattern. Let's see, Merck, Heiko, Ollie's, Birkenstock. Okay, so Rivian. So Nissan Honda merger. They're still talking about that this morning. Let's look at Rivian. Let's look at Rivian. Let's get rid of all of these levels here. Some of these solar names were moving too, guys. So keep an eye on some of your. Keep an eye on your solar names. I think this is it. Even just on a 4 hour right there. Pullbacks into 14, 1430, that 14, the low 14s, and look for a bounce back. Maybe another rejection into 15. Let's look at the daily chart real quick. But let's read the news first. So, Rivian shares slumped 0.9% after bear downgrade electrical vehicle startup from neutral to neutral from outperform. That always gets me. To neutral from outperform. Citing few catalysts in 2025 and lower EV sales expected. Yes, you should expect lower EV sales, especially if a lot of these government employees are going to lose their job, which is a shame. I think they need to keep them. Okay, I think we need to keep everybody working. That's my view. All right, I personally want to get a. I'd like to be able to get a job at the Treasury Department, and kind of currently on the way of getting that into works now. All right, so Rivian. First things first. See, they're talking about Burkis. Like a lot of the stocks that they're talking about today are, if you're an options trader, they're not that liquid. You can trade the stock itself, which we will look at them because, like, Birkenstock is up 7% right now. Be a nice stock to buy. Just getting in on this run. Okay, so Rivian. So you have this zone right here where you have previous support. Let me pull this back just a little bit. All right. Like that area right there. See, I don't know. Hold on 1 second. See, I would look at 15 as an area of support, okay? And it looks like it's failing to hold it. Unless you got to hit the trade line. It's a nice little bull flag here. It's breaking out. You're getting not a downgrade, but you're getting a underperform. I would put the same thing on it. I just, sure, there's some people that like them, but there's a lot more people that don't, in my opinion, and most people can't afford them. I'm not going to say most, but I'm going to say maybe nearly half, if not 60% of people can't afford them. If they're still selling at 80, 90,000 a clip. All right, most people aren't even going to make that. They don't even make that in their yearly salary, depending on where you live. Okay, so moves back into 15. I would watch 15. That's what I would do. I would watch 15 for another possible rejection. Let's go here. Boom. Let's go here. Boom. Boom. So yeah, moves back into 15. You get a 15 rejection. That's what I'm targeting. I'm targeting 15, you guys. That's going to be the level for me. What time is it? It is 8:59. Awesome. So we're making okay time. Yeah, support. This area is so weird because it is resistance too. So we're back into this zone. Top end of the zone, 15. The bottom end of the zone is 13. It's a $2 wide zone. Top left. Look at the SPY. SPY selling off. Look at this. What the fuck? What just happened, you guys? What just happened? Hold on 1 second. We didn't get any data or something, did we? Oh, they started it at 8.25. Okay, this is why I was leery about getting long yesterday, and I didn't want to give back any money because it would have been a stupid long. Okay, so since the data came out, okay, building permits, current account, damn, minus 310, expected 284. Sorry, I was just looking to see why we were doing this. Which, I mean, you had to seen it coming after the Dow and IWM and have been pulling back themselves. Okay, so SPY pulling it back into an area of support. It's going to be a matter of time before that support doesn't hold. Okay, support's down here at 602. 602. All right, that's the area I'm watching. 602, and also any wicks down into 600. 600 to 598. All right, this is really the meat and potatoes of a break and retest long right there. Boom. You want to get down into that 600 mark. Okay. All right. 602, 600. Let's see. All right. Since you guys aren't posting any tickers, let's go look at MSTR. Look at Bitcoin real quick. Again, I told you guys, these yields rising like they are going to start to put that pressure is going to be starting to get put on these on the equity markets. So Rivian, I think I already discussed this with you guys, but bounces into 15 rejections. That's what I'm looking for. Prior day's low 1475 to 15. And this stock is a goofy one, man. I'm telling you, because this thing. So lately, the ATR on this. Let me make sure. So we're way above all the other moving averages. So our 20-day moving average is down there at 13. All right. So that's the zones I'm going to watch, okay? I'm specifically going to watch 14 and 13. Rivian, let me write this down. If we get a 15 rejection, I'm not, So there's our 20-day. You can see moving up into 13. Now, look how far extended we are away from that trade line. Your trade line's at 14. Okay? So, depending on where we open up at, let's look for a bounce. Yesterday's close is at 1469. See, look, why is so the 4 hours different than the daily? I guess that's so weird. Look, it's getting ready to. It's gonna break it right now. Let's look for a pop. Let's see if we can get a bounce again down here, guys. Look for a bounce at 1440 and see if we can get short. If that bounce back takes us back to pre-market highs, prior day's low, or just anywhere up there at 15. I'm going to be patient with Rivian because Rivian can be a little DICK. All right, it really can be. If you don't know what you're doing or really, really know these levels, like this level right here, this is where I want to see us hold support at. Okay, for a bounce, like for the bounce to come in, you do also have a wedge being formed here. Okay, right there. So what happened? What's it going to do? It's your move, Rivian. Like I said, they're going to sell it off now before the market. Yep. Look, they're going to get ahead of this thing. That's so funny. Let's see what happens. So I want to look for bounces off of this zone here and get short. All right. That's Rivian. That's the target I'm looking for. It would be nice if we could get like a 1550, but then you get back above 15. So keep the daily chart on mind. All right, keep your daily chart in mind. Just knowing that that 15 level is support. You're making it, as of right now, resistance. You cannot get above it and hold it. That's what's happening. All right, support, support, nice double bottom. You gapped up, pulled back, ripped. See how it just kind of didn't care about the level, but then it goes back to what? Caring about it, resistance. So again, we're going to see here, continue to make it resistance. We're extended, not just for the sake of being extended. We also don't have much sell side volume either. So is today the day? We're going to find out. So outside of that, and again, there's not really any news. All right, that's just a a Baird downgrade. Okay, a downgrade from Baird. It's not even a downgrade. It's just a a neutral to, from outperform to neutral. It was an outperformer. They had it. Now it's just neutral. So they're just, it's like, it's a hold. All right. Again, guys, hit the like button for me. Subscribe if you haven't already done so. Our goal today, I'm going to lower it. But we can do it. Let's get these likes up. All right, so that's Rivian. Let's go to MSTR real quick for the market opens up. We don't need to go crazy with ourselves. So one more look real quick at Bitcoin. Okay, one more look at Bitcoin. We know the Qs have been really strong. If anybody's wondering, I think the real pullback is going to be down here at 530, like 530 to 528. Okay, 530, 528 if the markets really start to pull back. On the Qs, that is, because that's what's in the box. All right. Let me widen this out a little bit here. 532, 530, 528. Okay. This is even a bigger level here at 526. That 526 zone. So I take that back. I take that back. All depends on what time frame. So BTC USD. Let's take a look at BTC USD. I cannot say Bitcoin without saying BTC USD for some reason. All right, 4-hour chart. We were looking at 116, 118, and possibly even 120. Right now, you're just pulling back, holding. Well, I don't know. Look at the volume that is starting to come in here. You got your first taste of large sell-side volume. Let's look at the daily chart. It's already starting to creep up higher and higher. This thing is about to start to... You can see it going parabolic, straight up. That straight up move, boom. You know, it doesn't have to sell off in a big way, like a lot, but you can just see it. Once these things go straight up, they just fall. It's like gravity hits them. They just get launched into the air and then fall. It's kind of a way to look at it. So, 4-hour. Let's go to an hourly chart real quick. And then... I mean, I can look at it on Thinkorswim as well. All right, so Bitcoin. 106. Let's target 106 to 108. 106 to 108. I want to see a rejection up here, but if we have to get it at 108, that's fine too. And I'm gonna target. I want to target this zone right here because you haven't really tested it. Okay, 102. 102 to 101. 102, 101. Okay, I'm not sure what happened there. Not sure what happened. Wait. I guess I was just hitting the levels. Yeah, let's look for a pullback into this zone, though, guys. You have this previous pivot high, resistance. Watch if 102 gets broken. All right? That's Bitcoin. I'm sorry. I apologize. What is this? 102.50? I'm sorry that I don't have these correct. I know you're saying one thing and doing another. Yeah. This is what I'm watching for. This zone right here. All right? Keep an eye on that 102. I'm going to keep it at 102. All right. Yesterday, you found support, and that support has now broken. So bounce back's in the 106. 106 to 108. And I say that because, sure, this was your previous resistance and support zone, but the sellers are really up here. They started selling this thing off up at 108. So if this thing climbs, you could just get like a double top up here at 108. I don't know. To me, look at the hour RSI. Like, sure, that's a lot of strength on that sell side, but you've also opened yourself up for a continuation higher. You know, sure, the 4 hours in a downtrend, that's just using the RSI. We could throw the MACD with it, stochastics, whatever. Throw your indicators together. Where are your moving averages? You guys can paint these moves out. So it's looking like, yes, look at this 15-minute chart. Look at this downside move here. It's in a down. You went up when? That's hilarious. So it sold off. That bounce back. Look at that small little bounce back there and what it did. So this pullback. Now, here's what I'm looking at. This 15-minute chart, this pullback to hold at 103, or I'm sorry, 103.98, 104. And then look for this RSI to be down here. And what's that do? That's going to, let's look for the bounce. Look for the bounce, right? Which is going to take us into 106. Then we flip to where? Look at the hourly chart. It's down here. You get that lower high put in. Pull it back, right? I don't know if you guys can see this, right? See this lower high? Pull it back. That 15-minute chart's going to pull this back down here. Boom. We have room higher, so we're climbing that pullback. Let's see if we can hold this zone. 104. All right, I want you guys to get better at being able to read the chart and kind of having an idea on what's going to happen instead of guessing. Because like if you just go on YouTube, people are like, I don't know, it could go there. They're not putting the pieces together. They're not. A lot of people do. Or I would say a small portion do. The majority don't because they haven't been taught correctly. Daily chart overextended. So we're going to put in, you know, this hourly chart combined. What's that going to do to the 4 hour, right? That 15-minute, it's going to go to the hourly. That 15 and hourly are going to go to the 4 hour. What are they going to do with this? So we're looking for that bounce back. We're looking for the bounce back. And we see what we do up here. All signs are leading back to 106, 108. And the question is, where is this 4 hour? Is this a lower high? Is it going to be up at like 63, 65? It's in a downtrend right now. It's in a downtrend. So we'll see. We'll see. You know, again, nothing is 100%. Keep an eye on yields. You know, and remember, they can always just sell this thing the hell off. They could sell everything off and just everything be down in the dumps. You're like, damn, we're already extended. We're extended. And they just keep pushing it in the dirt. 6 foot under. Oh, you're dead? I'm going to kill you even more. All right? You guys have seen it. I've seen it. You know, so you can't just rely on one indicator. And you can get these indicators to be overbought and the things will still climb higher. They can be oversold and still go lower. Right? That is my rendition of, oh, you're dead. Let me make you even more deader and just, you know, killing you more. Something like that. You know what I'm saying. So just get them in the dirt. 6 foot under. All right. So that's Bitcoin. Bounce backs to, what did we say in that daily chart? 106, 108. All right, 106, 108. We want to look for that pullback. All right, MSTR. So if that's the case, here we go. It is 9. So we have 15 minutes. Oh, man, I already missed a move, didn't I? So this is a nice rally. So far, we're consolidating. Anybody that's been here with us, we have been short at 450. We've been short. It's been making us money left and right if you took the trades. Give me 1 second here. All right, so 20-day moving average has broke, and if Bitcoin, what are we saying? Bitcoin's going to bounce, right? Oh, cool. So we should expect MSTR to bounce back to the 20-day moving average, which is right there, which is also, right? So we would look for, if Bitcoin's going to bounce, let's look for MSTR. So more than likely bounce, get that rejection, boom, and then see, you know, over the course of a day or two, boom. But today's FOMC, so I'm sure... you know, something like this, okay? But we more than likely between today going into tomorrow, we're going to get an extended move. So, So keep an eye on this 20-day moving average. Our resistance is up here at 418. Right now we're at 386. Are you kidding me? 386. All right. So that's our daily chart. Let's go to the 4 hour. Boom. Things are sold. So yeah, I want to look for a bounce on MSTR. Let's look here. We are down in this area of support as well. I don't know what the hell's going on here. Give me 1 second. All right, so I know a lot of people. You guys can see this 50-day moving up here, right? 50-day moving up there in the 325 daily MACD, RSI pulling back, volume, sell side volume. So we got to think. Give yourself time with this. We know where this is headed, right? This thing is looking ripe for a 325, 325 to 350 zone. All right. So let's see here. Give me 1 second. Oh my God. I'm sorry, guys. Just give me 1 second here. All right. Boom. So hourly chart. 15-minute chart. Here we go. So take your time if you haven't been watching MSTR, or if you have. I've noticed like helping yourself. So look at this support area right here, right? Look at that support. We rejected it yesterday, and you're rejecting it again at 390. Keep that level on your on watch. Keep 390 on watch. 475, 474, all the way down to 360. Wow, so that's a decent area there. That's a huge range to be watching. So yesterday, all right, so let me put it on this because it's a lot easier to see because the monitor, because of how big the monitor is. Okay, there we go. All right. So you can see right here, you see this break retest at the 20-day, boom. So you should have some people taking profits down here. But I'm going to watch prior day's low. And you're rejecting it right now. We'll put a dotted line here. Prior day's low. Let's make it that because so I know that it's the entry. So that right there is going to be my watch. Pre-market highs, prior day's low. Prior day's low is right there. This is the zone right here. Nah, we're going to keep it there. It's not constant. So All right, but that's it, guys. What time is it? It's 9:20. We got 10 minutes here. Let's go, guys. Hit that like button for me. Subscribe. Let's have a great day. Come on. Teamwork on three. Ready? 1, 2, 3. Teamwork. Let's go. If you guys have any news, anything that happens, post it in the chat. I'm going to give you guys my trades. If you guys see anything with volume, just relative strength, don't hold it to yourself. Let's all work together to get the steaks. You guys can have the chicken. I'm going to go with the steak. I love my chicken, though. Don't think I'm... you know what? Give me my fried chicken. You guys can have your tendies. I'm going to take my fried chicken. So, MSTR, AI, NVIDIA. I feel like, once again, these streams, when I do them, I really mess myself up. Being more entertaining or, doing things for the stream and other people to find ideas and stuff. Than I do myself. Like when I'm here by myself, I don't have to worry about anything, and I'm just looking. Okay, what's going on? Blah 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 blah, and it's just I can stay more focused that way. GameStop, you are back above $31 now. $32 is your resistance. All right, you guys can see I had this level marked from yesterday. We're actually going to move it up here. I'm going to move that. Watch $32 on GameStop, okay? Now, the reason I had this up is because not many people were talking about it, but we noticed that this breakdown, because I was going to get short, all right, up here at $30, but it just never gave us the continuation, all right? And then it just recaptured it. Look, it just got right back above 29, and then Monday, it recaptured this level. That 28 level was it, and I was like, oh shit, okay, I guess we're going back higher. So this is 32 is your resistance zone, so moves up into $32. Make sure you don't have any moving averages or anything up there or below you to hold you as support. But you could say you could trade this two different ways here. Bottom left, pullback holds into 30, looking for a move to $32. That's a nice $2 move on a $30 stock. Nice. Or you're looking for the 31 bounce, get up to 32, reject, and then pull this thing back into 30. Either way. All right? Either way, we'll see what happens with it. If this thing starts breaking above and holding 32, this thing is going to be a flyer. That's when I'm really going to be interested in getting long GameStop. All right, let me go save all of my stuff real quick. I'm going to go through this real quick so we can look and make sure we don't have... No, that's MSTR. GME. Look at the daily ATRs this thing has consistently been putting in. That's actually really nice. Can you guys see that? I mean, it's obviously not, but look at that. Look how small these candles were, right? So small, if you've seen South Park. And then look, boom, they just exploded. So, and the volumes there, man, this is interesting. All right, 20-day moving average is down there at $29. So any pullbacks into $30, you're going to have support. You're going to have support down here at these 20-day and 90 MA daily moving averages. All right, you're going to have support as you pull this thing back into here. Okay, boom, they're going to be rising with you. So they're all going to meet. So it looks like $30 is your buy trigger. That's literally a buy trigger. Look, you're not overbought or anything either. Look at the MACD crossing over. Okay, RSI still down at 64 with a nice little breakout consolidation to soften the indicators. Boom, time for a breakout. That's why when you get these rallies, consolidations, those consolidations really help for that extension, for that next leg higher. I'm excited about this. This is setting up. Just give it time. If you're going to try to trade it today, make sure you're going out a month to 2 weeks. At least 2 weeks on this. Because this thing could sit here and consolidate until the end of the year, right? And then go break out going into the new year, right? That could very well be the case here. All right, or at least like a couple of days from now on the 20th or something. So just be mindful of that. Your short-term indicators right now, MACD crossover, it's pulling back. You got a little bit of momentum there. Today we're looking for pullbacks into 30. Let's see if $30 holds, okay? That's what I'd be looking for. Look for a bounce. Look for the rejection up here. And I'm looking for the short up there, and look for that move back into like $30 to consolidate. But today might be a low volume day. All right, just watch the volume. If this thing starts climbing, and for whatever reason, if it gets above 32, which I don't think it's going to today, it could, but I think it fails. I think it might fail if it gets up there. I just don't know. I just don't think you have the volume. I don't think you have the volume. You need double. Like, look at this. So back here, right? When we regained this level, look at the volume you had. You had over 3 million shares on each 15-minute candle consistently. You had over that. Look at that. You had about 4 million shares. You're not even close to that. So, give it time. I think if you get this pullback and you start seeing this thing put in like a little belly, like you pull back into this over the course of 2 days, it just consolidates and you're holding 30, boom, that is it. I'm telling you. It might take 5 days, it might take 6, it might take 3, it might take 2. I'm just saying, you want this thing to just hold 30 one more time, because if you want that big money, they're going to be taking not only the profits on their shorts up at 32 at 30, but people that really want to buy this with size want it at $30. And anybody that was a buyer here or a seller, anybody that sold here, what happens to those sellers? They're now seeing the stock higher. These are all sellers that are now witnessing the stock higher. So they say what? If the stock comes back to where I sold it, I'll be a buyer. That is the psychology around the look what happened yesterday. That's why you have break and retests. That's why support when broken becomes resistance, because all those buyers that were there just lost money. So when it comes back to break even or close to break even, they start selling the stock. They went from a buyer to a seller. You do it, I do it. It's just whether or not you physically, have that understanding. Okay? I don't think a lot of people understand exactly why this happens. Right now, these people are like, damn. I was just long this thing from $15, $20. I sold it at 30. It's going higher. This thing's going to the moon. Well, if it comes back to $30 or close to there, I'm going to turn to a buyer. So all these sellers, let's get them to flip to a buyer if you get that test of $30. And these sellers up here, this is your resistance zone. They also don't have a reason to flip to being a buyer because it hasn't broken above 32. So until that happens. All right, $32 though. That's the plan for this. $32 on GameStop. And we'll look for moves back into 30. Okay, 32 rejections. Look for a move back into $30, maybe even 29. We'll see what happens here. I don't think there's much volume on it. I got to get my stuff straight real quick. Good luck today. Stay focused. We have FOMC, okay, as you all know. So don't waste your money early in the day. And don't, if you don't have much money or whatever, save your money. Wait for the volatility. There's an event today. There's a reason for the market to move. All right. Good luck, everybody. Let's pull it up. What's the first thing we're going to look at? Let's look at NVIDIA. So NVIDIA, we'll look at AI. I got to hurry up. I'm sorry. This is what I'm talking about. Look at the SPY just selling off. SPY just selling off. Fuck. That's okay. I don't have any positions open right now. Let's look for the bounce backs. Guys, the Qs right here. All right. 536 on the Qs. Same that area is going to be 604, or I'm sorry, 605 on SPY. But it's trying to break down. Look, I'm just. All right, there's 43 rejection on another 43. Let's see here. Watch AI. Watch 43 if you can get above it. I want to see a pullback. I want to get We already had that opportunity. So there's that rejection of 43 again. Okay, on AI. Again, if you're a newbie, I'm telling you right now, you better know what the hell you're doing. I've already went over it. I don't want to hear nobody cry if they market order in and market order out and they either lose money and the stock goes in the direction, or if they buy the wrong option or pay too much for it, this, that, and the third. You need to know what you're doing if you're going to trade AI. I'm going to tell you that right now. All right, it doesn't have a ton of volume to where the spreads are going to be tight. You know, you have to understand that there are portions of the movements where they're tight when it comes together. All right, you want to gobble it up then, but you got to have an understanding of how that works. You may not, some of you guys, I don't know how long you guys have been doing this, but if you watch the option prices, you'll see at times and when it is when those options come when that spread tightens up. Come on, NVIDIA. I guess it's just going to pull back first. That's okay. All right. So what did we write down? 135, 136 rejection. That's what I wanted to look for. It's going to pull back first. Look, because they already did it. They already did it pre-market, kind of. But I want to wait. Let's see if we can get a 134.50 rejection. I mean, this is one of the top stocks. You got to think people are going to be ready to buy this thing. Let's watch what happens here at 132 if you get down there. But if we revisit 135, you guys know what I'm doing before 132. All right, I'm going to use the high going into today. Keep an eye on yields also, which I'm going to do right now. Sorry. Dude, I swear to God. I hate Thinkorswim. I'm going to change it. I'm going to change my software that I use. I don't like this. Beautiful tail there. All right, here we go. Here it goes. That's the area I'm watching right there, 134.50. Watch this volume now, guys. Fuck, I don't even have the options up or anything. I'm not ready. Damn it. Okay, look at this. This is support here at 134. I'm just seeing that now. Look at this. Support. Top right of my screen. Look at that level right there. Support. Resistance. Support. Resistance. It just held it. So let's look for 136. Man, this thing could get going, guys. This thing could get going. And look at the volume already. What do I do? What do I do? Just give it time, you guys, because we're going to get this pullback. I'm telling you. I think we are. I just don't know if I should give us a 3-minute. Trying to see what looks best. Yeah, I'm just going to leave that as a 3-minute. Dude. There it is. And now your trade line's coming up to 132. I don't know. This is what I hate, because now it's hard for me to get my charts where I want them, because we have we came in with such a huge gap up. Now keep in mind what's going on right now. You have anybody that was short NVIDIA, they're now down, like the stock's working as it. They're going to start managing risk, guys. I got to put up the cues. Give me one. I got so much shit that I'm doing here. Bitcoin's pulling back right now, still. Bitcoin's pulling back like we talked about. What levels did we say? We said look for that pullback into 103, 104, 103. All right. QQQ. So again, look at the top right of my screen here. The Qs are kind of, let's see. Let me pull up a 3-minute. But top right here, guys. Okay, so it did break. So it did break. Right there, you got to keep your eye on this level right here. Support right there at 134. And look, it just broke. God damn it. See, I was too busy getting my shit together there. Nice job. If you got that short up there at 135, take your money. That's a nice trade there. I would target 132, honestly. Just trying to get my stuff. Like, you see how this candle is so small? I'm trying to keep it all. You know what? See, the thing is, I have to do it like this because I'll get, whatchamacallit. Because it won't move with the price action. Alright, let me save these real quick. Let's save these charts real quick. Where's that at? Alright, we're good. We're good. Hit the like button for me, guys, if you could. It helps the stream out a lot. I don't think anybody's going to give you this type of analysis and education for free, or give you guys their trade ideas for free. They want you to pay them to trade with them, and I try to do this and keep this free. If you guys want to give back to the stream, you guys can do that. The link's in the description. The money, it does go to the stream. It goes for everything: news, time, Squawk Box, what else? Different tools that that we use here, that I use here. It all goes to the stream. That's what I want you to know. All right, so on the daily chart, we're looking at that bounce back trade line. We're coming into the trade line now on NVIDIA. This thing might get... Look, keep an eye on... What's today? Wednesday, Tuesday, Monday, Wednesday. Sorry, guys. UNH. It could be. Give me 1 second. I don't want to... Tuesday, Monday, Friday, Thursday. Watch Thursday's close. Watch that trade line. If you get above that trade line, the next area you're looking at is like 137 or so. But this is a nice bounce with... I got to get in this. I got to stop bullshitting. Look at this. Look at this low volume bounce. This is awesome. So now you get your 15-minute. Look at our 15-minute trade line as well. It's way down here. We're going to revisit that. All right. Watch the cues. Let me pull this up. Boom. Just trying to keep it. Fuck. Again, remember, this thing could... You have to be careful because there's so many people that were short that want to buy it now, and those short people want to buy it. So those sellers are going to turn into buyers. Keep an eye on the cues. The cues are trying to... Oh my gosh. I don't know why. I can't get my... just can't get the charts to fit in my screen. At least, like, to look decent without, like, pulling it in too much. Alright. I'm back. Alright, here we go. Alright, here's what I'm going to do. I got to take this to a 1 minute because I want to see what's really behind this. See, I knew it. Look at the volume here. Alright. Yep, so 136. So we're still in the sell zone, guys. We're still in the sell zone. It's not until you pull back into 135 and 135 holds that you would get a break of 136. Look at AI. AI's going now too, guys. Look, it broke through 140. Oh, it's still going to previous highs. Sorry. Yeah, see, look, that area is still rejecting right now on AI. Does it have volume? Hold on. Dude, what the fuck? God damn it, I hate Thinkorswim. It's got a little bit of volume. Yeah, you got some room there to 500, 510. I just... God damn it, come the fuck on. I want to be here. This is where the majority of this. Look at the volatility here. This thing's up 4%. What's UNH up? I mean, I get it. It's a trade. I appreciate it. UNH is up 2.4, but I want to say I didn't have that on focus, so I can't just, you know what I mean? I didn't have it pre-market, so I'm not ready for that. I don't have a plan for that right now. Now I've just missed my entry, I think. Let's watch 135 if it holds. Okay, keep an eye on the volume here. We want to start seeing this sell side volume continue, like extend. All right, I'm going to go for it. Damn, that was a low volume pullback right there. Don't like that. What are we looking at here? Let's see. Like I say, I appreciate that. I am going to keep that on my mind. If we get that pullback, I'll actually set an alert. Appreciate you bringing that up. I'm going to set an alert because I think you'll get a pullback off of that zone, and I will trade it. Because it does have some volume. You're right, though. It does have, you know, relatively more volume than usual. And look at the volume yesterday. Look at that. That's very nice volume there. This thing's in a downtrend, though, so I do want it to flatten out. Look at this thing. This thing, oh my gosh. You're right. This thing is a buy down here. Keep your eyes on 500 on this daily zone here. This is somewhat of an area. Bottom left of the screen. Keep an eye on 500. Because if you reject 500, you get 450. You start working yourself back down into 470s, 450s, 460s, 480s, whatever you want to call it. So, listen, UNH just went red on the year a couple days ago. Just went red on the year. This is a nice break and retest for a possible rejection up here. Keep an eye on this. But buyers really are starting to step in and hold this thing up. Let's see here. Yeah, the volume is okay. So 498, and you can see that this level is clear as day. Even off the daily chart. Boom. Let's see what happens here. That is nice. So what I'm going to do is set an alert. We'll do 494. I mean, honestly, I kind of want this area down here, but it already got it. Did it create it? Hold on. But boom, we got that. Okay. Create. The line's not showing up. I don't understand why, but that's okay. All right. Okay, yeah, it's up there. All right. NVIDIA, guys, there it is, 136. Watch 135. If 135 holds with a low volume pullback, then watch out because you are moving your ass right to 138, 140s. This thing's going to take off, start having a bit of short squeeze. Yeah, look at that trade line ripping up through there. So this whole area up here is looking like a buy zone. So keep an eye out for 134. Let me pull up NVIDIA on TradeView. It's always good to look at these charts on different charts. You can see different things, different time frames. Let me see something real quick. It's down $110 in a week from Only News. Oh, I know. Exactly. Exactly. These are the times to buy. No, you're absolutely right. You're absolutely right. That's how it's done, though. Listen, doing that, you're gonna get they're gonna start calling y'all Nancy Pelosi. When you buy good companies at discounted prices. I was talking about this yesterday with congressional trading. like just a few different things is, we could talk about it later on. It's like, a small portion of their money even comes from the markets. People need to really look and see where does that big money come from. When I was working, I always work. I will always use multiple things to make money. What was it, college football this year? What were we, 4-13? 4-12, 4-13? Uber, real estate, having a business. And I don't think just because of your job title, because, like people can say conflict of interest, this, that, and the third, but really at the end of the day, whether you take them out of the markets, there's still a conflict of interest. It's not like you're removing them from the capital markets that you're removing the conflict of interest. Like they know something that we don't. Like a lot of these things are already in news articles. It's like the idea even too on top of that is like all these drone companies, right? These CEOs aren't even educated or haven't. There's companies that have had to rehire new CEOs because they weren't able to take on that type of market cap. The company is just too big. There's too much to, that the CEO hasn't experienced, right? Because there are levels to this. There's a difference between running, a $10 million company, having a $10 million market cap, and then going from 10 million to $1 billion or, 500 million market cap. It's a lot. It's too much for some people. Some people don't even know how to run it. There's tax exemptions. There's a lot. And to even stay because you're awarded a contract, this year or next year, that 5-10 year road, you still have to grow and possibly tap into other markets. Can that company even, it's just like, because these people vote on certain things does not mean that this company is going to substantially be on. Look at Boeing. Boeing's failing. They get government contracts all the time, right? They haven't been ran correctly. So like that goes to my point is like there's all these conspiracy theories because people won't do what matters does, and that is buy good companies at discounted prices. And yet Matt's insider trading because UNH is down $110 in a week, and he's like, dude, what are we doing? This company, like the 2, 3, 4, 5 year timeline on this. This is a good company that's ran well. It's got a good team behind it. Shit, give it to me, right? That's what Nancy did all year for the past couple of years. NVIDIA, Apple, right? What was she doing? She was going long good companies at discounted prices. Instead of listening to the noise of doomsday, this, that, and the third, it doesn't last forever, Yeah, I was actually just thinking about that as I was talking about that. So you have a little bit of zone here at 535, which we talked about on NVIDIA. I was looking at it here on this zone, just trying to look at different time frames on different tickers. So look at the trade line VWAP coming in up here. I said if we pull it, so we didn't hold 535, which is kind of, I'm not going to say that it's good, but that was a nice rejection of support there. I'm going to look for a move back into like 532. It might be hard. The thing is I don't know if this is going to give us, like, look at the sell side volume. There's like not much selling pressure here. I just think let's look for a bounce back rejection. I just don't know if it's going to give us the continuation to make money on this. So I'm going to wait. I'm just going to wait and more than likely just go long. NVIDIA's looking more and more like a long to me unless we can get this volume to pick up. It's 950. Let's see here. QQQ. Qs are holding up. Let's go. So this is the level I'm watching right here. I'm looking for this bounce back here. I'm looking to see, does it reject at 135 and then does the selling pressure step up? I want the selling pressure to step up on a rejection here. That way I know I can get back down to low a day. I can get possibly through low a day. That's a triple bottom here at 133. So you have to have 133 on watch because that's held. That's held. The volume is not to the sell side. It's to the buy side. Looks like I might just have to go long this thing. I was hoping to get that move back down into 132, but it might not happen until tomorrow or at 11 o'clock. So, let's see here. Got that. Come on. There it is. Now it's going to start just out of nowhere. All right. I forgot about Rivian. Okay, so there we go. There we go. Let's see. 133. It's going to start. I know it. It's all right. We have this trade line coming up. It's a nice little low volume pullback. Thinking it might be best to take the 133 long. You're going to have trade line and everything else up there. Let's go look at the time frames real quick again. I know we're kind of overdone here. I just missed that trade going over some stuff. I ended up missing that trade. Let me go to trending. Got to look at, so we have Rivian, AI, NUKK. Let's see, JBL, Chipotle, no, ChargePoint. CGen had an upgrade yesterday, or Solar Edge. So keep an eye on them solar names. They're starting to notice some of these solar names start to go. Okay, so it's our trade line. That was a nice 4-hour trade line there. 133 zone. It's a nice rejection there on the 4-hour. Man, guys, I don't know. I just don't know if it's going to get, if it's wise to do this. I think it's better to just possibly wait. I just don't know if it's going to give you the continuation that we're looking for. Like, look, it's already going back to high a day here. 135, 1 hour. Boom. Oh, nice. Hold on 1 second here. So there's our hourly chart. This thing's already, so you guys can see here, this hourly chart's already extended. Look at the MACD starting to close in on itself. But you have the trade line down here. This thing's just going to consolidate during the day. I would be careful. You know, if it gives it to you, it gives it to you. I just don't have faith that it's going to do it in the manner that I want it to do it. You know? Let's see here. Let me pull these options up real quick. Let's get shit going. Come on now. Let's get with it. Let's get with it. Because we're going to have volatility later with this FOMC meeting, whether it's good or bad. You know, I kind of don't want to waste my time with trades when we know we're about to really start to get some movement. So 132s, 133, let's see here. Damn, those deltas are awful. Yeah, I want to be long. If I want to be anything, I want to be long. The longs, the calls on this are going to be the place that makes money. So let's see here. Look, selling pressure still there, guys. Selling. Look at level 2. All right, so let me go here. Let's go here. Pull this up. All right, so let's see if we can get one more bounce back into 135. It'll probably go just shy of it if it does. UNH got above 500. Look for a blast from UNH now. You should shoot straight to 504 on UNH. Nice job, Matters. Hell yeah. Shit. Nice job, bro. Nice job. This thing, pull back, hold, break, retest. You should get a really nice move right to 505. See what I mean? There goes NVIDIA. AI. Look, AI failed again, guys. Failed again up there at $43. Failed again. See if that holds. Do we have any data at 10 o'clock? Let's see here. Do we have data at 10 o'clock? Because things are acting kind of funny here. See what I mean? There was a buy trigger up here, 134 zone. You can see that volume starting to come back in. But it can always fade. Let's say 10:30, 10 o'clock. No, we don't. We don't. We don't have anything really until we have a 17-week bill auction, some oil data. Let's see here. All right, here we go. Watch 134.50. That's that pre-market high. You broke back above, not the pre-market high, but this flat top resistance. Let's see. Let's see if things change if 134.50 fails to hold. Right? You have VWAP there. You just tried to break it. You recovered it on volume, so that pullback should hold. Got trade line. Here it goes. Let's see. Man, I just feel like they're trying to suck people along. I do. I got to get 136 again. Let's see, 136, and I'm going to look for a 130. So I'm going to target this area here. If we get back to 136, I'm going to go for it, depending on how we do it. So 133. So I'm going to target 133 again. 37. I don't like that. Yep, there it was. There it is. There it is. The buyers just stopped. My shit's frozen now. Look. You can hear me clicking. I can't drag it in. Here, I can do that though. Oh, now it changes. Look at the volume. It's just falling out of bed because things are about to change. We're about to get the direction. Look at this is what's going on. When that volume starts to stop like that, let's see. We're about to get the direction. We're about to get the decision. What is the decision? You let us know. I think we're going to pull into 133. Look at your trade line coming in up here. This could be a really nice, but then again, you're below VWAP. So then when you bounce off of your 15-minute trade line, you're running right into that resistance area with resistance for VWAP. So I'm kind of leaning on the short side here, believe it or not. You know? Damn, they already went up. So 150, 133. So they're already starting to price these in. 133. This sell side is garbage. Look, it should pop. Let's see if it breaks. It should break up above it. Oh, come on. Dude, it's not. There it goes. Now I want to see this thing extend. Like, boom. I want to see shorts covering. And this thing going. Come on. It's not doing it. Alright, 133. So I have the 133 puts up. They're at 140. I've been watching them. Right now they're at 150. 149 bid. 151 ask. 133. 133. I just think that, let's see, what are your top 3 stocks to buy before January? Oh, I'm not sure, buddy. UNH is going to be one of them. I've been in the markets for a while now, so I have a lot. I don't really have a plan as far as that. For me, I'm at the point where being in the markets for probably over 10 years now, maybe 11, closer to 12. But so having the time to already buy these, like I take time to buy, you know, UNH when it's down like it is. I'm just not doing it just yet because I just wasn't ready for that. And I don't want to go away from my trading plan here. But but like UNH, just whatever good company is at a discounted price. You know what I mean? Or looking around for the next rally if for whatever. So like so we were long UPST, Upstart. We got long those names. Okay? We got long those names for a few reasons. There's a playbook happening here. Carvana, PayPal, Upstart, all these companies have the same thing in common. What is that? The CEO is telling you, hey, I'm telling you, the market participants, we're making a change, and we're making a change for the better. So these numbers that we're going to start reporting are going to be a lot better than expected. We're just giving you that fair warning. Look, Carvana told you that. Look where it's at. It went from $700 to $300. Upstart did the same thing. It was at, we bought it at like $31, $32. It went all the way to $100. So we have gotten that was the playbook I was using. Right now, I'm just waiting to see names like UNH. That's just where I'm at right now. You know, when the theme changes, I'm just riding that theme right now. Airlines, we were already long. We were long the dollar in August, September. Airlines, we were already, a lot of people from United Airlines to American Airlines was our second purchase. Okay, but third, which is I'm thinking about pulling the trigger on, which is the laggard, JetBlue. All right, I think this thing has room. It's a $7 name, but according to this daily chart, even over the course of, if we get another pullback into 6, I'd like to buy it because a move even into like $10, that's a nice return where you could just, take a quarter or half of that money, take it out, maybe put it into something else that you like. But we were already in airlines, so it's like I'm not there yet. That's where I let the market come to me. Right now, UNH is in an area that I would look at for, it's got relative strength. This is institutions buying this. If you want to trade it, you can trade it. I don't know how the options are on this thing. So look at that. There's $60 spreads, but this, I really wouldn't. I would be buying this. This right here, this relative strength. This is institutions buying it. This is computer programs set to buy this because they're buying the dip for a future return. But I think I just haven't found the part of the market that's not overextended. Like we hit airlines, we hit the dollar, we got Starbucks. We made some good money on Starbucks. So it's just what company's going to be next to have some bad news to pull back. Okay, that's cool. How do you determine if a penny stock is worth investing in? I really don't. If you're new, I would. It's not that I would stay away from it, but like investing and buying and holding, you just have to do your due diligence. Do research on the company. Look at their balance. Look at their earnings. Go through their balance sheet. They give all that information out. I don't know. Like, a penny stock really is, because you can have stocks that are $5 that aren't, like JetBlue is a $6-7 stock. It's not a penny stock. It all depends on their market cap, on what they are. And, I would not, if you're trying to make money and invest in I would stay away from it. I'm just going to tell you, if you don't know what you're doing, just buy good companies that you use and just to get started in the markets and keep learning. Like the stuff that I did was, if I didn't know a word, and then I was introduced to somebody, but, at the time, but my learning process, I never blew up accounts. I started by buying companies, then I got into trading, learning really working my portfolio with covered calls, or just, selling spreads and, having a broad, from Verizon to Apple to Microsoft to One Oak to, so I don't know. I would do it right if you're going to do it. If you're not trolling, I would do it right. And just because something's cheap, doesn't mean that it's a good buy. It's cheap for a reason. So for me, it just takes time, but the understanding of rotation in sectors, like different things go at different times. You just have to sit and let the market. For me, it took time to like. I still always learn something new, like yet let's just say some like options. I can trade the spread and make money. Obviously not off of Nvidia. It's too tight. 153, 154. Look, they're pretty much one and the same, right now. But names like AI, which I'm going to look at real quick, even though look at this selling pressure starting to pick up, guys. But look at the trade lines really working its way up here. Let's check in on AI real quick. All right, so AI is breaking down. Again, every time it got above 43, it just could not hold. It just did not want to hold that level. I'm telling you, this $2, we get $2 on this name. I don't care. I don't give a shit what direction it is, if it's up or down. All right. These contracts, I'm telling you right now, I caught like 35 cents yesterday. I don't know exactly what it was. It could have been 50 cents. But I got in these at 92 cents, sold at 108, and then another one at 115. And I was at a trade. I'm like, damn, okay, bet. It's not a huge trade, but for a small, like, wicked move. And if I do trade AI, guys, I will let you guys know what my limit orders are, what I put them at, where I'm at, just to give you guys transparency. I'm actually curious to see where the options are now. When I was trading 42, so they have went up because they were like 400 yesterday. The volume was like 400 and some yesterday. There's more people selling options than there are people actually buying them. Here we go. This is a zone I was watching. Let's keep an eye on this here. I'm going to go here so we can watch both. So I still have Nvidia contracts up. Damn it. They're already at 160, so they're up 10 cents here. Damn it. It's going to start going. I got to bring up the I got to get back. I got to get focused here. Got to get focused here. Sorry, I was just throwing off with the chat and stuff. All right, QQQ. I feel like I'm trying to do too much already. I just got to take my time and relax. I'll find these. Like, I didn't trade yesterday till close to, 11 o'clock, 10:45 on this name yesterday, on AI yesterday. What time was it? Yeah, it was like 10. Yeah, it was at 10 o'clock. Yeah. I thought it was closer to 10:30, but all right, so there's the rejection there, guys. So there's your rejection at 134.50. See what I mean by it's not giving you the follow through to the downside? That's why I'm going to be long. I'd rather be long Nvidia than anything else. You're not going to make any money on the puts if it's not going to give you the continuation you're looking for. You're going to need the overall markets to start selling off. You know what I mean? So that's why I was a little leery. So here's the Qs. The Qs just hit an area. I mean, I don't know. How do I say it? 536, right? They just rejected prior day's close, or looking like they want to reject it. Let me do this. Let's go here. Let me pull this up right here. Yeah, so this is the level that we see. I drew this morning at 536. Let's watch 536 on the Qs. And if you get this rejection up here, which we're at 535, kind of rejecting now. See, you've already made 534 support. So things might get boring here, guys. So I'm going to keep my eye on NVIDIA. For me, this thing has the most volume. Oh, shit. Let me go. All right. SPY at prior day's high. I just got too much shit going on here. Let me stay focused here. My ADHD's going crazy. I thought the neighbors were, like they've been taking out their trash or whatever, and it feels like they're just, whoever was doing it, like they're just so like, it just, I can't explain it, but it's just like you would think that you're asking them to walk across the desert or something. Like they just, I don't know. It's just like the other day, I was just like, damn, is it that you need me to just walk you okay? Is it really that difficult to take your trash out? And like, is it that big of a deal? All right, here it goes. Look at that, man. Look at this. We need a little bit more of a consolidation on NVIDIA. Watch this zone here. This thing might start extending, guys. I actually want to look long. Come on, man. Come on. I want to see this volume extend. Come on. See, you're not getting the volume. Come on. Let's go. All right. What is this? 135. 135. 130. What is that? 136. 177. And look at that. This is why I'm using the 1 minute. Look at that. Look at the volume. It just stopped at 135. Like, part of me wants to wait for that 15-minute trade line to get the long, but I think so. If we blast off right now, that's going to ramp this trade line at the bottom left of my screen. All right, it's going to lift. Oh my gosh, it's going to lift this up, right? If NVIDIA, can extend here, then you get the pullback and hold of like 136, and then bang, right? Now you're looking at, oh my fucking God. This is why I hate Thinkorswim. They just have everything in the wrong place. All right, so there's the bounce, right? If we can get that, and we're holding VWAP, you get this bounce, then you get the pullback. You get the pullback to hold, right? Just want to put this out for you, and this again is on a 15-minute time frame, and then we get that line right there, right, which is going to be your trade line. We start cranking this thing up, and we look to be, there's your second part of a buying there, but we need this thing to get going. There it goes. See, it's trying to go now. So that's what I'm looking for. I want to see that extension because that's going to start to raise our trade line. All right. And when that happens, I just think it might be too low here. We need to pull it back into 133. It's just not, it's not doing what I want. So the question is, do we go for the short or do we just wait for 133 and we wait for that trade line to go long? All right. Because those puts, see, it's the longer it consolidates here, the more it's ramping it up. All right. Trading. How do you determine if inside is worth investing? Okay. All right. Let's go look and see here what stocks we have trending, and what all we can get into here. let's go to, and you guys let me know as well which charts you guys want up. Like if you want me to go to this one or the one that we're at now. All right, so AI is down into $42. Shit, I have a tough decision to make here. See, we're there now. So I have a tough decision here. 14. So Rivian has support kind of like at all these little levels at like the high 13s to 14. Man, I would love to be able to take this thing back down to $13. I just think it might take too long. Here's our daily chart. Yeah, see the trade line on this thing is at $14. That's a nice bear flag, I'll tell you that. That's a nice bear flag there on Rivian. For those that may not see it. It's right there. Boom. Right there. And there it is. There's the breakdown. Now that's a short, right? That's a short. You have all the volume that you need, everything you're looking for to have confidence in the trade. All right, let's see here. Dude, there's so many weird names today trending. Let me go to, let's go look at the, oh, and you know what? I also forgot about TSM. I also forgot about this. Are we back up at that resistance zone now? I think we are. Why is this here? Remove. Dude, why is there so many levels here? 1, 2, 3, 4. Man, this thing might start breaking through. I gotta be honest. If I was short TSM, I'd be worried right now. I would. So we held this. Now the question is, can we get enough strength to get through 206? That's a nice double bottom here. 206. I would seriously watch 202 zone, or just if this thing really starts, yeah, 202. And look at the volume that's here this morning with it. It's not crazy, but let's see. It is an area of resistance. Let's not forget that. But I don't know. Semiconductors might not move, but they moved a lot yesterday, so just not sure if this is the place to be. Let's go to AI. Let me go back. Let's go figure something out. And look, AI broke it. It broke 42. What'd I tell you guys? What'd I tell you? All right, AI broke 42. Let's get it. I'm trading AI, guys. I'm trading AI. I'm trading AI. I knew it. I fucking knew it yesterday, man. I knew this thing was on to something. Okay, so again, if you're new, I'm warning you right now. If you don't know what it is that you're doing, you can and will get hurt if you don't know what you're doing. All right, because you have to be able to know how to limit order into this, or you're going to pay too much and make hardly nothing. That was a big volume break right there, guys. That was a big volume break. All right, I'm looking at the 42s right now. Man, like they don't have much volume. That's what I hate about this thing. 123, 190, 14. 20. See, I was in these yesterday for a little bit cheaper. I have some insurance built into this too, guys. So, like, look at the spread. See how it got wide right there? 114, 115 to 130. You need to know what you're doing here. Okay? Give me 1 second. Let me look and see what's going on here.
Regis here today. And when I got in my house and I hit Waymo and it drove me, it was an agent driving me here to this event. And if I want to go back, there's only one Waymo company. There's only one company that offers autonomous driving in San Francisco. There's no other company I could call. But there's plenty of companies who say they can do it, but only one actually can.
And you trust it, because that's a big factor here.
I love it. I don't trust it. I love it.
They just said
you
the
should
U.S.
come to San
Defense
Francisco,
said,
Sarah, and we can go on a Waymo. I'll show you. It's incredible. There's no human in the car.
They just said that China's expanding their nuclear arsenal. The Pentagon just released that, guys.
Together of sales, service, marketing, analytics, commerce.
I'm going to go fill up my coffee real quick. I'll be right back. Please hit that like button, subscribe if you haven't done so already. Let's hit the goal today, guys. That's all we ask. If you guys want to give back to the stream, you know, the stream contribution link, donations, that link is in the description. $5, $10, $20. If you've learned something, it's, you know, it's that time of the year. So if you want to give back to a small business and help someone out that is also trying to help others out, the money does go to the stream. So we can have stream decks. You're going to help us take this to where we want to be able to take it and help people be able to trade. Okay, I'd like to be able to do it for free, but I just need your guys' help. Again, hit the like button, subscribe. Links in the description.
Broadly about mass adoption of AI, when that's coming, what 2025 looks like, how he feels about newly elected President Trump. His Time magazine naming him Person of the Year. We talk about that, what we can expect from a new administration in AI. We're going to play that part of it on Money Movers. But this part really on Agent Force, which has been, David, driving the stock. Since they announced it at Dreamforce back in September, stock's up, you know, more than 40%. And he confirmed that the orders momentum is there. 2 weeks ago, it was 200 major customers. Now he says it's 1,000 major customers. It's not changing the financials of the company yet, but clearly is offering a lot of hope and promise, and investors see that.
He's a very strong marketer.
Yes.
Very good at doing that as well.
Yes. Well, he's been around a few tech cycles.
Without a doubt. I mean, I've spoken to him about it as well. I mean, he's pushing hard on all of that.
Well, if you think you have the key to the future of work, right? With the AI, that's what this is.
Yeah, the agentic layer that we're going to continue to hear about. And we all took note, obviously, when he began that criticism of Copilot some time back. It was interesting.
Keeps at it.
Yes,
Flippy
he does.
2.0.
Yeah.
Couple Clippy mentions yet again, yeah. After the break, it's been a rough month for the insurers, as you know. CVS, United Health, Cigna, all down double digits in December. We'll get a closer look at that space when we're back in a couple of minutes.
All right, sorry about that. The coffee pot ended up going off anyway. I wonder if that was Mark Benioff there that actually sent AI lower. All right, here. Come on, man. Let's fucking go. I'm tired of this thing fucking freezing up. So far, NVIDIA holding strong, guys. Let's see. Is this going to be a double top or what? The overall markets are recovering. Okay, overall markets are recovering. I feel like I should already be in NVIDIA long. We're at an inflection point here. Right, the SPY is at the top right. The Qs are on the bottom right. All right, inflection point is the resistance that I'm looking for on the Qs at 536. Okay, and the SPY, you have a rejection zone up there at 606. So, you know, if you hold Tuesday's high, then look for a move back to Monday's high. Okay? I'm going to look for that on the SPY. So if we pull back here, which it may already have, I just don't know, haven't seen it yet. Look at this pullback into this pre-market zone. If you can get this pullback down in here to 605, you know, then you look for that break up higher. But how do we know? What's up, Ann? The Dow. What's the Dow doing? It's trying to put in a bottom. Let's look at the IWM. Use these as your gauges. Look, still going lower. Wow, that's funny. Let's see. Why didn't you stream yesterday? I tried. Something happened. I don't know if they were working on the power lines or not. I had the stream up and then it went off, and I'm like, man, I just didn't feel like restarting it. The market was opening up, so I was just like, no reason. I had a good day yesterday, though. I tell you what, I can sit here and just sit and watch names. Actually, like right now, like, because there's a part of this where, you know, people watch things that entertain them, right? I'm here to make money, so there's not much volume on those. Okay, 42s. Look, these 42s went all the way down to 118. Man, I don't like that I'm paying up for it, but I'm not paying that much more. I have insurance built on this. Let's see here. What's GameStop doing? Okay, AI trying to get back above 42. I'm telling you guys, this 42 zone is going to be key. All right, so what I'm going to look for is 42.50. Or if we can't get above 42. This 42.50 is going to be... See, then again, right? If we get back up here, you get back up there. If it does, then it can just... Then you're looking at a pullback hold to go higher. You know? So it's like... I just need her to show me. And she kind of is showing me... See, this is what gets me. On a 5-minute candle here, it's like... I don't know. It's my opinion, guys, that I think it might be time. I think this thing is telling us that we're going to get that pullback into $40. I do think so. This thing's tricky. You just got to be patient. Let it set up. I think we can get this 42.50 zone. I think we can get 42.40, 42.50. I think we can get it. Let's see here. And Amazon yesterday also had TSM, Taiwan Semiconductor, had a really nice setup yesterday. Amazon yesterday, this it ended up recovering. Okay. Watch Amazon here. You could get a move back to 233, 232.50. You could look for a possible move back into the zone up there at 232.50 to 233 if it holds. NVIDIA, are we getting that double top in? All right, what is that? That's what we were talking about. And look at what did I bring up? That 15-minute chart. All right, look at the trend line just working its way. The more time that NVIDIA eats up, the more support, and we're above VWAP. You know, the more ripe it is for the long. Okay? It's just getting the trigger. It's just getting it. Again, I'm going to be an option, so I have to worry about price and time. I got to worry about getting the direction right, and I got to worry about paying getting the continuation that I need so I can get paid, and I need to worry about being in the right option, paying the right price. I'm not trying to be perfect here, but I try to do the best that I can. What am I looking at here in level 2? So this is AIs. So look, AI got back above. See what I mean? They're already back down to $1. That's why you got to be careful. You got to limit order in. Because if it goes against you, I think I might take this. There it is. Let's see. Boom, we just fell. So I'm sticking with 42.50. Because I know off of 42.50 that if we can get the pullback. Let's see if this tries to do a failed breakout where you get this bear flag here, right? You have this bear flag, right? You have this bear flag, and then it tries to break out, and then it pulls back like it's going to hold, and then fails. I think that's what's going to happen. Let's see. Let's watch. Let's see if that happens here. We're still holding 42. I don't want to try to make any guesses. Man, this sucks because now it's... Yeah, now we're oversold. I think we got to look long. Man, this sucks, man. The volume's telling me one thing. We're holding 42. I said 42 was the zone that we had to watch for. If it holds... We have 4-hour trade line VWAP above us, and that's where 42.50. Okay, so that 42.50 is looking like the area we want to look for a short, like this thing starts bouncing back, boom, get it, and then see if we can break. It's the hourly. Okay, so that's on the hourly chart. I'm trying to pay attention to the level 2 and time and sales. Level 2 of both the options and the stock. So let's see this Fed meeting if Nick Timiraos from Wall Street Journal and all these other people that are able to ask questions, let's see if they actually ask good questions today. I swear they waste everyone's time, and just the fact that they get to be there, they ask the questions that Powell already answers, and it's so frustrating. It's like I don't know. Like if you guys go back to some of these meetings, like the past meetings, you'd be like, dude, he just literally said that. Like, what type of question? Like, what are you trying to get at? Like, the question doesn't even make any sense. Like, there's so many different things, like, that you could ask him about the possible future, which they don't play any guessing games on. He doesn't know anything, but, you could ask a question to kind of get a sense of where and how he's feeling and how the rest of the Fed's feeling, and just if this then that type of scenarios, and what from the way they see it, how much has the economy actually slowed and why you've cut rates. If it hasn't, then I don't know. There's just different questions you could ask, than some of the stuff that they ask. They just, in my opinion, they have wasted, good time that they could be asked, because you have some, how do all the implications from around the world that are happening, all these wars, and how does that have an effect on their decisions, and what have they thought about, do they have a plan for that? What if we start getting banks in trouble again, things like that? I don't know. Maybe I'm wrong. We'll see. But I know the last time that they were asking questions, it was like, "Are you serious?" Like they literally just repeated everything he said, and I don't know. It was just like a big waste of time. Like I just thought that they could have done a better job. All right, sell side volumes kind of just giving up here. Let's see. I don't know why AI broke down like that. That was interesting. I'm coming, Abby. Let's go here. All right, so that's what I was doing. I was getting the whatchamacallits up. Let's see, Marvell. So they're looking at Marvell right now over on TraderView. Look at NVIDIA, guys. There goes NVIDIA. There goes NVIDIA. I knew it. I know I should have just got long. All right. I think we have our trade, you guys. It's above 136. There it goes. Here it is. Here's the extension higher. 136, 136. See, there's already a lot of volatility baked into these things. What is that? 137. We got 33, 43, 26. 137. 137. All right, I'm back at NVIDIA. I'm looking at the 137 calls. Looking at the 137 calls right now, guys. Fuck. It's just climbing. It's just climbing.
Trying to get out as it breaks key levels, support and resistance, and then boom goes the dynamite to the upside. And we hope to have some on, and there it is. So it's a nice move there for NVDA. Let's just check back in on Palantir again. This was, to me, the missed opportunity because we had 3 times short, made money, and then flat, basically, a loss right there. So flat on the day here for Palantir, but at the end of it all.
So here's what I would say. Now we're holding the trade line on this pullback. Come on, baby. Give it to me. Give me like a 180. Come on. What did I say? 187? What did I say? I got to get in this now. Got to take it now. 137 call. 137. 137s. I'm not in them yet. I have it up. I'm only going to buy a few. I'm going to wait. I'm going to be patient here because I think we can... I think we can get a really nice entry here. And pay a cheaper price. See how the candles are getting a lot smaller? Let's look at the 5-minute chart real quick. It's going to start climbing. I knew it. It's already at 192. So look how far we are. Make sure you guys are always looking at different time frames because you're going to be able to see whether or not you're overextended or not, and where your pullback entries are going to be able to take you, or where you should be having, where at what price you should be buying. That's what I do, right? Like right now, I'm looking at like 135.670, 135.65 to 135.75 in that zone. Just trying to make it so you guys at home can see. So look at this, 186, 185. What I need to see what yields are doing too. It's a nice little break and retest right here. Damn, this thing might not hold, guys. I don't want to be the bearer of bad news. $170, $173. There it is. See what I mean? There, I could go over why I didn't think that that was going to hold. I think we just need to give it time. 135.70. We're there. I need to start thinking about buying this. It's down to 170 now. And that trade line did not hold. And look, Qs are above that zone. $167. It's looking like 135. See this resistance here and support? The bottom of the box that you have VWAP, like this little pivot high here. Looks like it wants to pull into that because if you look from today, look at how it's resistance. We break out, we pull back, that resistance, those sellers flip to buyers. 135, and then what happens? Let's look at our 15-minute chart. That comes up here. We're oversold, yes, but we can remain oversold, and then we have that pullback should be able to yank that trade line up, and that's going to be more than likely my entry unless it recaptures it now. See how the volumes drop down though? All right, got my Red Bull. Again, I don't want to waste any trades because we have FOMC. We're getting, the market's going to move, guys. So don't force it if you don't see it. Just be patient. And if anybody has any questions, hit that like button for me. Subscribe if you haven't already done so. I'm doing a giveaway at 1,000 subscribers. That's our goal. We're trying to get to 1,000 subscribers. Once we get there, I'm doing a giveaway. Let's see here. Where's my battery and stuff on? Let me charge this up. I don't have the camera on today, guys, because like I said, I've been making some changes with my mic, getting my mic settings and some other stuff here going. Man, this thing just isn't doing what I want to see it do. And it's kind of hard for NVIDIA to just start, I want to see these shorts really start to take profit. But it's like, feels like it's just overdone. And a prime example of that is look at this 1 minute chart. Look here. What's happening? You've just had a shift. Oh, there it is. NUKK. What's it gonna be? Cause older people know this. What's it gonna be? Just tell me what it's gonna be, NVIDIA. Come on. Here it goes. Bang. What are we gonna do? We're gonna find out. We're gonna start ripping. I don't like this gap here between VWAP and trade line. Trade line's all the way down to 134. I still think we test 135 again. I don't know though. I want to see more, man. We don't have. I just don't know, guys. I don't know. I wish I did. But what the hell's going on here? I don't know. My cat wants different food, I guess. She's going to have to wait. Look, the volume just dropped off. See, buyers are going to start getting apprehensive on buying it and rethinking about buying it because they're not being joined. They're not getting any help to get continuation to the upside. It's only been a couple minutes here. We have all day. We're back above the trade line. Just look. They're seeing this, guys. Trust me. Trust and believe they're seeing this. All right. It's got to go. Like, it's got to go, and it's got to go in a serious way here. Look. All right. Let's see if you get a shift here. Let's see. The candle still hasn't closed yet, so let's see. Boom, boom. Nice set of buyers just stepped in there. Look at that. Sellers. I would weigh this a little. But look at that. There you go. There's the buyers coming in. I don't know what's behind, whether it's time and sales, level 2, or the candles. I don't know which one's not synced correctly. One of them's not synced correctly. It could have just been orders that are hidden. So, okay, so these calls are back at 180. We saw a low of like 175, was it? And that's important because you're going to get an idea of the range. You can look it up. You can look at the high and low of whatever contracts it is that you're looking at and understand that and use that for your entries and your exits. Like, hey, this thing was $1.50 this morning. It's down to like, you know, I don't want to say if it was like if the high was like $1.50 and that thing's down at 30 cents, that is a contract that's literally not making you any money. Don't buy it. Okay? But if you have like a high of like, we'll say $1 or we'll say $1 and it's pulled back to like 65 cents and it's back up to 80, it's like, okay, and the stock's trending in that direction, you know, you want to be in the contracts that are going to be making you money. And we're at an inflection point right now. Look at this, right? The buyers are kind of giving up because they see a few things that I'm telling you guys. Look at this. See how they're just like kind of like done? They could come in out of nowhere and just pop this thing up. All right? But I think they're waiting for this entry somewhere down here, guys. I do. Or we got to extend. Like, we got to get going because that trade line's going to get brought up. I think now's the time to buy it. Fuck, I just can't do it. I just can't do it, man. I can't do it just yet. There it is, 2,200 to the buy side. That order just went filled. Somebody just bought 2,200 shares there. It's getting close. We're getting that VWAP cross, see? And look, there we go. That could be also another sign. Look at the selling pressure just stop right there. That's a shake and bake. 170, 171. Oh my God, I really wanted to get long right there. Let's see here. I don't want to play any guessing games with this thing. We're still below, technically. We got above and couldn't hold 136. It feels like 135 zone is really ripe for a long. Like, it feels like this is the place. Because you see this previous close here, this gap, previous resistance, where we pull into it now, you're going to have VWAP, that previous resistance zone, which is a level at 135, trade line VWAP, you have volume on your side. That could be the buy trigger at 135, 134.98. And I think that's kind of what we may be doing here. Even though we already broke out, pulled into it, and extended, I think you just need to let's step it up. Let's see if buyers step up here at 135.50. But that zone in here is really what we're looking for. Right in here, guys. Right in there. Keep an eye on that 15-minute trade line. Let me go feed my cat. I'm probably going to miss this entry. This is a good sign right now. What's the volume of the sell side doing? It's collapsing, which is a good sign. We want those low volume pullbacks to have confidence. Okay, the sellers are about done. Let's see if those buyers can step in and take control. Sorry about that. I should have put on the there. It went ahead and climbed, didn't it? I knew it. Fuck. I said it. I said it as soon as I went to the bowl. I said, yeah, as soon as I go feed her, I'm going to miss this entry. It's all good. It is what it is. We're going to still have movement later on today, guys, if you didn't get it. But we could have got those at 165 to 170. I have up right now 168, 170 still on the list for my entry price for the 137 calls for this week. Obviously, I'm not going to get that price, but that's what I had locked in here on the contracts here. So let's see if we can break back into that 170 or so zone. It's kind of struggling here. So you're sitting just right on top. You broke above. Now you're trying to hold. You have that daily trade line. Okay. You see this 135, it really is, in my opinion, the level. But then, I don't know. That's a good sign right there. That's a good sign. It's a low volume pullback. Boom. Let's see here. Level 2 is on the top right. I was just opening the window for her. Alright, and the volume decreases on the extension. Okay. Go figure. Alright, I'm going to wait for that 15-minute trade line as my entry point, guys. I've got confirmation on that now. Let's see. See if it can extend. Again, I had to open up the window, so you guys might hear, you guys might hear some sounds and stuff. She wants to sit in the window. All right. Let's get it. Anybody still watching AI? Is it still holding above $42? Remember that 42 to 40, we're looking at 42 longs to 44, 45, or the short from 42 to 40. And there goes NVIDIA. I missed it. So it is what it is. I needed the 170s, guys. I needed the 170s. It is. I can't pay 60, 70. I can't pay nearly. What would that be there? From even just, we'll just say 150. Is that 25%? Is that what that is? 1, 2, 3, 4. Yeah, 25. Keep an eye on the price there, guys. Keep an eye on the prices because we could still more than likely be able to get this. It's possible we could still get this for a good price on a pullback. This thing's got to hit that trade line one way or another. It's just when. If you want to go and here's the thing, I'm trading weekly options, so if you're a person that wants to go out 2 weeks, that's fine. You can get long, go out, give yourself a month, give yourself 2 months, give yourself 3 months. Whatever you want to do. That, we are long-minded for this. Damn, that's brutal. That's a brutal one, guys. Damn. I walked away at the wrong time. I knew it. I shouldn't, but she was sitting there screaming and clawing at the door. It is what it is. It's all good. It's all good. That sucks. But hey, you know, see if, you know, one of you guys hopefully benefited from that. I mean, you could see how we were analyzing it. Like that was it, guys. You guys know that? Right? This was it. Right there. That pullback right there. That was it. The sellers gave up. They had no more to sell. They stopped right there. Now, if that would have increased, sure. Then that would have had, you know, I would have had a conviction we would have broke it. But here we go. We're extending higher, and all that's doing is just raising us higher. So if we can get a pullback sometime or another, I'll wait for it. Let's go look at AI. Again, if you can, I know you can, hit the like button for us. Subscribe if you haven't already done so. I'm doing a giveaway at 1,000 subscribers. Once we get there, with your help, we can get there. Today's goal is going to be 20 likes. I know we can do it. All right. The day is not done. So there's AI. I don't know how I switched it. I didn't even know that I switched it. All right, what's going on here? Let me see something. That's it. 3 likes. God damn. Come on, man. We can do better than that. We can do better than that. 142. What's up, Hippie Hank? Yes, it is about to moon. Yep, that's one of our targets up there. Is the low 140s. Wait, I let my cat, you know what I'm saying? So keep an eye on that 140 zone. Then you have a gap fill to 142. I was just waiting on the entry. It's just I can't when I could like I said, I have the options up right now. The last ticket that I have right now is 168 bid with a 170 ask, and they're up to 204. I'm good. I'm not going to pay up for a pullback, even though it may still give you the continuation. I will look for a pullback and use. What are we up right now? Have we pretty much did the full ATR on this? It's up 5%. I messed that trade up, unfortunately. But, you know, my cat she was just whining her head off. And I couldn't do it. I couldn't deal with it. So. I thought I would have been able to get it done quicker and been okay, but. It is what it is. She just cost me some money right there. That's why I get really frustrated with her at times. Because she just absolutely, I don't know what it is. She's got this like inner power where she just, oh, now's the time. It's the wrong time. Now's the time to go full with Dad. And go, you know, go yell at him until he gives in and does what I need him to do. All right, 202. Let's go. Let's pull it back. We are getting a bit extended here. I think you just about did its full. I mean, look at this. I mean, you've moved, you know, from low to high today. 132.75. We'll call it 132. We'll say 133 to 136.8, 137. So 133, 4, 5, 6, 7. You've done almost $5, $4.50, almost $5 on this thing today. Yeah, that's what I was thinking. You know, Hank, we get that pullback around noon, 11:45, 12 o'clock. And I'm going to use this trade line here, 15-minute trade line. It's what I'm going to wait for. And maybe I can get them for like $1.80, you know, $1.90. I'll pay up a little bit because I have some insurance built from AI. And I think AI was the only trade I took because I wanted to long NVIDIA yesterday at 128 because I noticed we kept holding 128. We broke down. I missed the short. I was like, it's all good. I was getting the orders up. And I don't know about you guys, but like sometimes because if I go through the options chain, I'm just looking at my volume, my open interest, and what part of what options do I want to be in, and sometimes that can eat up a small the smallest amount of time, and then it just breaks down. And I was like, shit, there goes my puts for yesterday. But I was like, man, 128, the 4-hour chart. We talked about it this morning. I was showing the chart that 128 even on a 4-hour time frame was just pure gold for a long, and I just didn't have the cojones to do it because I just didn't want to fight the trend. I just was like, this is stupid. This is a nice bear flag here on AI, guys. Remember, what did we say? 142.50, 142.40. Watch the volume here. And if you listen, I'm going to tell you, anybody that's watching that's new, do not market order into this. Okay? If you do, this thing can go with, you can get the direction right and still hardly make any, you just have to understand the spread on this. It can get pretty wide, and you can use that to your advantage. So I'm going to be limit ordering in and out, and I'll let you guys know what I do. Listen, Abby, all right, I'm going to let her out. She's done. She's done. All right, I'm done with her. She's just going to have to deal with it. All right. So I brought up AI because of two reasons. 42 held. We're looking for either that long to 44, taking profits in front of 45, like 44.50 in front of, like at 44. We had this breakout, and if you notice yesterday, this was pretty much a consolidation, okay? But the high of day from Monday, it could not hold it. We got above it, failed. Got above it, tried to hold and extend a little bit, failed. Rejected. We got up there late in the day, held, failed after hours. And even going into the close yesterday, look, failed, rejected. So today, now you're seeing this selling pressure pop up. Nice little bull flag here. This zone here, here's your, I would say, this, either one of these could be your initial morning low, but you made a new low here. And what are we doing? We're testing it right now. All right, that 42.50 we talked about. We're also below our trade line. But again, 42 is a level that could hold. Okay, this thing could hold. Look, you're above prior resistance. So again, I'm not trying to predict the future here, but if we fail here with low volume and 42 holds, I think shorts are going to give it up. And then we look for that climb back to 43. If you see an increase in volume here, which we are getting right now, look at it. Look at it trying to increase here. It's trying to increase here. We need to see this thing get going. Then we can break 42. We're going to target $40. Yesterday, I caught about 35, maybe close to 50 cents yesterday. I had a 92-cent entry with it was like a 108 and a 115 exit yesterday. I took 2 profits on that trade yesterday. It was a nice little trade for barely moving. I pretty much just traded the spread and just was undercutting limit orders on the ask as it extended. I even tried to get 116, but it filled me before I could raise my order. So let's see here. Daily chart, we're a little overextended. This is an area of resistance up there at 44, 45. Okay. So I'm going to look. You have your trade line down there at $40. So I expect possibly a pullback into $40. A bit overdone on the daily chart. 4 hours trending lower. This previous high here is where I'm looking to get to at $40. All right. And again, I'm telling you, if this thing goes $1 to $2, $1.50 on this thing could be a really nice payday. I think it's about to start. Let's try to see if we can't give this thing up. I would go out 2 weeks, but there's no, oh my God, this is why I hate Thinkorswim, because you can't lock your indicators. Like, I hate when this thing does this. There's like no volume. There's like no volume going out to next week. I would love to go out a couple weeks on this because I would more than likely go both ways and then just let it give me the direction, or I would do some type of spread to benefit from either direction and just take profits like buying down here. If it fails, it fails. You know, take it off or whatever. But there's no volume, so I'm not even worrying about it. 5 minute. Let's see if we get this. Probably get this bounce here. Thanks, Hank. We'll have the FOMC meeting live here too. It's good talking to you. It was nice meeting you. Appreciate that. You have a good rest of your day, bro. So what I'm going to do right now, guys, what time is it? It's 11:14. I'm going to look through here and see what side of the chain I want to be on both sides of. Look at NVIDIA pulling back to 186 now. Shit. There's that 142 hold again. You got some nice volume coming in there. What are the calls? 72.50. Volume 42. See, look at that. They're all the way up there at 44. See, if these things were like 25 cents, I would buy this. I think 50 cents is a little too expensive. My ear's ringing. I opened the window, now my ear's ringing. I don't know if there's like drones or anything. You never know. You never know. All right. All right. So AI's getting a nice pop here. Let's pull up a 5 minute. Let's start there. We'll go back to the options chain. Boom. Volume starting to pick up. All right. All right, 42. 42 puts. Shit, I don't know what to do. I have continuation and I don't have to guess on NVIDIA. All right, I'm going to write down so about $1 right now for the 42 puts AI. 42 puts. $1. What options were we looking at for NVIDIA, guys? Do you guys remember? Let me look here, because I never sent it through. Like, I had it up. So I didn't throw out a limit order. Shit, because I don't have it up anymore. I moved on to AI. What calls were we looking at? The one... Wait. We were looking at the 137s, correct? Yeah, 58,033. Yeah, we were looking at those. 137 calls. Okay, 137 calls. Let me write that down so I don't forget. Because going back and forth to a few different names, you can kind of... Because what I'm doing is I am remembering the options price, and here we go. Here we go. Oh, man. This is right. What I tell you guys, wait for that VWAP trade line entry point. Let's go. Fuck, so I'm going back and forth from AI to NVIDIA right now. I'm fucking up. 137. Oh, man. This isn't good. So there was just news with TikTok and... I think there was just like a hearing or a meeting or something of that nature. Come on. Come on. Hurry the hell up. I think I'm late on those. I'm kind of nervous on getting into these guys. We had to have gotten into it when we got the confirmation right there. All right, we had our confirmation right here on this little double bottom right there on that selling, on that pullback right there when the volume just stopped. Boom. That was our cue. This is going to hold. Sellers are done. Let's break out to a new high. That was the trade right there. And we missed it. I missed it. I'm sure, some of you guys got it. But it gave you the confirmation, because on something like that, if the sellers were going to step in and the level wasn't going to hold, you would have sold, a decent amount of volume there. And the volume just gives up. You don't give up volume at an area like that. The only time you do that is when you're on the other side of the trade. So if nobody's there, then we know what side we want to be on. So here we go. We're getting our 135 entry. Here we go. 137 call. All right, 150, 152. I don't want to lose money on this thing. I know we're overextended. This thing might revisit low a day, guys. I'm just going to let you guys know that. I'm getting the vibes that we might get more than just a consolidation above 135. 134.90, 135 in VWAP. I'm just putting it out there, so be careful. Be careful. I don't know why my charts are doing this. I saved them. Right there. It's still kind of... It's whatever. Be careful, yo. Be careful. You might be running and gunning for 134 again. You might be heading right back down to 134. Don't rule that out. Moderna got a downgrade, and it's downgrade to hold. Rivian, let's go look at AI. So Rivian making new lows down there at 14. Man, AI's holding. AI's holding. So I'm going to give this a little more time. So 92. You could probably get filled at like 95, 96 cents right now. And 98, you'll probably get filled on the short. So that's kind of a 93, $1.04. That's where I'd have my limit order. Probably like 96. Like right now, 98 to 99, you'll definitely get filled. Yeah, see, they're coming down. 84. See, yeah, you would have got filled and be down. Now it broke the level up here. All right, here we go. We're still watching VWAP. Like, this thing could act like it wants to break out. This is kind of what I'm looking for. If this thing breaks out, it pulls back to the bear flag right there. right? Right there. It's not breaking out yet. But that was a mean reversal through 40, back up to 42. So part of me thinks I need to just go ahead and just get long this thing. Because this was a mean just break of that volume with volume, and then it just recovered it. It recovered it. So part of me feels like I'm doing myself and everyone on the stream a disservice. But until we recapture this 4250 zone, we retested that already. We broke down. We have not. Okay, so here we go. We get a pullback into 4245, 4244. This is our first test of VWAP. Got a nice little increase in volume there. Let's see here. Let's see what happens, because I'm really curious. See how it just massively rejected VWAP right there? That's actually kind of funny that it's not. They just want so much for these. Today's Wednesday, right? $152. So NVIDIA. Let's see here. You know, if you guys have thoughts on this, you guys can let me know in chat. But I need more conviction. Let me see. There's got to be something that I can use. I mean, because it's got relatives. I don't want to fight the strength here. I just think it might not be time yet. I need to give it a little more time. 4260 is the level, because you would know pretty quickly if you're wrong. You have to be okay with the loss, and that loss could be a little bit more than you want it to be because of the liquidity that's not necessarily there. I mean, in my opinion, it's liquid, but it's not. It's just really, it gets really spready. But you can use that to your advantage if you learn how. Let's go back to NVIDIA. Sorry, guys. I can't turn on CNBC right now because I don't know who it was, but they copyrighted me for the 11 o'clock hour. But I don't know if it's a mistake, if I should let them know, because everybody has, it's not like everybody can't view this. It's posted publicly, and I think, you know, with it being copyrighted, it's something that, I don't know. All right. So let's see here. That's what I was worried about, was we needed to get that NVIDIA trade on when the time is right, because it could sit here and consolidate between this zone. But the good thing about NVIDIA is we can go out a couple weeks. We can give this thing time. I have to get a quick bite to eat real quick, guys. Give me 1 second here. Let me get something on. Part of me wants to take a stab at this, but I think I was going to just check out Tesla real quick, but yeah, I'm going to try this. Let's have a quick intermission real quick. I just have to eat. I'm going to play a video if that's okay. I'll keep it down. Or if you want me to, like, I would like to have, let me see if I can throw Bloomberg up or something.
So what I think Elon Musk's and Vivek Ramaswamy's main play here is 2026. That's 4 months before the fiscal year is over and 4 months before the 2026 midterm. Not going to be able to agree on any of those changes within the appropriations process within.
Keep an eye on NVIDIA here. If this thing starts to get some volume, because if you start to get some volume here, you have some room to the downside back down to 133. You have some room. Let's not forget that. 132, 133 is your zone of support on NVIDIA. Really, you could say 134, 133, 132, 130. So that's what I would do. I'd keep these on watch. Now you're starting, you know, you're technically holding this previous VWAP, previous resistance support zone. So you got to continue to hold it.
And, you know, trying to save the world and all that. Isn't that where we are, or no? I mean, I'm being somewhat facetious, but not because I hear that from a lot of young folks. But I always use this example.
But I want to see, there's a couple things just like up here, right? So you see how we got, like, we put in a double bottom up here, right? You got back up above it, and then this pullback, you had this double bottom, but this pullback here, look at the volume. See how the volume just left? Then that was your note. That was your, like, hey, like your cell phone ringing, or you got a text message come through. Go long NVIDIA, long NVIDIA. All right. So, that was it. Boom. That trade right there went from, what was it? I don't know, $1.60, $1.70 to 220. It's a nice trade. That's a hell of a trade on those calls. So, right now we're looking at 148, 149. We need this volume to just stop. We need it to just relax. We got this. We finally got this pullback here. It's 11:30. We are coming kind of close. So, the thing is you may not get the continuation you're looking for to the long side, because you may just consolidate here. And if you want to trade it. Just take money. Take your money. If you get paid, I don't care if it's 10 cents, 5 cents. Take your money, because you could just get stuck here consolidating between 135.50 and 134, 135, or like 136 to 135.50. I'm sorry, I'm just shouting out numbers, but seriously, like you could just sit in this dollar range, 135 to 136. Or you go back for another test, which you haven't tested 136 yet, and then that fails, and you don't take your money, and then it pulls back. All the money that you were up, it's gone, and then it starts to break 135. See?
You like Tesla?
Really well. They're staying competitive in China. China's certainly going to keep encouraging EV sales. And I think Tesla's built enough of a name and a reputation and a following there that they're going to probably be okay. It's been fascinating to watch the other Western automakers there, the GMs and the Volkswagens and the Fords really suffer in that market for various reasons. Tesla so far seems to be resisting that trend and immune to the impact so far.
What do you think of the talk about Honda, Nissan, and maybe I heard some rumblings about Mitsubishi even getting in there? What do you think? Is that a smart move if those guys get together?
It's a very smart move,
Necessary?
Yeah, it is. It is. Honda is a small player, but a very talented, capable car company, but they're just not as big as they need to be to compete in today's world. Nissan's big, but they've really fallen off where they had an advantage 15 years ago in EVs, and they never really played that as well. And of course, the whole Ghosn disruption and their leadership issue over the last 10 years. So they really need to, find a partner like Honda who's got a great product and great R&D, and hopefully they can get their finances straightened out because they've got a lot of debt coming. But certainly sharing costs and becoming a larger overall company is what you want to do today in a world where China's got such an advantage on the cost issue. Every other company that's smaller, every Western and other Asian car company that's not as big, they need every advantage they can get. And this kind of a merger is helpful for both of them.
All right. So I'm leaving out a whole bunch. I know them. I see them. Which ones do you want to focus on? Your best winner, your best loser? What do you think about at night? Not the ones we mentioned, some other ones.
The range extender plug-in hybrid thing is huge. And I look at something like the Ram range extender that, by the way, they just moved forward and they pushed the pure EV truck back. Not that they sense any change in the wind, right? But the Ram truck with the range extender, that solves all the problems that the electric Silverado and the Ford F-150 Lightning, these pure EV trucks, suffer from. And I think that's a very telling type of technology. And it's very forward-thinking by Ram to even introduce that type of a tech. And you're going to watch as GM and Ford scramble to start doing the same thing. And other automakers too. There is no range anxiety with plug-in hybrids. And yet you get pure electric travel for a certain amount of distance, and then you get very effective and efficient hybrid technology after that when the engine starts, and you never have to be stuck on the side of the road because you run out of battery power. So that's plug-in hybrids are the future, and the companies that are mastering them, they're going to do well.
There was the one story, as you said, they were suffering, right? The Silverado and the Lightning. There was the one story about the guy who had the Ford F-150 Lightning. He was trying to drive across country and he left it halfway through or something. I don't even know if that's a real story, but I think it sort of tells the tale of folks who are not quite ready for EVs. Hence the plug-in hybrid for the Ram. Maybe that's right where we need to be. People need to transition
notice how
slowly.
people keep saying they're just not ready. No, they'll never like we're going to be ready. Hold on.
But the point is, I think the lots are not necessarily moving new cars, regular combustible cars. What's the price point going to be for these EVs and cars in general? Regular cars and EVs, what are we looking for prices?
Well, right now, the average new car is around $48,000, and the average new EV is around $60,000. And we see that flip on the used market, where used EVs are now around 27 and used cars are around 30. So what does that tell you? That tells you that in the used market, where people are much more price sensitive, you have to give them a deal on an EV before they'll consider buying one. They do sell, and their days on market, when they sit on the lot, they go down to faster than gas cars if it's an EV priced below a gas car on a used lot. So everything you said is true, Nicole. They're working harder and harder. I'm watching them pull more and more of these.
I just want to shed light on this, just from my own experience and what I see from other people. It's not that people aren't ready for them. There's a difference between being able to take a fuel, like let's just say trucks. They're talking about trucks. You gotta have an engine, like to have some type of trust that wherever it is that you may go, you're not going to have to worry about, do I have a charge station? Fuel's readily available. But the more important thing here, it's not that people aren't ready or will ever be ready. Sure, you'll have, like, after my generation and maybe the generation before we die off, then the younger generations from now, sure, they may take a liking to it and you may not have to convince them or whatever. We don't know what they're like because it's not here. But let's just talk about performance and the sound, okay? The fact that you can do your own work, there's trustworthy there on it. It's not that people aren't ready. People, like, when the places that they're struggling are trucks and performance vehicles. People that want to save money for a van or a car to go back and forth to work, people don't have problems with that. I don't think they have problems with that. Right? But it's when you start trying to make everything EV and you start getting into categories of the Corvettes, the Demons, even the trucks, okay? People want to hear that V12, that V8, You can have it hybrid to give it that performance, have the battery there for the initial acceleration, whatever, what have you, but there is nothing like, people want to see it, hear it, feel it. And electric vehicles just don't give that type of, you just don't get that excitement. You just don't, right? It's boring. And those are the categories that they're struggling. A vehicle to run around town, go to work, go to the grocery store, go to the gym. I think that category has no issue. And I don't think people have issues if they can save money. Everyone, I don't care if you're a millionaire or not. If you don't have to spend an extra $150 a week, or let's just say $300 a month, I don't know. I'm just throwing out numbers. You're going to take that all day long, right? You're going to take it all day long. But it's when you start getting into the categories of the trucks. How can I trust that I'm going to take this camper, 3 states away or halfway across the country with my family in it, with my daughter, my wife, or whatever? These are things that people do. How can I trust that this isn't going to leave us stranded on the side of the road in an area I'm not familiar with? Sure, you can have things break down, but you can get fuel practically anywhere. Fuel is readily available more so than electric charging stations, especially when you start getting into the middle part of America, the flyover states, okay? And I think those are the categories that they're struggling. So, like, for them to say people aren't ready, I don't think it's that people aren't ready. I think it's in the categories that people just don't want them. There's got to be a sense of safety for the trucks to have the power to pull it and to not get left stranded on the road. 2, you're getting into sports vehicles where people want to see, hear, and feel their vehicle. That is the joy of it. Not just running a straight line under 3 or 4 seconds. Cool. That doesn't do anything for you if nobody knows you even did it because we didn't hear you go down the track. I'm just saying. So that's where I think it's a case of people. It's not people will never be ready. It's like, oh, are you ready now? Are you ready now? I'm almost ready. I'm almost tired of that V12 Rivolto or that V12 Murcielago screaming down the highway. I'm almost tired of that sound. No, it's not a matter of, are you ready? Are you ready now? I'm on the line. I'm on the fence. I'm almost, I think I'm there, but it's not a case of that. That's not what it is. And I think this conversation on Charles Schwab is exactly the conversation that isn't even happening. I don't even know what the fuck they're talking about, right? So, and the thing is they just brought up, this is supposedly
the
a guy
estimates
who
the company
does work
provided,
in the
which are
field.
around 10.2% for 2025.
This isn't him. Okay, this obviously isn't him. But, for someone who is an analyst in that industry, it's not about whether people are ready or not. The parts of that vehicle market where they're ready, give me the car. Give me the car or the SUV where I can run around to the grocery store, go to the gym, run around town. I'm not going too far. I'm not going, I love to save some money. Hell yeah. And we're saving the environment. Cool. But when I got to tow my camper, I got to tow this trailer. Or when I want to take my car to the car show and I can't hear the mother sucker, there's a problem with that. I don't think I'm ever going to be ready for that. And I think that's just what it is. There's nothing even wrong with hybrids. You just got to have in trucks and in performance areas, categories, you still got to have that V8, V10, V12, bi-turbo, 6-cylinder, whatever, with the battery for acceleration. That's fine, right? But you always got to you got to be able to see, feel, and touch it. That's the whole point of it. That's why people buy it. It's exciting, right? You love that sound. You got the craftsmanship that's also put into the vehicle. You get some titanium exhaust. You got a welder that did it. You're like, damn, look at those welds, right? You don't get that with a battery. So I just think for an analyst, this is what I don't get is when you have people that are in the industry, like who is speaking for everyone? That's are you really an analyst? Because if you were an analyst, I think you would get exactly what I just said and kind of be repeating that. I don't think it's a case of if they're ready or not, because in these categories they're ready, but it's just, when you get to the see, feel, and touch and the dependency part, that's where it struggles. So, but that's it. I don't want to keep repeating myself. So I think it's important to make that distinction on, it's not a case of, are they ready? Are they just not ready? Are they just not ready for the EVs? Oh no, people are ready. It's just when you start getting into the other parts of the categories, it's just, it'll be a case of they'll probably never be ready. And the only thing is they're actually forcing it. I'm glad, let's just say we can use Chevy, but they're starting to go down that path, which is, it is what it is. I think they've came to the realization. I don't know if they just went after this government money, tax exemptions, this, that, and a third, to do it, try it, do the research and development just to get the data. They get paid by the government. I don't know. I'm just saying. They may not. They may have. They're finding out the same thing. We can't make it. We can't make the batteries into the performance vehicles or trucks. That makes it where we are at a profitable stage where it's worth it. Where even if something goes wrong, we still can make a little bit of money. If something goes wrong, if everything goes great, we make a lot of money. But it's just the case that they're not there yet with that. And second, they know, hey, these departments, sure, the cars are fine. We can stick to that. But our trucks and our Corvettes and Camaros, they don't want it. And we see why. They want to see, hear, and feel it. That's why they buy those things. Why do they buy a truck? Because they want to have a trailer and they want to have a camper. And we can't offer, and they don't feel safe driving across the country with it, with their family. not knowing whether or not they have all the charging stations and if the charging stations are going to work, if it's going to be powerful enough to pull it. If there's an issue, then what do? If a hose breaks on a truck, it's not too bad of a fix. You can do that stuff on the side of the road. As long as you don't blow your transmission or engine, you just have a hose, a little overheating issue, or like, a thermostat, like those, I don't know. People, I don't think will ever be ready. Maybe different generations that don't get to experience when, if these companies just completely start to get rid of all these gas, fuel cars, and they're just not there anymore, and they're too expensive. They're like a classic vehicle, and the next generation, all they have and are born into electric stuff, then that's a different story. That's a story of they were just born into it. It is what it is, and maybe the technology has advanced, but you still have a screaming Murcielago V12 titanium exhaust. Like, they're going to be turning their heads and they're going to be like, they're going to hear it, feel it, see it. Oh, they're going to feel it, and they're definitely going to hear it. It's going to bring excitement to them, and that's why you buy those things. They're exciting for you and other people. All right, just screaming down the straight line when nobody can hear you. Did you even do it? We didn't hear you, or we didn't hear you, so we didn't see you. You didn't turn our heads. Did you do that? It's just not, cool. It's not about, I think people misconstrued going fast and having a performance vehicle. Like, the two are not the same. A Tesla can beat a Lamborghini, sure. You put two turbos on a Huracan, that thing is going to smoke. They're actually fast as you know what. So if you guys haven't looked, man, these turboed Huracans, they're screaming. These things are screaming. I think the platform was, I think Lamborghini's finding out themselves that, damn, this platform was really designed for turbos. Because those things are balls fast. Balls fast. Let's see here. All right, so there goes NVIDIA. But once again, can we get that fine? Like, look here. This is where you're going to get played. How many people you think are going long right now? What time is it? Let's see, 11:50. I don't know how much time we have in this candle here, but what did I say earlier? We could get stuck between 135 and 136 and kind of chop around a little bit. So it is almost 12 o'clock. We have 2 hours until we get the Fed meeting, and then the meeting at 2:30. I'll probably post a link on Twitter. Let's go take a look at AI. Let's go here so we can see a few different things here with the overall markets. So anybody that's new here, I have files saved of the SPY. I don't think I've seen this. I wonder if I have it. I don't think I've seen a Fed day with this chart pattern, because a lot of times you'll see the same setups, right? Where you'll put in the range for the day, and then 12 o'clock you'll sit right in the middle of that range. And and one more thing about that space is it's who's winning the space. Tesla just is. Like, you buy a Tesla because you want a Tesla. You're not buying it just because it's electric, right? And I think that's where they're getting it misconstrued. You're buying a Tesla because it's a Tesla. Like, it's not a, it's not your average Volkswagen, Mercedes, BMW. It's like a BMW, Mercedes, or whatever type of car you want to buy, because it's its own brand, right? I think Ford and GM need to stick in their category. Trucks, cars, work trucks, that's where they thrive. If it ain't broke, don't fix it. Same for Dodge. I don't know if they're going to get rid of their Demons or not, or their Hellcats. I think there's a white one at my dad's house. I think it's a Demon, but it's like a drag. It's a drag one. I think it's got drag radials on it. I don't know if it had a roll cage. I didn't look. But I don't know if they're getting rid of those or not. Let's see here. All right, so back to the markets. Let me type in AI here. If you guys have questions or tickers or anything, you guys can throw them in the chat. Don't be... Okay, so yeah, AI did take off on us. Well, I was over here yapping, and it took off. It's all good. Damn. Okay. All right, well, we know our target now, guys. We know our target. So we're going to target 44.33 or 44.40. Let me move this. I want to see a... All right, there's two things here. I want to see a pullback, break, and retest right here at 135. I want to see us pull back, low volume, and then try to get ourselves back above 136. The bottom right, this daily chart, here's your head and shoulders. Right there. See, that's not working. I don't know what I drew this morning. So AI. Okay. So I have... Sorry, there's a few things here. Damn, we could have got this for $1.30. All right, so we're looking at like $1.50. 137 calls on NVIDIA for this week. I might move this. I might go ahead and look at next week contracts, but I don't want to miss AI. So I'm going to wait on NVIDIA, wait for the pullback. We're back above 43 on AI, and I want to look for this move into $44 or $45. Okay. There's just a big problem up there at 43, 43.50. Like, look, like this breakout on the 30-minute chart, top left, you can see where the volume is. It's not on the buy side. Hasn't been, at least. All right, let's do it. Let's do it. 44, 45, 44.50, 44.75. All right, 44.50. All right, I'm going to wait. I'm going to wait for this 15-minute chart. I'm going to wait for that trade line, okay? So whether we wick, this becomes a wick, whatever it becomes, I got to wait. I got to be patient here. Yeah, 45. All right. I thought we would break out of this. It would pull back to it and then possibly fail. But, you know, that's why I didn't rule anything out with this. I didn't rule anything out with this. All right, 5-minute chart. We're really extended. So 40, 43, 43.1. This is the zone we have to... I'm going to look for a pullback hold and a possible buy. If it holds it the way, you know, we get a low volume pullback here and it can hold and we start to extend and I see everything I want to see, that's the level I want to get long. All right. 15-minute. Damn, that's kind of showing us we'll be back below Monday's high if we pull all the way back down here. Now we're back below 43. That might have just been a sucker bet for everyone getting long there. Let's see. All right. Tesla. So we have AI, Tesla. Let's go take a look at GameStop. Take a look at a lot of names here. We'll go through some charts here, get some setups. I have not had a trade on yet today. I missed NVIDIA. It's all good. I am green on the week. That's all that matters. All right, GameStop. Having some trouble there at yesterday's high. And that's okay because just like AI, this thing broke out. It is consolidating. It's consolidating at this range there. Let's look at... I wish I bought Robinhood sooner. This is crazy. Let's go take it over to the other charts because I want to make it easier so you guys can see what it is we're doing. So give me 1 second here. We'll go through and get a game plan here for the name. So, but our top ones that we're watching right now, NVIDIA. NVIDIA, AI. We're looking for that move on AI to go to get us up to 45, 44. Look, it's already extending up there. God damn it. It's all good. There it goes, guys. There goes AI. Was there news or anything with this? Let me see. I saw this setup yesterday, and let's see here. All right. Sorry about that. Let's go check in. We'll check in with banks, healthcare. Nice call out too with UNH. That was a really nice call out. Damn, there it goes, guys. Those shorts are getting squeezed right now. There's that extension higher. Damn. You guys want to look and see where they are? Right? Remember, what were they? 44s? I think we're like 45s or like 50 cents or so. I mean, they're pretty far out of the money. Look at that. They're up 100%. Yeah, because there was 1,000. This was the volume. So these were, we were looking at these, they were 50 cents. And it's already almost in the money. So that's why I say you're going to get a nice gain out of these. It's just like 50 cents, 75 cents. You get $1 on this, it's going to be a hell of a nice gain. Like your first take profit's going to be anywhere from 45 to 80, if not 100%. NVIDIA back down to 138. Let's keep these 137 calls on watch. 140. Come on, baby. Hold. I'm going to go here. Let's go here. I don't know why. I don't know why these. It's probably because of how high it's ran, but it doesn't look like any other of the charts that we were looking at. So NVIDIA 135, that's really the zone. This zone up here. So yeah, you bounce into it, starting to pull back off of it. Damn, we have this gap here too, guys, so be careful. Like I said, there's still some danger there. Not anything crazy, but if somebody gets caught going long playing weekly options or something, that thing decides to pull back and break down, you're going to get hurt. So I just want to let that be known. Here we go, 140. Come on, let's go. Look, we got hourly VWAP. We're holding right here. This is a nice hold zone. Shit, what happened to it? I got scared for a second, like it already got me in it. So I'm looking at NVIDIA 137 calls right now. We're overdone. MACD getting ready to start pulling in on itself, like to tighten up that gap a little bit. Probably getting ready to roll itself over. Boom. So 30 minutes, same thing. Be careful, guys. Be careful. I mean, even if we're oversold, we can remain oversold. Shit, here it goes. It's going to pull back. It's either going to hold or this thing's getting ready to break down a bit here. It's one of the two. I will be buying the pullback if we break down. Let me see here. Like if this thing breaks down and this thing gives me like $1.30 something. If we get this 134 zone, I'm buying. I'm just letting you guys know that. I don't like that we would be back below VWAP and trade line. I don't like that. But I just have to because it's going to give me a price that like I'm willing to take the risk. You know, there just comes a point where let me look at the yields real quick. Let's pull up yields. So we're watching this level right here. I'll keep this up here. It's not the sellers are just they're winning right now. They're winning. Oh my gosh. I'm sorry guys, give me 1 second here. Pull this back. Boom. Joey T. Let's get some Joey T.
Scores as buyers already in there as well. You can make that argument.
Whatever the argument might be, that is the actual momentum score. In the near term, to your point, the 20-day, I'd call it a -2 at this point. So in reality, what's going on? You have heavy speculation over the last month. You have the options market driving the actual stock price. There has really not been very much in terms of a fundamental deterioration been reported in any of the earnings reports over the last 8 quarters. At the end of February, you'll hear the next report.
That's enough.
Could the stock move lower?
I want you guys to know when I do something and when I don't. Damn, they're already up to 146 and the thing hasn't even moved. They're already starting. You see how they're already starting? That's a good sign. They're already starting to raise the option prices when the stock hasn't even moved. All right, here we go. Let's see if we can get this volume to give us a low volume pullback. We could target for a scalp here up to like 135.50 or possibly go out 2 weeks. So right now I have the 137s. Man, they're already up to 130, 150. Damn, because they went all the way down to 130. I knew I should have grabbed them. December 20th. Let's go look at the 27th. We could look for a swing trade. Could be an option. I just thought about something. I drank a Red Bull. I may end up getting tired. I may start crashing by the time the Fed meeting starts. I just thought about that. It's not sugar free. So if I start getting tired, I'll have to do some push-ups. I might do some here in a little bit, but I want to go over some charts after I get these options figured out where I want to be. Damn, so look at this, guys. We can go out 2 weeks out of the money for like the 140s for, you know, for roughly the same price. You could spend 20, 30 cents more. See, those are $3. Oh, never mind. We'll see what happens with Powell. We'll let him decide. For now, I'm just going to scalp, just make my money here. I'm going to use 137. I know it's well within reach. Like, even if I can get 136, right? If I get $1.50, I know I'm making money with these. I'm not too far out of the money. All right, AI starting to pull back. All right. Yeah, I'm not going to go long NVIDIA just yet. We just have too much. There's just too much selling pressure right this second, in my opinion. Oh, wait. I don't know what happened. Did I just get into... See, I hate that. I don't know what happens, but... I looked down and it said disclosure. Like I was hitting something to, like, to like do something with these options chains. I don't like that. I hate that. I think, what was it? It was a couple weeks ago. I don't know if I was live, but I accidentally market ordered into MSTR, and it wasn't until the very end of the day on a Friday where it just pulled right back, and I was so pissed. I was so mad. I was so mad. I was so mad because I had already made money, and I gave the majority of that money back because I just accidentally like had the order up like I do right now. Right now I have the 137 calls up on NVIDIA. So when I'm ready, all I have to do is type in, really, I'm not going to limit order. I'm going to market order in these and just preview and get in because there's like no spread there. I'll pay the ask all day long. All right, so real quick, let's go to the charts. I was trying to watch this pullback here, but it's... All right, I'm just going to let it go. Let it do what it needs to do. All right, so if you guys have tickers, throw them in the chat. Tesla is just still a beast. All right, once it goes, it goes. Oh, you know what? I could save the order. I could save the order. That's true. I didn't even think about that. Shit. All right, so let's go over here. We got stocks that are trending. Okay. We have NVIDIA, Tesla. Tesla pulling back to Oh, it broke previous day's high. Hold on here. Oh, Disney? Disney's moving? There it is. Previous day's high on Tesla. I would be careful with this one. Oh, damn. It's still got room. NVIDIA. I know I'm all over the place. Had NVIDIA. Okay, so here's Disney. I'm not sure what's going on with it. Let's see. NUKK. I don't know if this small cap, why this small cap is trending. Bro, come on. All right. I don't know. My computer's acting slow. Soundhound, Vast Renewables, VSTE, GC or CGTX. So a lot of small caps are leading us today. Uber is trending. ChargePoint. A lot of these things are kind of flat. They haven't really done much. So I'm cool with that. They haven't really done anything. This OKLO is about to go red. Secondly, these are our midday stocks. So what's up with Disney? Let's find this out. NVIDIA back to 148. So it's just trading between that range. All right, pop. So NVIDIA popped more than 4%, reversing earlier to date. QNCO. I don't know. Let me see if it's trending. QNCO. I don't see it. Anyway. Reversing earlier week to date losses that pushed the stock briefly into correction territory. Shares have surged more than 175% since the start of 2024. General Mills, we talked about that. Ollie's Bargain Stuff, Birkenstock, Rivian, Box. Content Solutions stock climbed 1.9% on the heels of initiation from a buy. Okay, cool. Disney, the entertainment giant, saw shares jumping about 2% after Morgan Stanley named the stock a top pick in 2025. People are going to go on vacation. They're not going to lose their job. They're going to gain their job and go on vacations. Their 401ks and their stock portfolios are way up. They're going to go on vacations. Could be true. We'll see. Academy Sports. So there's an upgrade on Disney. Academy Sports. The sporting goods retailer popped 3.9% following Citi's initiation of a buy rating. Expedia. The traveling book agency platform rose 2% after Bank of America's upgraded it to buy from neutral. The bank dubbed Expedia a top value stock tied to the internet. We'll have to check that out. Rocket Pharmaceuticals stock advanced 5% after Jefferies initiated a coverage of Rocket Pharmaceuticals with a buy rating, saying the company has promising pipeline of gene therapies and for rare diseases. In particular, analyst Andrew Tsai expects a clinical trial for RPA501 AAV9, a treatment for Danon disease, will be successful. Danon. And serve as positive catalyst for the stock. Sweet. And Merck was trending. So what does that mean? Do you get the sense of what's going on here? You have that. You have Merck Pharmaceuticals, guys. That could be our I think now might be the time. All these analysts and banks are giving them upgrades. It might be time to start looking at... Can you look at KULR? I can, yeah, man. Sorry, I didn't have the chat up. It might be time to start looking at some of these pharmaceutical companies. And as we saw with everything else, you have your leaders, and then they rise, and then they consolidate or whatever. Then you have the laggards run the rest of the market, or the rest of the sector catch up. Okay, so I actually may start to keep my eye on that, and I may start to shift to that area of the market. I think this one here, KULR, I think this was a stock that was also trending today. Keep an eye on $3. That would be my target. If this thing is gonna go higher, which I have right now no reason to believe that it wouldn't, I would target $3. I'd be targeting $3. You don't have, outside of this pullback rate here, you don't have much. Man, you gotta break above this, kinda. You don't have to, but you want to see this thing consolidate here. You don't want to see 240 in this previous high right there. You don't want to see that break. Sorry, my computer's lagging. Something's going on. You don't want to see this break right here. You want to get above or just sit here and consolidate. And just, pull back, hold, go higher. Pull back, hold, go higher. Pull back, hold. And then by the time you know it, it's later in the day. Whoever got short up here is like, oh shit, the level's not breaking, and then it extends higher because of a few different reasons. So that's what I would look for that. And I would target $3. So if you made money on this and you caught the bulk of the move, take your, I'd be done with the trade. KULR, let's see here. Why does it feel like KULR was one of the names that was trending? It's so weird. I'm not sure if it will. The thing I would say to you is if you're in this right now, where are you in from? Because if you're in from like $1.80, $2, and you've already, you're at $2.50, you got to be taking profits. Just take your money and move on to the next trade. Because the thing is like, you may not get exactly $2-3. You may not get there. Like, because people may start to sell in front of this, and you may only make it to like 280, 260, 270, and you're there now. I think this thing starts pulling back. I just got to be honest with you. I think it starts to pull back. But where does that pullback go? And does this have news? That's the thing too. I don't even know if this has news or not. I don't know what's going on. So, Worthington Enterprise posts upbeat results, joins Jabil or whatever it is. I know that was trending this morning. I saw that earlier. JBL, Jabil. So Jabil is JBL. Increasing and other big stocks move higher on Wednesday. Form factor, RLZB. That's what I would do, man. I would be taking profit. I don't know what significance this news is or what's going on. Announced it regained NYSE stockholder equity required. It's a compliance set. So it regained compliance. I don't trust this thing. I don't know what's going on with it. Be careful, everybody, if you're trading this. If you've traded this and you've made money, take it. Take your money. Take your money. Because if you don't, there's somebody that's going to. And that's the market. And that's the people that have these shares at par value. I'm not saying that people do, but I'm sure that there's somebody that owns this thing from, or was given shares or given equity at, 50 cents, 20 cents. I don't know. I don't know if there's a stock promotion with this or not. I don't know. I don't know much about it. That's the thing you have to ask yourself, Daniel. Like, once you start to learn this stuff, I don't know if you're new, or not, but, if you don't focus on, trying to trade stocks and getting the whole move. Like, trying to take this from $1.50 to $3 exactly. It's not going to happen. Take it from like $1.60 to $2.50. Get out. Take your money. You took the bulk of the move. Your job is not to take the whole move. So here you have a stage 1, stage 2, and now a stage 3. Here's your stage 1, pullback, stage 2, pullback, stage 3. This thing is about done. Could be about done. And you're already up there at that resistance zone. So watch your level 2 and time and sales and, learn to read the tape. And you'll start to see sellers, sellers right now are not in control. But they could be at any minute. Like right now, there they go. They're in control now. They're in just like that. Now they're in control. Watch. There's no buyers up here. Right now, at least. All right. So we said we would look for this range in the 136 on NVIDIA. Nice job if you got those contracts. It's about $1.40, $1.45 to $1.65. It's a nice little range. Nice little scalp, if you want to call it that. All right. So if you guys have stocks, again, throw them in the chat. Let's go look at, first things first, let's look at the SPY. I think we all know we're in a range here. Because it's 12:30 right now. We're going to get ready for this FOMC meeting at 2 o'clock. Or meetings at 2:30. Excuse me. Okay, so the SPY is flirting with Monday's open. I think we all have to recognize the market has ran so much. I have to assume that the market's kind of already priced this cut in. And sure, we could extend. I'm just questioning whether or not we're going to. I don't know, man. This is tough. But either way, 608. The 607, 608 zone is what I'm watching for on the SPY. I was just getting ready to go get something to drink. I hate that I have ADHD so bad. Nice hold here. Let me bring this up so you guys can see it. This level, this zone right here, 605, 605.50. It's like your middleman right there. We're holding the top end of that now. I would look. We continue to hold it. Look for a move back to 607, 608 going into the meeting. Or, you know what? We're kind of double topping up there. I would... Man, if we get back under that... If we get back under this and we... Yeah, I think we stay like right around here. Here it is. Here's the pullback, sell-off going into the meeting. That's a serious double top. Look at Apple. I gotta admit, I missed this one. This was on my watch earlier in the week that if we got back through the range, that this was just consolidating right into the trade line and about to take off. This is a perfect chart of like just a breakout of a consolidation. There's a few things you can take away from this. I would print this out or save it. Look at how you'll notice all the time when Apple goes, it has the same size candles. Boom, 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 boom. Closing at the highs. Right? There's not like a huge tail in there like this candle, that candle. And then it's like it puts in like a $5 day. Then the next it's like $1.50. It doesn't move. And then $2. No, these are all like $3 to $4, all the same. Boom, boom. It's algorithms, like institutions buying this, Apple themselves doing a stock buyback, buying it themselves, whatever, what have you. But I'm not sure if we streamed Monday or not. I think I may have for a little bit, but I talked about this and was like, man, if we get back down here at the bottom end of this 246 range. This daily chart here, this looked ripe for a bull flag, like a wedge. Kind of like it breaks out with volume. And you can see right here, right? Where you're consolidating and then you meet the trade line, bang. And what happens? You have orders that are being put all in here to buy the thing. And what happens? Boom. Consolidates, trade line, the two hit. It's like a bat, right? Like this trade line is like a bat. You swing it, it hits the candle, and then it just goes flying. And again, it's not always going to be like that, but the thing about this is you have a state, you know, you've broken out, you've consolidated for 1, 2, 3, 4, 5, 6 months. And you're extending out of that consolidation. It's already it has momentum. So yeah, there's that. All right. So Apple, I would wait for another consolidation for a breakout. I would. I'd be looking at the daily chart and seeing if this thing, if it's going to go higher. It's going to have to put in like a couple days where it just trades sideways. It's just my opinion. But that was a perfect. I brought this up Monday, and I didn't even trade it myself, and I wanted to look at it. All right, let's look at Microsoft real quick, and then we'll go into like Meta. We'll go into Microsoft. If you guys have any questions or tickers, let me know. I'm going to grab something to drink again real quick. Let me grab some water, and I'll be right back. Keep an eye on NVIDIA here. See if we hold this again and it tries to make another run. Man, part of me wants to go for it, but I can't do it right in front of this Fed meeting. Just be patient. So again, just give me 1 second. Give me like a minute, and I'll be right back. I'll put this on for you. Sorry that I was chewing in front of the mic. And that's another thing with streaming. I can't snack because I got to talk and I have the mic. I don't want to chew in front of the mic with you guys. Oh, emerging markets. That is a good idea.
Great year for U.S. stocks, but what about everywhere else? The rest of the world generally up, but trailing the U.S. One sector still with strong inflows is India, the largest India ETF, up 12% this year. Let's talk with Kevin Carter. He's the founder and chief investment officer of EMQQ Global, which focuses on India and emerging markets. Kevin, your India Internet ETF, INQQ, is the symbol, up 25% this year, rivaling the S&P returns. You said to me before, India is the perfect emerging market. Why are you so enthusiastic about India?
Well, emerging markets, the reason people are investing there is because they have large young populations, a lot of growth, and that's driving consumption. And if you look at each of those areas, India is number one. It's the biggest population, it's the youngest population, the fastest growing, and that's driving consumption. And it's also driving an incredible digital consumption story. So it's really perfect on paper, but it's also got the world's best human talent. There's 25 S&P 500 companies that have Indian CEOs, for example. And you also have, as we've discussed, this digital public infrastructure, the India stack, which is sort of a digital secret weapon that most people don't understand.
Yeah, and here's the list of it. I mean, fastest growing GDP in the world right now. I think it's up 7%, biggest population, bigger than China. 1.45 billion people. The key to a lot of this seems to be technology, particularly this digital identification system India rolled out in 2009. Tell us about that and why that's driving growth in India.
Sure. Well, one of India's big problems, historically, was that very few people had an identification card. And so to handle that in 2010, they launched an ID card program to give everyone a physical card, like a driver's license, but with their name and photo and so forth. But they also scanned their fingers and eyes so that people could be instantly verified using biometric information. And this is now spread to the whole country. 800 million people have opened their first bank account in a matter of minutes just with their fingers and looking into a camera. So there's a whole lot of advantages that this digital stack brings to India in terms of efficiency and growth.
Right. So your ETF focus is on e-commerce companies in India. Why the focus on e-commerce?
Well, because it's the fastest growing sector. I mean, that's been the case in emerging markets for 10 years. We saw it in China. We saw Alibaba, Tencent, and these other, enormous Chinese internet companies, take a huge percentage of the, global market cap for emerging markets. And now we're going to see the same thing in India. India is a lot like China was 15 or 20 years ago, but now you have, smartphones that you can get for as little as $12, and this whole digital public infrastructure, which is like an operating system for India that has even led to more digitization.
$12 smartphones. We're going to talk a lot about that, much more coming up on investing in India and emerging markets on ETF Edge. That's at 1:10 p.m. Eastern Time. Kevin's going to be joined by Todd Sohn from Strategas. We'll talk about China as well and the government's recent attempts to address many of the structural problems that country faces. ETFedge.ca.
Yeah, there's a couple of different problems. There's a couple of different problems with that. I like it. I can trust them more so than I think I can China. At least the leaders, not the Chinese people, but so I'm just finishing these crackers. I only have like 3 or 4 left. I just don't want to chew in front of the mic, so just give me 1 second. We're gonna go scan through some stocks here. And I just wanted to finish these crackers. That's all, guys. So just give me, I just need just 1 minute, okay?
So I'll agree with you guys on that one. But look at this. The low is higher than its predecessor. So that trend is still intact, and it's moving back up into 57 bucks. Great look today for this name, QMCO. We're going to have to pack our patience to see if we can get something, again, off the 10 exponential. I'm really interested in something like that. Crosshairs. There we go. So we're going to keep tabs on that. Did I get filled yet on Nuke? No, not yet. So this one is still a little bit away from my entry price. Let's have a look.
That's a banger, man.
Which one? Yeah, that's KULR. It's coming back down now.
Go.
If it breaks 2, I'm gone. I won't add to this one, though, unless I'll add at 210. That's where the volume-weighted average price, but we're still a little bit away from that right now. But back to Nuke, Joseph. I'm still waiting over here. Let me make sure that I have my order in the right area. I'm trying to shadow the 10 exponential. I may have to move up my order because the 10 exponential is a dynamic level, right? It's not static. So if you're going to base your order off the 10 exponential, then it behooves you to make sure that you're adjusting to that price as it moves up. So we're going to put now at 28.35. That's where we're going to throw the order out there. It's $1 south of where we are right now, but that's normal, especially with the way this bad boy moves. The problem now is coming with GameStop. Back down into 31 again, and so what? It's held up there before. Look at the pattern now. We just talked about higher lows. Let's talk about lower highs. So even though there's somebody buying GameStop at 31, and they have been since 10:40 this morning, here comes 31 again. And, we'll see if someone buys it up here. Maybe they do. But we're still putting in lower highs on GameStop. So I think this is a bad trade for me. Well, I'm going to pack my patience. I've already got my stop involved here with GameStop, but if it gives up BWAP, that's the end of the trade for me. I'm not going to DC8 into this. I'm keeping an eye on QMCO now because we've got a lower low and a lower high on the 5-minute. Here's the look. So I was waxing poetic, to use an Adair term, about the higher low with respect to this 1240 candle relative to the 1235 candle. Now we have a lower high and a lower low on this candle. This could be interesting. Let's see what it does. If it moves back into the volume weighted average price, I'd like to pick this up off a dip trade. It looks like it might halt here, 48.98. It could be a false halt at this level. Let's get this one out of the way and look to the trading screen over here. Yeah, 48.98. It may halt if it's another few seconds, and now we are halted to the downside. The first down halt on QMCO today. It's the third halt, 2 up, 1 down, halted 48.98. The theoretical auction price, eek, 46.29. That is not good. That could change. We're going to be halted for at least 5 minutes here. Let's see where the tap is once this is about to open up. Jose.
Yes, sir, my guy. Just reading something that Katina Man sent us. It was,
what did he send? How come?
Yeah, check your thing there.
Bro?
Yeah. Well,
okay.
insane. But yeah, guys, let's talk a little bit about the. Let's see. Let's talk about the Playmaker poll here, guys. We're putting in some nice numbers. We have about 1,400 votes thus far, so really nice work. Should I even drop the tab to see? Yeah, and sure enough, Sharif, can you guess which side the voters are on? I couldn't guess, that's for sure.
I put long.
Did you? Yeah.
Are you talking about the Playmaker?
The Playmaker poll? Yeah, the Playmaker poll, baby. Let's go.
I put long.
I think we're about 75% long as of right now, as we usually are. So that is not an overly surprise, guys. Yeah. But yeah, Apple continuing to drive higher, testing those highs of days. Did we double top up here? I'm not sure, but I gotta monitor this GME trade because it's not really doing what I want it to. But let's talk a little bit about Apple in the meantime, because we are continuing to push higher, holding up those higher day levels as well too. So I really like Apple continuing to hold these levels. So let's see what happens. I think we do come pull back into the volume weighted average price at some point, because we are slightly extended on that front. But again, no need to fight the trend. If it's going to continue to climb higher, it'll climb higher. But Sharif, I'm going to step out of this GME trade because it broke VWAP now, and I don't want any part of that. Buyers aren't stepping in, so the meme craze has, I guess for this time, has ended. So we don't want to participate in this thing anymore. See you later, GME. And I don't think I'll be trading this one right now unless some serious volume steps in, or it gets that meme craze, or RC decides he wants to tweet something. So again, other than that, not something that I typically trade from a day-to-day basis. And I never traded it during the meme craze either, because I'm just like, it's not my cup of tea. So again, we'll just continue to monitor other things, and we'll keep an eye on that, but I'm not overly interested. CLSK trading really well, pulling back off those highs. We had this ABCD pattern up here, but now pulling back a little bit, which is totally fine. I don't know if we're going to continue because we are really extended from that standpoint. Again, you want to wait. You don't want to buy all the way up there. You're going to want to wait for those pullbacks in order to get a look, and then maybe participate in something that is extremely strong, and that has been CleanSpark on the session. Now, let's go back to AMD and see what's going on with that. We have now pulled back off the highs as well, too, putting in a high a day of around 127.75. Just trading under about 2% on the session, but giving back a lot of these gains from that volume spike that we had earlier on the news about some funding for some GPUs. So AMD and the semis are trading really well, and we'll talk about the king of all semis themselves, NVDA. And we're going to zoom in here and see what we're up to on a 5-minute, holding the volume weighted average price, putting that leg higher, but have the inability to make any new highs of days or test them really. So again, trading in this range, kind of like the overall market. The Qs are a choppy mess. So I think that 2 o'clock it's a big time frame, and I think a lot of people are waiting for it. And I mentioned time and time again that volatility will step in as soon as that announcement comes in, and it will probably just eliminate all this disorderly price action. So keep that in mind. 2 o'clock, unless you're buying the high, or selling the highs on these range or buying the lows, then don't look for that breakout just yet, but just wait for 2 o'clock, because I'm sure something will happen. I don't think it's going to be a nothing burger on this report. The market is really extended and has been on an absolute run. So I don't know which way it's going to go, but I wouldn't be surprised if it goes either way. So that's just what I think it's going to happen on that front. Sharif, what are you cooking up, my
We're
guy?
in Tesla. We're in
Let's go.
TSLA, man.
Oh.
We took it off VWAP. I saw you guys yelling at it. A shout out to Adara, who's trading Tesla again. We got in, where did we get in, Joseph? We got in 45s, excuse me, and then we just took out 75. Now I'm waiting at 82. It was a VWAP hold on the dang TSL. You see that, eh?
Yeah, and GME came back too.
Oh, I didn't get stopped out of that, did I?
No.
Tell me I didn't. Yes, I did it. Okay, so we're good there. Let that cook. Let's see what we're going to do with Tesla now. We're getting resistance at 80. I'm waiting at 82s over here. Let this one cook. Andre, are we ready? Okay, guys, imagine trading with someone else's capital instead of your own. That's what it means to be a funded trader at Trade the Pool. And this is how it works. First, you complete the evaluation program by meeting the profit targets. Once you succeed, you trade the pool's capital, which allows you to trade with up to $260,000 in buying power. That's a lot. The best part is you keep up to 80% of your profits while the firm takes all the risk. It's the ultimate way to trade, whether you're a beginner or a professional trader. So go on and check out tradethepool.com, link in the description, or if you're more savvy, you can scan that QR code on the bottom right of your screen. Shout out to the great folks there at Trade the Dang Pool, and bang! We got that 82 print. Now we're holding one more beak wetter here for TSLA. Let's see if this one wants to curl back up. I've already put my stop below my entry, so not going to give anything back on this bad boy. Feel like I should have traded the actual thing, but you know, that's neither here nor there. We'll see if this one wants to continue up, off that volume weighted average price. One more beak wetter on that bad boy. All right, let's have a look at Nuke. We still didn't get filled on Nuke here, and I don't think I will get filled because, yeah, this one is kind of shadowing the 10 exponential. It's above it. I don't know if I like the look of this one's jib. It's not putting any higher lows anymore. In fact, it's a lower low on this one. So I'm canceling my order here on NUKK. Let's see what this one does. If it wants to set up a bit better, I'll definitely get back in, or I'll get into it. But right now, I'm not really liking it. So that's the look there. Let's see what else is going on. The CDIO. Yeah, look at Nuke. See, it just moved up big there, but it wouldn't have filled me anyway.
I'm still here,
I mean,
guys.
I can't
Just give
chase
me 1
this
second.
in the way that it's trading right now. And I was of the opinion it was going to put in a lower. Oh, it did. This candle just opened. That's why. Okay, I'm crazy. Yeah, so the candle prior to this one did put in a lower high, but I wouldn't have got filled either way on NUKK, so I won't feel too bad about that. But there does still seem to be selling at 30. Whether or not we end up breaking above it and holding above it, an entirely different story. Here it is again, 30. Whoa, there it goes, wow. 30, 60. Nuke, come on, I gotta say it, is nuking to the upside, baby, 157%. This was a quadruple digit winner yesterday. It was up over 1,000%. Don't think it closed that way, but it was definitely there for a time. And here we go. We took 30, but again, same business. We didn't take out the level on a closing basis, and we don't have a closing print above that $30 level. We still have 4 more minutes till this 5-minute candle closes. So, and here it comes down below 30 again. Not surprised by that.
Strike is really weak, guys.
I'm just going to let this one do its thing. By the way, I should tell you guys that QMCO is going to be at least a 10-minute halt.
I'm almost done. Give me 2 seconds.
It could be longer. Both halts prior to that were up halts, they were 5-minute. And now this down halt, the first down halt on the day, on QMCO is going to be at least 10 minutes. So we'll see how this one ends up cooking. Right now, halted still at 48.98. Let me just show you the tap. 48.98 is the halt level, and the tap is 48.41. So that's not too bad, given that it's been halted almost 10 minutes. Usually, the longer it's halted, the more the theoretical auction price dips away from the halt level. Wow, Nuke.
Oh,
Nuke
wow,
just skyrocketed into 33.10. It's going to halt at 33.10 unless it's a false halt here. Let's see exactly what happens. Oh, man. I missed that. Well, I tried. I had a resting order. It didn't come into
I liked it there, too, man. And when you had the breakout, I was like, should I take that?
Oh, bro, look at that. It just rocketed up. It was a beautiful curl. I didn't get the print I wanted. Maybe that's on me. That's definitely on me. But hey, there it is. You got another big boy mover to the high side, $34 HOD. I'm assuming we're going to close here above 30 bucks because it's going to be a 5-minute halt, which means that we're going to open up at 12.57, which means this current 5-minute candle will close above 30. So we'll have to see how this one opens up again. But great move up here. Nuke to the high side. QMCO up big again. We've got a bunch of different trades on right now, all doing decent. GameStop, though, the only exception. Well, how much have we added the money on that GameStop? Where are we long there, Joseph? 31.21. What are we printing here? 13s, yeah, so 14. So we're still out of the money on that. We'll have to see exactly what we get. Joseph Birch nuked us. Nuke 33 halted up. Yeah, man, I like this Joseph guy. He likes these small caps. Okay, Joseph, I like that. Missed the nuke, says HY. I've been yelling about it, bro. I've been yelling about it. I told you guys about it yesterday. What's going on with that hat, Katina, man? Oh, that one. Ooh.
Cash cow, baby.
That's the cash cow. I like that. He got the trade to pool one. He's got the cash cow.
Yeah, he's got the Palantir.
The Palantir. That's a nice hat.
Delivered by Alex himself, straight to.
Yeah.
He's like a snap coming out of the range.
Goes to the top 5 shareholders.
The Katina man says the top 5 shareholders get a.
It goes to board.
Palantir hat.
Goes to board
Shout out to
members.
Katina man.
Goes to board members, no doubt. Yeah, it's a board member hat.
What are you looking at?
We're talking about Snap here, Sharif. A lot of people are talking about Snap here in the chat. Breaking those highs of days in these pre-market levels. Now trading at 1142 in change. So again, really nice look here, folks. We had volume really push through the volume-weighted average price there, and then we had this little consolidation phase, and then continued to the top side. I know there was some news on TikTok, I believe, and with Meta as well. So again, this might have something to do with that. Again, trading really well on. Okay. Okay. So yeah, I was just looking here at Snapchat from a daily perspective, just still trading in this range. So nothing to get too excited about. I don't know if I'm going to look to participate in this thing at all, but I will look to continue to monitor that one, no doubt, especially the way it's trading on the session. But one I'm really frustrated that I didn't get involved with here was TSLL. I know Sharif's in TSLL right now at 39.45, so you're about 30 cents in the money.
I just wasted my time with that. It's funny. Oh no. I accidentally clicked out of something I didn't want to click out of. Give me 1 second here. Shoot. Alright guys, so again, guys, hit the like button for me. Subscribe if you haven't already done so. Thanks for being here. And let's get started. Man, I have to go through all my videos and like delete so many different ones. 361 subscribers. Let's go. We're almost at our mark for 400, baby. We can do it. Let's get to 400 today. We can do it. Let's go. Let's get to 400. Sorry for the extended claps there. All right. So, patience is the virtue. Is this halted? K-U-R-R or N-U-K-K? N-U-K-K? N-U-K-K is halted. Okay, it is halted. All right. So what I would ask is if you have any questions, tickers, throw them in the chat. What I was doing was I was getting everything ready so that when the FOMC stuff came out, we were already on top of it and ready to go. So I was bringing up the I'm on the FOMC website, Federal Reserve website. So today, we're going to get our year-end SOEP, Summary of Economic Projections. And if you don't know what they are, it is just, it's actually a really good tool to not pay attention to. Because it's like predicting the future. But again, it's where we are today. Where we are today is not where we're going to be 3, 4, 5, 6, next year, a year from now. We're not going to be in the same place because it's going to be next year. That's the first thing. Number two, we don't know the environment or the things that are going to happen. Okay? So, if things were to stay the same, is what the Summary of Economic Projections show you, and that's rates. Okay? It's going to show you where the Fed plans on, interest rates, employment, GDP, all that fun stuff, where they think things are going to be in the coming years. So they always change, so don't put too much of a thesis in it, but we're supposed to be around 3.5 to 3%, like in the threes by 2026 year end. Okay, this is about 2 years away from now, so we need to see, which I'm bringing up for you guys right now. What I'm doing is I'm bringing up the old SOEP, Summary of Economic Projections sheet, so you can see, and we can see, where they had us the past year, last year, and where if we're still on track for that. I would think that it gets raised to about 3.8, maybe 4. I'm pretty sure they wanted to go as low as 3.5 to 3%, is where they had the long-term 2026, end of 2025, like end of 2026 or whatever, right around that zone, right around 3%, 3.5. And I want to see, are we still on that trajectory, or do they start to raise it? And that's going to be important. All right, because that's our outlook right there. And again, take it with a grain of salt, because it's like predicting the future. Anything could happen with war, like COVID outbreak, like anything can change that. To where the Fed would have to cut rates to be, accommodative. Okay? So they're still sitting around 160, 150, 140. Now I'm going to it right now. I just want to check in on JP Morgan. I wanted to do a quick look real quick. We got to look at UNH as well. UNH, that was a monster move. That was an awesome call out. Got to give it to Matters, because he just put y'all on game today. Right? He put me on game. So we got to give it up to him or her, but I think it's a him. American Airlines trying to recover here. This is a short that I wanted towards last week. So if you were with us last week, you knew I wanted to be short up there at 1750, 1740, and I missed my entry. It never went back and retested this low, because I kind of like the same trade for AI. I knew if we got short up there at 16, 17, or 17 to $18, we had room down to 16. And that's I think when we did it, it was what? It was a really nice percentage gain. Yeah, it was like that's a 10% move in the stock itself. So, but anyway, so I just wanted to see that. But shout out. Let's go look at UNH real quick. Still running up there, 505, pulling back. Just sitting up here. This is good. I would look for the extension later on or going into tomorrow. This very well could be your divergence here. Is it Dow trying to hang on? Having a nice up day here. 0.3%. Not too crazy, but not bad either. The IWM just can't get out of its own way right now, unfortunately. All right, it's 1 o'clock, so we have an hour. There's just so much I feel like I have to do. And I'm trying to just do it all. It's a lot. I just want to get to it. So I want to put up TLT. Let's go look at NVIDIA real quick. NVDA. Let's post up TLT. All right, and then we go to 4 hour. Oh, we're underneath. Still rejecting this level here. That's not good. That is not good. Can it reclaim it? This is like a double bottom here. But it looks like, okay, so it is above. Let me pull up a 30-minute chart. Here, okay, so a move back to 91. Now, the SPY, the Qs, guys, they're going to have volatility maxed. The volatility, there may not be much volatility, as much volatility priced in on TLT. You can always use that. If the markets start rallying and you see these banks start to pull back and you see yields pull back, if you see yields pull back, watch TLT. Okay, use TradingView, whatever you need. Just go here, type in US10Y. All right. Broadcom. I forgot about Broadcom. AVGO. And look, doesn't this look like it wants to pull back and fill this gap down here at 4.3 on the 10-year? Looks like it to me. Looks like it wants to pull back more so to me and reject this 4.4. That's the hourly. Let's go to 4-hour. And again, that doesn't mean it can't keep climbing, but man, what a rejection. If we can sell this thing off and reject here, I'm going for a long here because I want to see the 10s get back to 4.3. I told you guys that I did want to see it get higher, but this could be the pullback to take us into a new high. And again, I'm still looking for the 10s and 30s to make another new high, and then that be it. That high, I'm looking for. I forget where it was. We hit that. Where did I tell you guys earlier? Dude, I used a 4-hour chart. It's up here. It's up here somewhere. What was it? 4.8? 4.8, guys. Yeah, 4.8. I think the 10s can get back up to 4.8 and retest 4.8. But for now, I want to see us pull back, hold, and then see what happens, going into next year. All right, so if we can get this pullback. All right, so there was just a bill or something that was enacted. And this is, again, where we go back to, well, they can do this, they can do that, insider trading, blah, 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 blah. The information gets released, guys. It's like, and it's only a small portion of their money. If they're worried about their money, like, worry about the kickbacks, like the shady part, like the market, the money that they make from the markets. That's kind of their net worth, but it's the money that they get to put into the markets. That's what we all need to be concerned about. Where are they getting all these kickbacks from, and are they okay to be getting the majority of those kickbacks? Okay, so 30-year here. Now I'm pulling this up for TLT's sake. If we can continue to reject 4.6, pull it back into 4.5. Let's look at TLT. Okay, let's go to charts. And the reason I'm bringing this up, because I'm telling you, man, the SPY and the Qs, they're going to have high volatility. So that means even if you get the direction right and you're trading options, you're just not going to get paid as much as if, let's look at like a TLT, where we could get this bounce back and get like a 91, hell, maybe even like a 92 or something. Let me pull a 4-hour chart up here. I'm still like, look at this. Like, I'd like to get to 92. That would be sweet. I'm not saying we're going to. Let me pull this up real quick, guys. I want to see it on a different time frame because my monitor is just too wide, and it's like just too much. It's too much. I can't see it that clear. All right, so 91, we rejected it. We hit it. We rejected it. Let's see if we can work our way back up there if yields start to pull back. And that's what I'm looking for. All right, I want to see if yields start to pull back. I want to put on a position with TLT and see if we can bounce back to 92. All right, targeting 91. I'm going to be taking profits at 91. That's if they cut rates, and that's if yields pull back. But look at this. These things are selling off massively. So let me go back here. Let's go here. All right, so that's the 30-year TLT. See how this is putting in like a double top there? Right? This is like a double top, and then we see TLT putting in this double bottom. Kind of one in the same, right? We get this pullback. all this whole consolidation zone right here. Boom, 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 boom. All right, it pulls back. Consolidation zone. Boom, 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 boom. Instead of pulling back, it bounces because it's inverse. Boom. Okay. You get the sell-off. This one, it's not selling off because it's rising. Right here. It's rising. You guys get this. I know some of you guys know this, but there's people that may be viewing this that don't have much of an education here. Let's look for this move back down here. So this is the zone right there. Let's look at TLT. We're looking to get back. Damn, 93. This could be a big move, guys. This could be a big move here. It could be. This could be a really nice move. All right. This could be a really nice move. So get prepared. Get ready. All right. All right, so that's one idea that I'm watching today. TLT. You know what? That 4 hour on the 30, 4.5, that only takes us to that gap. We may only get this. Is that a 4? So that's a 4 hour. So I'm looking at it through here. So that's what I have here. Boom, 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 boom. Boom, 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 boom. Okay, and then... No, that's like 91.50, I think. We have the gap fill. 4.5. Here's the gap right here. Oh my gosh, come on. And then the little bounce into it. All right, so that's what I'm watching, guys. That's the zone I'm watching. I want to see if they pull back. Yields pull back. I want to go long. I don't know why the stream, whatchamacallit, just went all the way up. So, all right, we didn't have anybody comment. All right. Okay, so that's that. Let's go to... Let's listen to this guy real quick while I get set and ready. This is exciting. This is really exciting, I'm telling you.
It's 290 or maybe 3%.
Get prepared.
We think we know better. We're going to price it 80-something basis points higher. I suspect the Fed's going to chip away at that. Yes, the Fed's going to move a little bit closer to the market today, as Steve Whiting said, but in time, over the next, call it 3 to 6 months, we think the Fed is going to signal that it's not going to finish quite as quickly as the market believes. So we still think the market's got 2 little cuts baked in for next year and also for 2026.
Yeah, not a lot of people have that view. I mean, Kathy, you can come in here. You're kind of in line with consensus.
Well, that's the view I just
Most
gave
of the people
you
I hear
guys.
from are concerned that we're going to have.
I hope my mic
all of a
wasn't
sudden the
off.
long end gets disorderly again.
You know, that by
the risks are really more to rates going.
Understanding by 2026, they're going to have rates pulled down to damn near 3.5%, 3%. That was their last target. You know, we got to see, is it still there? That's going to be the question. All right. Now I'm getting all that stuff up right now, so just give me 1 minute.
As you said, I think the risks that they do less, and the risk for interest rates are on the higher side. And it's the things we don't know, right? It's what policy changes do we get on tariffs and trade and immigration, and even deregulation to some degree. But I think if we get big changes on policy and that affects inflation and it starts running higher or even increases, then the Fed's got to pull back and do less. And that's really why it is a difficult meeting. It's a pivotal meeting for Powell and the FOMC, but it's difficult because there's so many unknowns about policy changes for next year.
Yeah, Stephen, I could paint a scenario in which things look more dovish next year, and it would basically be, you roll over to the new year. We have the tougher comps on inflation from that hot period a year ago. You get Trump in office, who I think will be disinflationary in many ways, tariffs and all the rest of it. I mean, if they're not increasing the money supply, tell me how we're going to get meaningful inflation kind of in the medium to long term out of that. So potentially a break on the economy. There may be a little bit of a break on the government spending portion. So I can kind of add this all up to kind of even to below trend growth if you don't get the benefit from the business cycle kicking in until later on.
Look, if a variety of things go wrong, the uncertainty over the 2025 outlook, it's going to be an interesting time to see what the Federal Reserve says. Now that we're in the post-election environment, where they go with their 2.0% growth forecast and inflation forecast for next year. But the bottom line for us is that we've had a lot of things go wrong in the economy. Construction, trade, manufacturing, a lot of these things, and they haven't kicked into full gear. We've just seen a very strong rise in small business confidence, even consumer expectations. Now, I don't think that that just drives the economy higher, but the Federal Reserve is doing what it can to protect the economy now. And this has always been a yield curve steepening environment when the Federal Reserve is going easy on inflation and will eventually move in, we think, in that direction.
So you actually have an interesting take on how we got here that might be relevant for those trying to figure out how much longer the business cycle can keep going.
Right.
And you think we had kind of a stealth recession in 2022. The market bottomed. We've started to turn. So just kind of walk me through what are the implications of that?
It took us a few years.
Absolutely. We had a bear market in 2020, which was, again, an external shock. By all of the monetary tightening in 2022 gave us a lousy economy in 2023 by many measures. At the low point, 1.3% year-to-year growth. The bulk of industries, again, at contracting profits. Banks tightened lending standards for over 2 full years. And now we have some slack in the labor market. So in many ways, we could have an incipient recovery here.
But incipient recovery, meaning we're already a couple of years now into this event, right?
And yes, it's really not meaningful to think about, this being so long in the tooth that we can't have several more years of growth. It is very possible, again, if there are no big shocks from policy, and that includes monetary policy, for the economy to spend the next few years growing. I think the stock market reflects that for our large caps, but this is very possible for us to go through the next several years doing nothing but growing.
Michael, what would you add to that?
The problem is shocks seem really likely. So Donald Trump's a pretty motivated guy to come in and make a lot of change. Can the Republicans do it via legislation? We don't know yet, but can Trump do it via tariffs? Sure. And if you think about the tariff impact on growth, it's very negative. So from our perspective,
let's see here.
We'd say the chance of recession has gone up. Not necessarily a base case, but it's gone up a fair bit, I would say, from November 4th, right before the election. So when I think about all the outcomes for 2025, you think about some kind of decision.
So it should come up right there. I'm scared that it won't be posted. I feel like last time I was here, it was never, like, when you refresh it, it never got released. So forgive me if you guys know that I'm in the wrong place. I want to make sure that I'm not in the wrong place. But I think this is where we would refresh this and it should come up. And we can bring up, okay, the last summary of economic projections, which would have been, I think, what? It would have been summertime. Implementation of notes. Let's turn that off real quick. I'm really excited about this because I'm telling you guys, I'm already, if yields do what I think they're going to do, like I think we can get that pullback. I'm really watching for 91.50 to 93. 91.50. See, that's the thing too. We also have this possible shutdown looming. They're trying to pass it today, they said. 91 to 92. Okay. Or people are already starting to buy it out. Look at this. Look. All right, let's listen up here. Let me finish what I was doing. I just want to make sure we're ready for the stream and have everything. It's 116, 130. 130, we'll go through the tickers. Or, excuse me, I'm sorry. I didn't mean to do that. 120.
That all of these
as soon as I'm done, we'll go
are
through
being
it.
crammed at the last minute into a must-pass bill rather than getting their own separate votes. Congressman Ralph Norman said it is exactly what voters said they don't want to see.
First of all, very disappointed. We're doing the same thing the voters on November 5th said we shouldn't do. They voted for accountability, voted for change, and we're doing the budgeting process. 1,400 pages we have not read.
Now, lawmakers aren't the only ones who are upset. Elon Musk took to Twitter today to say that the bill should not pass. And Vivek Ramaswamy also weighed in, calling the bill an early test of Congress's commitment to cutting spending. In a lengthy post, he said that the package is, quote, full of excessive spending, special interest giveaways, and pork barrel politics, He says if Congress wants to get serious about government efficiency, they should vote no. Now, it's not clear exactly when lawmakers will vote, but Democrats will absolutely...
Did anybody trade this? Is there anybody that's here that traded this today? I'm curious to know. This is a wild move. I mean, you're talking this thing pulled back and held initial morning high at $22. It's all the way up to $42 right now. I should have been focused here. This is one of the most important things, and I'm telling you guys, if anybody is listening that is new, the most important aspect to trading and being able to be consistently profitable, in my opinion, it's going to come down to your daily stock selection. The stocks that you're trading and why you're trading them. Okay? Like, you know, it's trending. That's where everybody's at. Like right now, SoundHound's trending. It's the #1 stock right now. SOUN. Okay? This thing could, start seeing if this thing starts to get some volume in it. Oh, it is going parabolic here. Hold up. Let me pull this up. I feel like I might have to raise this up a little bit. I wish I could get rid of one or both of these. Like, how could I do this? Let me see. Could I hide this? Could I hide it? I guess it is hiding. Let's see here. I want to raise this up a little bit. Damn, it's still up there. Shit. Oh wait, it did just do it. Hold on, I think it did it. Unless something... Oh no. What did I do? I don't know what happened. I'm not sure who's calling me here. Give me 1 second. Must be thy wrong number. Anyway, okay. Let's see here. All right. So we have everything ready. So we're ready to go. We can just, now it's stock selection. So as I was saying, again, listen, this should pop up here. News and events, press releases. I think it's right here. Meetings, calendar, and information. I'm pretty sure it should pop up here. I'm pretty sure. Implementation of node. Let's see here, because I wanted to bring up the press conference. Projected materials press conference. Summary of economic projections. So this is the projections model of September. Let's see. Summary of economic projections. Okay, so here we go. This was in September, okay? So why does everything look different? Okay. Let's see here. Okay. 2026. Look at this. Federal funds rate 2.9, June projection 3.1. So they're aiming for just as of September, they were aiming for 3%. Okay, that's the median. That's your median. Okay? That's median 1. The second one, the tendency, 2026, 2.6 to 3.6. So my point was 3.5 to 3% is what they were going for. Are we still on that route? That's what I want to know. All right? Because if you start to see that rise, then what's the market got to do? Okay, rates are rising. Rates are not, or the short-term rate, they're not, they're not being as accommodative as they once were. So I don't think it has that big of an impact, but it could. Because then what could happen, you could have a scenario where if things continue the way they are, if they raise the outlook later on down the road higher this time and things stay the same on our next summary of economic projections, who's to say that they don't keep raising it if nothing happens? The unemployment rate stays where it is, GDP's okay. Do they start to go back and tighten? That's technically what that is. They're tight. Believe it or not, even, they're not raising rates, but they're raising the target. Okay? And that's been up for debate. Where should we be? What is the word? I'm trying to think of it right now. What is not restrictive policy? God dang it. The word that I'm looking for is, where should the neutral rate be? I guess it would be the neutral rate. All right, and they're trying. They don't know where that would be. It could be at 5. It could be at 6. It could be at 4.5. You'll never know. Okay, but things are okay for right now. So that's what I'm just. I don't want to read too much into it, but that's what I'm watching for. I'm watching for this 2025, 2026. Do they change? Okay, and this was the very last one that they gave us. Now we can go, all right. Now we'll use the median number 1, 2026, 2.9 Fed funds rate, June projection 3.1. We can go back, okay. Let's go here. Where'd it go? Hold on. I didn't know that it moved on me. So if we go back to this, which was the first one of 2024, look at the median number 1. It was still around the same for 2026, 3.1, 2.9. 2.6 to 3.4. They haven't really changed that, which is good. Okay, now if we go back, let's go to 2025. They had core PCE inflation around 2.2. We're not there yet. I mean, we're on our way there. Okay. PC inflation June projection to 2024. Unemployment rate 4.4. We're there. They're on track for that. But look what they did with the unemployment rate for 2025 and 2026. They don't have it going up or down. They have it staying right around the same. Right? They have it staying right around the same. So how do you obtain that? You have to have restrictive policy. Restrictive as in you have to be somewhat easing. You don't have to be providing liquidity, but you have to be able to make it easier for people to borrow, for money to move and be created, I guess you could say. So I think we're at 4.4 right now, and we're not even into 2025. So this was already kind of beaten. June projection 4.5, and we're there. That's where we are now. So this is why it's we got to do a deep dive in this. You know what? Maybe the best time to do this is after the meeting at night, where we can look back at it, go through all the other ones, and really examine what's going on. But again, that's what I'm going to be watching though. Is first off, where are rates? Okay, let's go to June. Let's go look at the June projection. Okay, let's look at this June projection. And they had 2024 unemployment rate at 4%. This was June. Let me go back. Let's go look at the last meeting. Let's go see how far off or on they were from unemployment. Actually, that's rates and unemployment. That unemployment rate's the bigger kicker. Okay, so they are. They're right in line. So unemployment rate, June projection was 4.0. It's 4.4. All right, so that's that. So I should be able to refresh, and this should come up when it's released. Wait, this says released November 26. I don't... What? I know... I gotta find out where it's at. I think this is it. News events. Let's see here. Data. Yeah, this should be it. Here and press releases. No, not press releases. Here and news events. No. Hold on. What in the heck? Hold on, guys. Where was I at? Meetings and calendars and information. Okay. Am I still there? Yep, I'm still there here too. Okay. I thought I found that page on a different part of the Fed's website, but it's not. It's the meetings, calendar, and information. Okay. Home, monetary policy, FOMC. Okay, cool. All right, so let me post this one more time or get it started for Twitter. Let's let them know that we are live so that we can do the damn thing. Let me do this for you guys too. Let me let's go here. Let's bring up. So we have a half hour. We're going to get ready and go through our charts.
On the 13th. Again, you know, I have no proof, obviously, of this, but it seems awfully convenient that these quantum stocks started moving without reason right 2 weeks, maybe a week and a half before Google announced Willow. So maybe somebody knew something, because I was looking for reasons why these quantum names were running before Google announced that whole thing with Willow. So yeah, there's nothing you can really do about that. We can look at it ex post facto, but this is kind of the look right now on the daily for QUBT. I mean, it's parabolic, and it's not giving anything up. And these small cap gappers, if you've seen the charts on these small cap gappers, oftentimes they have these big wicking days where the high is like way higher than the closing print. You'll see the majority of the candle is a wick rather than the body. You're not seeing that here. We're closing out at the highs almost every time, except for obviously this consolidation zone, which ended up being quite good. But yeah, interesting here for QUBT. It's taken 24 bucks. As I mentioned, 24.48 HOD. Very respectful of the 10 exponential on the 5. We'll keep tabs on that one, Joseph. NUKK still halted at that 56.67. Tesla, and by extension of that, TSLL still, holding above that volume weighted average price. We still have lower highs, with that flat bottom being VWAP on TSLL. It's about 39 and a fifth, 39 and a quarter. It's putting in lower highs, as I mentioned. I put my alert at around $40.07 to account for this candle here at 12.35. If it makes a newer high above that candle, I'd like to be able to get in. You know, a cursory view will show you maybe this looks awfully head and shoulder-ish, with that VWAP area being the neckline break. We'll have to see if that manifests. TSLL, not TSLA, is down 1 2/3. So keeping tabs on that. Let's flip back to the 5 on this one. See what else is going on over here. Yeah, not much for me. I mean, my positions are all decent, but not really doing anything. Oh, QUBT took out the high. Okay, there it is. Now 24.80. QUBT took out that high at around 50. 80 is now the high day, 45.80. This one's really getting a nice move up. Volume stepping in as well on QUBT. This candle here that closed out at 130 had volume of around 2.5 million shares. So that's quite a bit here for a $24 name. So you're getting that kind of strength. NUKK halted down 51.03, still well above the 10 exponential moving average on the 5. Keep your eye out on that one. I've got really nothing else other than the ones I've got on here. CDIO has been boring me to death. We're about 4 pennies out of the money. But GameStop holding above that level again at 31.10, trying to move back into the upside, Joseph.
Yes, sir. I mean, the NVDA putting in the session that I think a lot of us been longing for the past little while. I mentioned this time and time again. We had all the Mag 7 peers continuously making all-time highs. It seemed to be day after day, and NVDA was the one selling, kind of holding the overall market back a little bit, if you even want to call it that. But now it's looking like we're starting to participate a little bit better, up about 4.5% on the session, continuing to move to the northeast is exactly what we want to see from this stock. I do think, I'm not going to say it's a complete turnaround, because there's nothing from a volume standpoint that is indicating like, hey, we're not going to look back. But I mean, this stock, you can't count Jensen out. You can't count this company out. I do think that it's going to continue to move to the northeast, especially the way we rejected and that daily candle print that I mentioned for the past 2 days. We got that print. So that's something really exciting for NVDA, because I think it's going to help the overall market continue to move. And Apple still trading higher. Let's zoom in a little bit here, guys.
QuantumScape
consolidating
is going
around this in between 253s and 254. Okay, so during this announcement, during this FOMC print, you're going to see this go in one direction. Obviously, if it goes north, it's going to create new all-time highs. This thing is absolutely phenomenal. And again, we talked about this yesterday. I think around the $270 price target is when you're going to see that $4 trillion market cap, the first of its kind. And I think it's going to happen eventually soon. So again, we're going we're going to continue to hold that. But guys, it's time to pay some bills. E-Signal, trade smarter, not harder. Upgrade to an elite trade.
All right, sorry about that. Sorry, I just wanted to get this out. So we have NVIDIA, Palantir. I'm just going through really quickly all the stocks that are trending. AVGO, I forgot about that. Let's see here. Let me go here. And then let's go to QMCO. We have Uber going too, ASML. There's a lot of names, just random, like randomness, like Palantir. All right, Palantir. TM Toyota's up almost 4%. UNH, which, you know, shout out to Matters there. What else do we have here? So Toyota, Target, Dollar General. So your laggards, well, Palantir is not a laggard. Snap. Let's see here. Uber, PLTR, Semis, the whole healthcare, Cigna, CVS, Cigna, ELV, Elevance Health. So that whole sector, the whole healthcare sector is doing really well today. All right. Let's do. I have UNH. Let's do this. I have that. So 23 million. So I was just looking at some of these names, and I'll pass it along to you guys if you guys want it. NUKK. I think I heard my cat. All right. I did. I feel so bad. She just has no idea. All right. I'm just gonna put this. Let's see. Got Boeing. We'll just do TS. Oh shit. I thought I ended the stream for a second. LCID. SoFi's getting ready to go red, you guys. For anybody that's watching that. AMD's up nicely today, too. Pretty much all semis are. QS or MU? All right. All right. All right, let's go. So I told you guys TLT. Let's go to the charts here. Let me pull up. We have the Fed meeting or the see, summary of economic projections. Everything should be here. It should load up right down here. We should be able to refresh it here in about 15, 20 minutes. NVIDIA back above, guys. NVIDIA back above. I was going to say, I'm a little worried with that volume, though. So all we ask, hit the like button, subscribe, give back. It's Christmas time, you guys. Give back. All right. The stream contribution link is in the description. We're going to have the meeting here live. We're going to go through the summary of economic projections. We're going to go see what has changed and what hasn't. We're going to see what the market does. And according to what it does, we will relate why it's more than likely doing what it's doing once we go over the summary of economic projections. All right, so NVIDIA, like I said, it's just consolidating up here. It's having a really nice day. Let's go to... There's so many just like small caps today going. It's insane. QuantumScape. This thing's just on a roll here. And then what was the other one? So SEDG, this is pulling back. This could be a nice little short, possibly, but I think you're going to have some support at 1545. You know, I think you could short this back down to 15. SEDG if you guys wanted to. All right, your stop would be above 1612. Like you break through 1612 and it looks like it's trying to hold 16. You got to get out. I want to make sure I have up the yields. I'm curious to see if we start getting a move here. I'm really curious to see if we start getting an early move, guys. Do they front run the move? We've had it the past few meetings where we kind of knew what was going to happen. We didn't know, but there was enough conviction to where you just saw massive buying, just going into the stuff, and because worst case scenario, even if it kind of goes against you, any bounce backs with volatility, you're going to make money just on the volatility itself anyway. You know, if you're doing it correctly. So, all right, let's get everything set, guys. Here we go. 15 minutes. Get your pens, get your papers, get your drink. Get ready. Let's go check in on Bitcoin. I forgot about MSTR, you guys. I forgot about MSTR. I completely forgot about that. I completely forgot about MSTR. Just trying to hold. Migraine. All right, so QuantumScape is up at resistance right now. or at least an area of resistance. You could say the resistance is really up there at $6. But it looks like 550 was the bigger zone. Yeah, rejecting 580, trying to. All right, let's see here. Disney pulling back down, so we have NVIDIA, TSM. Let's look and see if TSM still up at that zone. I want to look at, just check in real quick on like everything. Oh my gosh, I do not want to correct the bar. Okay, so TSM up here at resistance. It's not really one that I would look at for a short. It's not really a weaker name, but it is up at resistance. Why is... Oh my fucking God. This is what I can't stand to CNBC. Right here.
About concentration risk. If traders are mostly in the same boat and the same positions, it means they're all going to be potentially in the same sinking boat, Kelly, if something backfires here. Oh.
So have some responsibility for your money and take your money when you get paid. If you don't do that, that's on you. If you're investing all of your money in shit companies, you should be expecting shitty results. Excuse my language, I'm just saying, you know? So I don't know. I'm excited for this meeting. I'm just going through real quick and seeing.
You can make an argument
where it is that I
performed in the first half.
I want to hear back from you guys. Hit that like button for me. Subscribe.
I think is doing this without the AI bid.
What are you guys watching? What are your guys' thoughts? What do you think Tim Seymour is about to say? Do you think he's trying to trade TLT going into this meeting?
At 36%, if you include Broadcom, or 34 and change without it, that you weren't going to see this kind of a concentration at the top of the S&P ever again. And I think as we go into, here we are, and as we go into 25, I think the dynamics around equal weighted, which were looking so strong up until Thanksgiving and have underperformed pretty massively.
Why is that? Do we ever know why, or what does it tell you?
Well, I think it's a combination of just fund flows and where we've seen a little bit of the chase into year end. I think that if you think about, there have been catalyst drivers around Google. There have been catalyst drivers around certainly a handful of the other names. Even Amazon, I mean, their third quarter numbers were an inflection in profitability. I think there are places where there was a lag and there was an opportunity, then all the usual secular dynamics there.
So a lot of people would say, you know, Tim, now that the concentration being what it is, the outperformance being what it has been, you know, next year it's going to be a different. And I think it's hard to take that line of argument more seriously because we've heard it for about 10 or 15 years now. But there, at some point, you know, and even beneath the surface, there's some churn happening. You know, Netflix is no longer in there, but it could be.
Yeah, it could
Here comes Broadcom. It's effectively. So what is that dynamic that you really want exposure to?
Well, and I think you have to think about this also from a valuation perspective, and people, when they bring up their forward valuation for the S&P, you have to understand that those concentrations we just talked about, these are companies, you know, even outside of the higher PE names, and even maybe NVIDIA, which isn't really that bad. But the bottom line is the concentration of the earnings profile of these companies is also really important. So if you look at these companies on an EV to sales basis, they're expensive. If you look at them on an EV EBITDA, I don't think any of them are, you know, there's certainly, I would say, a lower portion of these Mag 7 stocks that are trading at the upper end of a range. In fact, the profitability, the year of efficiencies, all of this stuff, the gross margin profile.
Alphabet was crazy cheap until Gemini a couple of weeks ago. So even I'd be curious if Apple is actually trading at a higher multiple than NVIDIA right now. But regardless, call it around 40 times. So the reason to stick with them then is you think that this is where the earnings growth is. So we know the rest of the market is contributing more than it was a year ago. So is next year a case where we have rising growth in the big tech stocks and rising earnings growth amongst the rest of the market?
Well, first of all, and to dovetail what Kate's segment
Here I am talking with the mic off. I didn't know that I was. Look what the SPY's doing. It's consolidating right into that 20-day moving average. We were just talking about Apple and how, and what it did with its, when you have strength like that, AAPL, look at this. I talked about this last week and going into Monday, this range. Consolidate, bang, extend higher. But this is a different type of pattern and setup than the SPY has, but the SPY still has strength, just not crazy strength like, it's an ETF. It's not like Apple. So, all right, here we are. Right in the middle of the range, kind of. Here goes the front running the move. It's what they're doing right now. Oh, I'm excited. Who's all excited? Let me know in the chat. Hit the like button for me. Clap it up. Clap it up. Give me some hearts. Give me something. Give me the 100s or whatever's, the little emotes. Let's go, guys. And girls. Sorry, I was just eating a cracker or two. I'm excited for this. NVIDIA's still just hanging out. At least the calls are. So what is this?
China has, in fact, hacked into our telecommunications providers, some of them. And the extent of it is quite serious. And I should say that in response to that, we have taken action. We in the federal government have stood up a unified coordination group, a multi-agency response to this hack. Just today, our Cybersecurity and Infrastructure Security Agency published mobile communications best practices that everyone should read, especially people in positions of responsibility in the United States government. It's a very sophisticated hack. I can't speak publicly to how it occurred, but the telecom providers are focused intensely on it, and they are working in partnership with us publicly, responsibility in the United States government. Just today, our Cybersecurity Coordination Group, a multi-agency response to this hack. Just today, our Cybersecurity and Infrastructure Security Agency published mobile.
So what they did about it was published
communications best practices that everyone should read.
So go read it. They haven't physically done anything about it. They're just letting you know what had happened, even though he's out here on TV telling you what happened.
Especially people in positions of responsibility in the United States government. It's a very...
We need somebody with their balls dropped. I'm sorry. I don't know what this guy is. Mayorkas or whatever his name is. But... Oh, here it is. Here I go, talking about this dumbass. All right. Here we are. Let's get it. Refresh. All right, here we are. NVIDIA pulling back. Shit. TLT pulling back as well. Can you guys hear it? Hold on. I'm going to give you guys this. Give me 1 second. Let me look at this. My stuff's going crazy right now. Must have been China breaking into the
timing of additional adjustments. Now, the Summary of Economic Projections says it raises the average expected rate to 3.9%. That's an additional half a point than what had previously been forecast, or just 2 cuts now projected by the committee, by the average committee forecast, down from 4 quarter-point cuts that had been projected. Same for 2026, which now goes to 3.4% expected from 2.9. So that discussion you're just having, yes, the Federal Reserve did indeed reduce the number of rate cuts it projects for the average committee member next year. The neutral rate is now 3.1, up from 2.9%. One dissent, New Cleveland Fed President Beth Hammack, who took office just a few months ago.
Oh my God, here I am talking and yelling to the mic. But guys, this is exactly what I said. Exactly what I said. If you see them raise the long-term rates instead of 2.9 to 3, 2.8 to 3, 3.2, and raise that up, this is them tightening in a sense. Look at this. Wait, so we have 2. Hold on 1 second. Listen to this. Let me go back and read this. I'm sorry.
Forecast, that is.
Give me 1 second, but this is exactly what I talked about, guys.
Over the next 3 years. And one more thing, the more important issue of inflation, where the core PCE is seen up 0.2 to 2.8%, 2.5% the next year, and then it gets down to trend in 2027. That's the 2% number. So quarter-point cut, still considering additional cuts, but considering fewer or forecasting fewer cuts than it had been in the past. Tyler?
I told
Thank you very much, Steve. Back to you, David Kelly.
Fewer
Looks like
cuts
you
than in
kind
the
of
past.
nailed it there, David. You said down to 2 cuts from 4 next year, and that seems to be exactly what they said.
Yeah, this doesn't surprise me at all. And I think what they're trying to do is lay the groundwork for being able to have, a more cautious approach to monetary easing next year.
Yeah,
Right now there's sort of this lull between administrations. I think at some stage there's going to be some pressure on them from the administration to be more easy. So I think they're trying to sort of put a stake in the ground, saying, look, this is what you should expect from us, so they can try and avoid or postpone any fight with the administration next year or in 2026.
Stephanie, your reaction?
Yeah, I mean, rates have moved a little bit on the back of it, but the market was looking for the Fed to communicate that they're going to slow down their pace of cuts, and they certainly did.
So I'm going to show you guys this. I keep hitting the mic like I have it off. This is from September. Okay. Fed funds rate for 2026, 2025. 2025, 3.4, 4.1, 4.1 being the June projection. 2026, 2.9 to 3.1. Now let's go back. Okay. Let's go back. What do we say? 2.9 to 3.1, 3.4, 2.9. So exactly what I said was, hey, we need to see what they decide to do with the long-term real rates, because nothing is showing that they need to tighten or soften rates much more than where they're at. Sure, there's a lag effect, so it's going to be down. I wouldn't be surprised if you see them push it up to 3.8, you guys. Honestly, 3.5 to 3.8. I think you get the 3 out of there. So this is exactly what I talked about. This is exactly what I talked about before this meeting. And there's nobody here, unfortunately. That's the bad part about that, is nobody was able to learn, kind of get that type of valuation here. So we have, and I think you're going to hear it from Powell. This goes in, this would be one of my questions if I had the opportunity to, interview the Fed, interview Powell on today and say, hey, are you thinking that you're a little bit, you think it's safe to ease? Are you assuming, it still hasn't been but about a year and a half to almost 2 years. There's still that lag effect. Do you think you could be doing this and quite possibly could be getting caught off guard? But the point with that is his return on that would be, if we raise the rates, it gives us more room to lower rates if there is an issue. That would be his, that's their, in my opinion, that's their base case for that type of scenario, if that makes any sense. Where if they're raising the 2026, 2025, Abby, hold on. Raising 2026 to 2025 rates, okay, things are still good. We're going to stop cutting here. If something happens, we then have more room to cut. We're going to wait for something to happen. We've eased a little bit. Now we're going to wait and see.
Is like, because this is not an inflation-prone economy. But if you look at financial markets, there is a lot of bubble and froth in financial markets right now,
guys.
And you could argue that interest rates are not too high when it comes to financial markets. And I don't think they want to encourage any more speculation in markets right now. So I think they're trying to avoid that. And that's why they really have to think not just about the economy, but also about financial markets.
Jim, let me bounce that idea that David just mentioned off of you, and that is the thought that maybe the Fed is a little worried about cutting too much, because then they would fear the political blowback if they got to a point where they had cut what they thought was too much and feel that then they have to start raising rates. And we know that the incoming administration, President-elect Trump, is a fan of lower rates, not of raising rates, of rising rates.
Yeah, so this is a really good nuanced point, and I think we need to develop it a little bit.
The whole key here is that we don't want inflation expectations to become unanchored. Right now, I think we're in a good place. Inflation's been coming down. Maybe it's moderating. It's not falling maybe as fast as what people would like it to, but we don't want to see it start to rise. If they cut too much and that spurs a hike in inflation, then that's going to spur potentially higher policy rates, and that's going to have very negative impacts on bond markets, on equity markets, on just financial market valuations altogether. So beyond just the blowback that they may get from Washington, if they have to get put into a position where they have to hike rates, on top of that, they're also going to be looking at a market situation potentially in equities and in bonds that might also be turning negative too. So there's a lot of things here to unpack, and effectively, I think having inflation become unanchored is a risk as well.
Steve, can you give us a little more color on the dissent? We only had one, and it was a different one from last meeting.
Yeah, it was kind of interesting to me. I thought there was two possible, maybe three possible dissents. I think the story here is Beth Hammett gave a speech not too long ago where she discussed the idea of one more rate cut between now and when she gave the speech, that is, and January. So I think she clearly had preferred doing it later, I guess getting more data, clearing more. She comes from us from Goldman Sachs, where she was in the Treasury at Goldman Sachs and helped steer that firm through the global financial crisis. So I guess there's a certain amount of conservatism when it comes to financial matters as far as she's concerned. It is interesting, Kelly, to look at the reaction in the Fed funds futures markets. For example, if you look at the December 2025 Fed funds contract, what you see is the market one-upping the Fed a little bit on hawkishness. Now, this forecast, this average forecast from the Fed, met the market where it was at before it came out. But if you look at what's happening in the 25 contract, they went a little bit more hawkish and now are raising it up towards 4% for the end of 2025. Also, you now have a 91% chance of no change at all, 91% chance of no change at all at the January meeting, and a little bit lower probability for rate cuts for both March and May. They're still 50, 60%. So the idea is skip a meeting, maybe skip two meetings, and then see where things are. I don't think the Fed fears Trump, and I don't even think it fears reversing course if there's a big a fiscal package or a big change in the fiscal policy. I think what the previous speaker just said is what the Fed is more concerned about, inflation expectations becoming unanchored. But if they have to raise rates in response to fiscal policy, I think the Fed would do it.
Stephanie, your thoughts?
Yeah, I mean, I think that's fair, but it's really soon to be starting to talk about raising rates when we're still in a cutting cycle. And by the way, if they're raising rates because of tariff policy, I would argue that's probably some sort of mistake that would lead to a recession earlier on. And realistically, if we get that type of outcome, they would probably just pause and see how things played out, in which case growth will probably slow down. The one thing we haven't talked about today is
Stephanie, just for the record, I was just really asserting that I think the Fed is independent of that pressure from the Fed. I don't think it's en route to hiking rates. I don't think that's a discussion that's on the table at the committee right now. I just want to be clear about that.
Every time, bro, she always wants to be fed and goes crazy every time at the wrong time. I don't know what it is with her. I really don't. So she was in here in my office that I had to do something with her to let her out. All right, so the SPY below the 200-day moving average, we have cracked. We are down into the sixes, you guys. We are down there. Keep an eye on yields. Keep an eye on yields. Keep an eye on Bitcoin. Let's see. Reset this chart. 30-minute. I don't think it's surprising at all either. They're talking on CNBC. So exactly what we talked about is exactly what happened. Okay? It's not surprising. See, this is what we call getting comfortable, right? And then what happens? You get backdoored. Listen, I'm all for Trump. I just want Joe and that type of politician out of there that thinks he can dictate what other people do to a certain extent and take and do whatever he wants to do, but wants to tell other people what they can and cannot do when, he needs to come with the same tone. I think the spending Trump and all them, they can cut by a small amount. We need to still spend, guys. Okay, they still need to spend. Okay, whether we like it or not. If you like making money in the markets and you like your portfolios going up, you need them to spend. You need them to spend. You need velocity. You need things to continue. These things, just they've been doing it since the start of time. Since they started doing this, this is what they do. And it's not just us. So, like, don't get it twisted. It's not just the United States kicking the can down the road. It's every country. It's what they do. So anyway, let's see what we have here. So Bitcoin is just hanging out. Bitcoin's not really doing anything. I still think that Bitcoin's going to try to put in a hot, try to pop here. I'm really curious to see what Powell says. Just give me 1 second, guys. I'm sorry. Just there's a lot going on here. So there's our 530 on the Qs. This was our support area, bottom right. Okay. So let's see here. US 10. There's our popping yields, man. I knew this was gonna happen. The fact that TLT sold off like it did, and tried to that TLT, these charts scream, we're going higher. Again, I'm looking at 4.8 on the 10s, but not soon. That's not something soon. Like maybe, February, March, April, or something like that. All right. Let's see here. Let's go 30s. All right, hold on 1 second here because... All right, that's already starting. I might go ahead. Man, that is a mean tail, guys. Look at that. Look at that tail. That is crazy. Holy shit. That's a mean tail. That's not a good... That's not something you want to see. That is not something you want to see. Okay. SPY. Nice support here. All right, you could have some nice support here. SPY. I got one more candle. Or crackle. Not one. Crackle. Candle, cracker, whatever. The SPY. 599.99. Okay. I'm looking for that zone right there at 600 flat. We're almost there. So now we have to ask ourselves, where do we go from here? Where do we go from here? Is this a temporary pullback? And in my opinion, guys, I'm going to tell you right now, I think Powell's going to come out and say we're only doing this because the labor market is still tight. We feel as though we want to save. It's kind of like you're saving money for an emergency. Instead of just eating up the rates for no reason, you're saving it until you start to get a real sense that you should start to, that like, you know, that, you need a new roof, or you need the house, or like something, right? If that makes sense. So instead of just saying, "Oh, let's just blow this money, we'll get it back," blah blah blah, save it. You might need it, right? I don't know. I don't know how else to other explain it. Then they're just saving a chunk of the rates that they could use to cut. They're waiting for a reason to, they're saving it is what they're doing. Let's say something bad happens and then they're already down in end of 2025 down to like 3.8 or in the low fours. Then what do? You don't have much more left. So if you stay right around, and I told you guys 4.5, 4 to 4.5, more likely 4.5 is your, not restrictive. I said though, I keep forgetting the damn word. Your what the hell? See, now I got her yelling. Hold on 1 second. I'm gonna let her out, and then she's not coming back. All right, sorry about that, because she will just cry and whine and yell. She yells. My cat yells at me when she wants something. So yeah, so that's that. They just, I don't blame them. I think they're doing the right thing. I think Powell and them are doing the right thing. We're going to have a few cuts. We'll bring it down a little bit, and then we'll see where we're at. We'll let some time go on. I completely agree with them. And again, because you don't want to be in a position where you're all the way down. You cut rates for no damn reason, and then something happens. And then what do? You have nothing to work with other than adding liquidity. So if I were you guys that are watching this right now, if you want to start buying something, get ready. If you want to buy a home, if you want to buy something, if you want to borrow money, pick up this chart. Your time is pretty much here. And it may not be here for long. I don't know. All right, because the only thing is we go down, right? But then what happens? Once they cut rates, they start to slowly build them back up. Okay? So if you want to borrow money or do something like that, I'd be thinking about it soon, in the next 6 months. All right, that's just my opinion. I'm not telling you what to do. All right, NVIDIA hanging out here, 134. We still have to wait for Powell here. Let's go see what TLT's doing. Let me bring up. I still want to keep rates up here. US 10Y. So yields are still just hanging out where they were. The neutral rate, that's what it was. Okay, so dude, I don't know what the fuck is going on with. Let's see what traders are trading, guys. I'm sorry for the language. I'm just trying to figure out where I want to be, and what I'm going to do is I'm going to turn this on real quick, and we'll see where and what traders are looking at. We have the press conference. We're going to have that live. Oh, okay. It's in 8 minutes anyway. It's in 8 minutes anyway.
Stocks, but at the end of the day, we just bought some 80s. It's now at 40. So like this is 60, 70 cents moving here like that, and we have
they're all
it.
just
So when I
looking
look
at
at
exactly what we're looking at right now. NVIDIA. I was really hoping they just kept it the same. I had a feeling they weren't going to. Because it didn't make sense to keep it the same. You know, I think if we start to get some unemployment numbers start to rise, GDP start to soften a little bit again. And what I think, guys, and remember me saying this, I think you're going to get a weaker Christmas number, retail sales, beige book. I think you're going to get a weaker holiday number than most people expect. And I think these companies are going to say, hey, Christmas was a little bit weaker than we expect. You're already getting them to rate their lowering guidance. Even some of your value names. Okay, General Mills today. Hey, we're lowering our guidance, and we are, you know, a company that normally doesn't do that. So I think things are going to things are getting tight for people. And it's just my opinion. From what I've seen, let's just say the past few years, you could not go to the mall in some of the areas that I'm at and around this time and think that you're just going to go in and leave. Because it ain't happening. You're going to go there, you're going to get stuck, and you're going to have to wait until about a half hour, 45 minutes till after they close before you can get the hell out. Or you can sit in your car and waste a bunch of gas and not move. And have somebody worrying about road rage because they're in a hurry and they're above everybody else. And the world revolves around them. And they just want to act like an idiot and just, you know, just work their way out. And you get your car in an accident. Or somebody hits your vehicle for no reason. And it's just like, it's not worth it. But I don't see that this year. I don't see it. I can go to the mall, I can go to these places, and I'm like, damn, I could come in and I can leave. Where's everybody at? I know y'all didn't just move, right? I know y'all didn't just, in a matter of 1 year, I know not 10-15% of the population left. I don't think that's the case. I think people are harder on funds. They don't have as much money to spend, to waste. And I think you're going to see that. And this all is what I think also is what could also help bring what the Fed's doing now get taken back in the next few quarters. I want to see what happens next quarter after they report for Christmas, and see if you start seeing the Fed lower that rate again, because they're worried that people are having a hard time. And they might start getting scared that things might start to soften too much, and recession worries start to really hit. That's what I'm saying. I told you guys last year, let's see what happens by this winter, next summer, whatever. I don't think we'll have like a major recession. So far, the Fed is winning this game. But I think it's just to the point where things are too expensive. People are pulling back on their spending. And, you know, people, you know, don't have time to spend money if they're working 2-3 jobs. You know? Look at Nike. Like, these are names. Look. They're halting the efforts to build subscription service. I think that's a good one. That turns people away. It does. Look, Apple's already down. Damn it, where's Josh at? We need Josh for this one. You know they were already on this. This is why I think whatchamacallit. Let's see what people let's look at Ricky Gutierrez.
On Christmas Day.
Gutierrez.
Tesla's beginning to sell off. There goes breaking below 472.
Let's see if
More
he knows
of an active
a thing or
sell-off,
two.
right? Lower high confirmation. So it's a textbook setup. Strong descending pattern. Lower high. Let's see if we get that leg down. Remember, Jerome Powell speaks in the next 3 minutes. Do not be greedy. We do not have confirmation that this thing is going to continue to sell off for the remainder of the day. Market sentiment can completely change based off of one word that he says that might be interpreted as, hey, he's more hawkish or more dovish than what was expected. I'm just here to remind you.
Does he ever give thoughts?
At the end of the day, you're an adult. You do whatever it is that you see to be fit. But I want to remind you why it's a very risky time to trade when he begins to speak. Okay?
Give your thoughts
How
on
much
what he's
delay
going to
is
say.
this
What
live?
do
It should be
you
a 1 to 2 second
expect?
delay. 3 seconds
What are your thoughts?
max, if I'm not mistaken.
Come on, Ricky.
All right.
All right. Anyway, I want to know what's up with this Apple. I want to see if Josh and them are on this. You know they are. This motherfucker gets the news first before everybody. I think Bloomberg gets the news through Josh.
Certain words. I'll call it out. I'm pretty much
sorry that
your
is so
guys'
loud.
Powell computer. I mean, I have my human limitations, but I've listened to a lot of Powell. So
He's got Apple up
watch
there.
during the press conference, he'll say certain things, and the algos they perk their ears up to it, and then you'll start to see some things.
Okay.
Oh shit.
I don't know what happened.
Just full degen, boys. Full degen.
Not really, bro. We're here to make money, bud. Full degen, bro. Full degen, bro. I'm just trying to be cool. Want to be a trader? Everybody want to be a trader? Let's see what this guy's doing. I don't know who this is. 35% off. Come get it. Oh, this is previously recorded. Talk to us. How much you know? What's going on, guy? Futures trader. Okay. Okay. Got my mic. Got my Xbox mic. I'm just playing.
Full degenerate.
Oh my God! What's up with this degenerate word? What? Holy shit! Holy shit! Oh my God! People are so stupid. Anyway. All right, so market doesn't like the fact that Apple is thinking about taking away their subscription. We're going to have to look more into this as it comes. But this is and could give Apple a nice pullback here. I'm going to have to look into this. I just don't have time right this second to do it. Let's bring Powell up. Here we go. Make sure, if you're watching somebody right now, that they are your best interest. They have your best interest. And, oh, shit, I got to log in, bro. They logged me out. I hope to God they did not fill me on that order. I had an order up, and I know from before that in time... Oh, my gosh, I'm worried. I'm worried. I hope to God it did not close me out and fill me on an order. I got scared. I got scared. I thought when I was going to open it up that I was going to be long 10 contracts on NVIDIA. Oh, I was just like, no. I thought I was... Because I've had this happen before where if I wait too long... Oh, man, that would have been bad. All right, let's get Powell live.
Are you dreaming of more?
No, I'm not dreaming of anything,
strength
bro.
by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing.
I'm going to listen to this, so you guys won't really hear from me.
By lowering our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures.
I think that's behind, guys. Give me 1 second.
For the
oh my gosh.
For the unemployment rate in the SEP is 4.2%, 4.3% over the next. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market while establishing further progress, enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments
Yields
to
are
our
still
policy
rising as he talks, guys.
We know that reducing policy restraint too
10-year,
fast or too much
4.45.
could hinder progress on inflation.
I'm just listening to
At the
him
same
real quick.
time, reducing policy restraint too slowly or too little could unduly weaken economic
Everything's
activity
red.
and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of
Here
risks.
we go. Let's see if they don't
We're
waste
not
their
on any
questions.
preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered
Powell's
the
got a
offering rate
cold.
on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smilik with the New York Times. Thank you for taking our questions.
I'm looking.
I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level that would hold unemployment constant.
My computer's
The job
running
finding
really
rate
slow right
is
now,
low
guys.
and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
To cut further after this point, I would say it this way. We've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious.
So far, the questions are doing better on their questions.
Cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected.
We're at support.
And is expected to be above
or what should be
our
support
expectations in September next year as
on
well.
both.
Unemployment is lower, and in the SEP
hold.
you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also
Come on,
higher.
let's get this stream trending, guys.
I'd also point out that we're closer to the neutral rate,
Share it
which is another reason to be
with
cautious
a friend.
about further moves.
Help us out here.
But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say this.
What do you mean by some people?
Some people did take a very preliminary step and start to incorporate.
What do you mean, you people?
Highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches.
I don't like this pattern.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation, September and October. As I mentioned, November is back on track. But once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still, going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, it considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding again the ways in which tariff-driven inflation can affect tariffs can affect inflation in the economy and how to think about that. So we've done a good bit of work. All of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that. That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
TLT getting smoked.
Nick Timros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9.
So excited.
That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling so far in an orderly, gradual way, but it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we've made at all. Let me explain extent.
All right, cues might start to bounce back now, guys.
The sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points, so significantly smaller. So that's the extent question, and we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests again that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go.
527.50 is the area I'm watching
just
for
would
the cues.
emphasize the uncertainty, which is It's just a function of the fact that we expect significant
driving me
policy
insane.
changes. There's nothing.
Look at the top
really
left chart.
unusual
It's
about
all
that.
the way to the left.
I think
Why?
We need to see what they are
Why?
and see what the effects they will
I shouldn't have to
We'll a
drag
much
it over
clearer
to the
picture, I
right.
think,
Thinkorswim is fucking
when
garbage.
that happens.
It's ass. I'm just gonna tell you guys that right now. It's ass. Fucking ass.
Michael McKee from Bloomberg Radio and Television. Even though
Excuse my
you've
language.
cut rates by 100 basis points this year, we haven't seen much
another one
change
all the way
in
to the
mortgages,
left.
auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be
They don't
more
care
at
about
risk
the
of a
markets. He's
slowdown
already
than
said
you
that.
anticipate?
So
We don't really
the
worry about
the risks that the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that
and
drive,
we were long the dollar.
for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%.
I'm still up.
Second and third quarters were right about at the same level.
we gotta
So
get something
the U.S.
going here.
economy is just performing very, very well, substantially better than.
That's
our
because we're
global peer
go-getters,
group.
pal.
And
It's what we
There's
do.
no reason to think a downturn is.
We getting
any
that
more
money,
likely
whether
than
you like it or
than
not.
It usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor
Marcus
market.
not
We
gonna
wanna
like
keep the
that
labor
one.
market pretty close to where it is.
He slept
We're
that
pretty
one in
close
there.
to estimates of the
That's
the
not good.
natural rate of unemployment.
Look for your continuation
job
there.
creation is a little below the level that would keep it there, but nonetheless close.
Triggers don't speak
And
my
so,
language.
That's what our policy is trying to achieve.
If I could follow up by asking
I'm
about your
still up.
formulation for beginning rate cuts, included the phrase "we need to have confidence that inflation is moving down towards our target." Given the fact that you've raised your forecast for next year, do you have confidence, or are you uncertain about the path of inflation going
These
forward?
are the
Confidence was
This
our
guy's
test
from
for
Bloomberg. He wears the
raising
cowboy
rates,
hat.
and we've made look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. You do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought 2 years ago, but it's nonetheless steadily coming down as market rents start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. A good example is financial services, which is really done off of asset prices.
No, don't die, don't die, don't die, don't die.
That's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight, but overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where
I guess you forgot
costs
about
went up,
08.
and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to, to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on, and our policy will do everything it can to assure that that is the case.
I think we got to look for a bounce back, guys. But they're really selling this thing
Colby
off.
Smith with the Financial Times. So the
He hasn't
unemployment
really
rate
said
as of
anything
November, while
surprising.
still very low,
I mean,
is
honestly.
within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. And job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So
all right,
you're right, though. And I read out some of the reasons. We do think the labor market is still
I
cooling
don't want to step
by
in front of
many
this,
measures,
guys, and try to
and
get
we're
cute.
watching
I
that
got to be
closely.
honest.
It's
It's
not
got to show
cooling
me that
in
it wants to reverse.
in a quick or in a way that really raises concerns. I think you pointed out participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market, and it's because things have just gotten a little bit better. It doesn't unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome.
522
we
on
don't
the
need
Qs.
it. We don't think. If you had a
you
situation
got a ways
where
to go on the
inflation's moving
Qs.
around by a tenth every few months, that's
You
we'd
are
have to
at
weigh that
support here
against
on the Qs.
The fact that inflation
That is your stronger
in recent
sector.
months been moving
So let's look for a
sideways
bounce
in
here.
a
You can see the
12-month
SPY
window.
bouncing too.
So we've got to weigh them both. And at this point, for a while there, we were only really mainly focused on inflation. We've now gotten to a place where the risks to the two are we think are roughly in balance, and so that's how we think about it.
Dude, I cannot stand.
Mr. Chairman, I
looks.
did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation.
Sorry, I thought the mic was off.
We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
Wonder if I could follow up and ask you how much you or the committee
are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. You know, it's just a occupational hazard is to look, oh, those high months are wrong. What about the low months? You know, we have a very low month potentially in November. You know, it's estimated by many to be in the mid-teens for core PCE. So that could
Qs
be
are just breaking levels, guys.
We try to look. We try to look at not just a couple or 3 months. We shouldn't have our position shouldn't change based on 2 or 3 months of good or bad data.
Well,
we have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think it's 12-month headlines 2.5, 12-month core is 2.8.
And we still have this gap here.
We still have some work to do, though.
With the
how
20-day.
We're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil. Thanks, Chair. Thank you, Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year.
Sounds like you just
Is
ran
the
in
committee
the
comfortable
room.
with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course, that's part of what we do, but you know, we really look carefully at is the performance of our how are we affecting the economy. So what we've seen over the course of just take the last, we've seen inflation over the market cool off quite a bit. That suggests.
Do you know what's really fun?
You guys notice how they're not showing people in the Fed meeting like they normally do? Damn, how the fuck do these people... And I don't mean to be ignorant. I'm not trying to be ignorant.
46. Next target, 519.28, 517.97.
And the we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
So, you know, we're not allowed.
Q's down 2.21% right now.
I guess I gotta go, guys. I gotta go. I wish you all well.
If you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession as inevitable a couple years ago.
Avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continuous struggles with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand. It has come down. So we look for signs like that, And that's clearly a sign of softening, further
Here we
softening.
are,
I didn't
bouncing
mention it
into
earlier, but I think you can see an ongoing gradual softening in the labor market. Again, not something we need to see to get 2% inflation. And, you know, that's part of the reason that explains why we moved ahead today with the action, with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high. Wages are at a healthy and ever more sustainable level.
Here, we're looking
wage
for
growth,
530.
and so the labor market. This is a good labor market, and you know we want to keep it that way.
Thanks.
Amira. Thank you, Amara Mokway from Bloomberg News. I just want to put a finer point on the labor market. Can you keep the labor market this way, in the strong position that you have described, without further cuts? In other words, do you still view the labor market as needing support to protect against a further cooling?
You know, we can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. You know, job creations are meaningfully positive. Wages are, you know, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So, I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals. And you know, we pay close attention to it, and it's worth noting that it is still gradually cooling, gradually and in an orderly way, and you know that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth.
Thanks so much, Chair Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now forecasting higher inflation next year. High prices are still a burden for so many households right now. Why do you think it is that inflation is proving to be more stubborn than you'd expected?
You know, it breaks down into a long answer if you want, but it just has been a little bit more stubborn. I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had to have had a deep recession and, you know, high unemployment by now. Well, that has not been the case. So, you know, the path down has actually been much better than many predicted. We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from, you know, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower than market rents are showing up more slowly in that measure than we might have thought 2 years ago. So that's part of it. I think there are other parts of the story, but you know what I think people are feeling right now is the effect of high prices, not high inflation. So we understand very well that prices went up by a great deal, and people really feel that. And it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices, and that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there, so that people are earning, you know, big real wage increases, so that their wages are going up, their compensation is going up faster than inflation year upon year upon year, and that's what will restore people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
And as we look ahead to next year, what do you see as the biggest challenge to the economy under the next administration? I feel very good about where the economy is. Honestly, I'm very optimistic about the economy, and we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Thanks, Chair Powell, for doing the questions. Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What % do you see and the committee believes, where is that neutral rate?
So I'll say a couple things. First of all, when we write, the thing we write down in the summary of economic projections is the longer run neutral rate, which is the neutral rate at a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance and we're looking at the way it's hitting the economy. And particularly, we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be, there are things that affect the economy that are lasting but not permanent. And the ones that are permanent are the ones that would be in our star. The ones that could be lasting but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance in near term. So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it. And I think we're in a good place, but I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is, because at the moment it looks big.
Yeah, I mean, honestly, there are countless models of what a neutral rate might be at any given time. There are empirical models, there are theoretical models, there are things that combine them, and they have as many different answers as you'd like. So there is no real certainty. And I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to the empirical data that are coming in and also how it's affecting the outlook. And it's not made any easier by the fact that that our policy works with long and variable lags. Nonetheless, that is the job we have, and so I think it's appropriate for us now to proceed cautiously, now that we're 100 basis points closer to neutral, and we'll do so. Meanwhile, the economy seems to be in good shape, and these cuts will certainly help to support economic activity and the labor market, while we can still make progress on inflation because policy is still meaningfully restrictive.
Victoria. Hi, Victoria Guida with Politico. I just wanted to make sure I understood what you were saying at the beginning about inflation. Are you saying that progress on core PCE counts as progress on inflation, even if headline inflation ticks up? And then also, since that's what's projected in the SEP, I was wondering, what accounts for that? Why do you all see core PCE going down and potentially headline inflation ticking up?
So, and as I imagine the goal overall is headline inflation because that's what people experience. People don't experience core inflation; they experience inflation, and that includes food and energy costs. So that's the overall goal. But as we know, headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So it's complicated, but ultimately our goal is headline, not core. So your second question was what?
Why do you all see core going down but headline potentially ticking up?
So headline can be affected, you're talking about next year.
Mm-hmm.
Yeah, so headline can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be much more driven by things like tightness in the economy. So that's why the two can go in different directions. I mean, headline has been lower, as you know, most of this year, but that's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy
So
prices?
we monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks haven't really. Nothing has come out of those risks that has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of supply conditions, global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil. But we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
Kelly. Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you said a minute ago, that wage growth is outpacing inflation now. It wasn't the case for some time, of course. It's partly why Americans haven't felt much relief in their wallets from prices yet. But with inflation ticking up, how worried are you the progress in closing that gap could go away?
Yeah, so inflation, again, we don't react to a couple of months of higher readings or a couple of months of lower readings. And what we had was we had 4 months of really nice readings, and then September and October were higher, but then November is much lower. So I don't really think the public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation, and it's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now. And we just want to hold on to it. That process will probably take some years, but that's what's going on right now. And I don't think that a couple of months of higher inflation really signal that anything of the nature you're suggesting.
And just one follow-up. Let's look more long-term. You previously predicted hitting the 2% inflation target in 2026. It's now been pushed out to 2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going?
It's not easy being the one everyone counts on to keep your operation running. That's why at Grainger, we're here for you. With
3 years out, 2 years out, you're talking about high uncertainty, very high uncertainty. We really, at that point, that's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening now. We're kind of projecting that the same kinds of things are happening. So we keep a strong labor market. Housing services inflation comes down. Goods inflation settles down, and non-market services return to their prior level. All of those things should happen over time, and those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. But you're not wrong though that it's been a bit frustrating because while we've made progress, it has been slower than we had hoped. Nonetheless, we're still on track, and I think if 2 years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Go to Nancy for the last question.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways. Appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be, we are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So, thank you very much.
That right there, arguably not the Federal Reserve's finest hour. After reducing interest rates by 25 basis points straight out of the gate in that news conference, asked an obvious question. Why do this when you're expecting inflation to remain above target? The chairman acknowledging today was a closer call, that we've cut interest rates by 100 basis points across 3 meetings. The recalibration phase is over. We're in a new phase. Things are foggier. The darker you move, more slowly. Well, this was the price reaction to that in the market. Equities slammed, down 1.5% on the S&P, on the Nasdaq down by more than 2%. The small caps, some outperformance on the small caps going into the decision, real underperformance coming out of it. The small caps down by 2.8%. In the